of enthusiasts, hundreds of industry experts, dozens of countries represented, 2 days and one asset. This is Bitcoin Asia 2026. Welcome into the live desk here from Hong Kong. I'm Grace Remington with Sean Hagan, bringing you coverage from start till close on everything Bitcoin for the next 2 days. Good morning to our friends in the East and good evening to our friends in the West and the States. Thank you so much for being with us today. We got a lot to cover for the next few days. Jam-packed schedule. Sean, how you feeling?
I'm feeling great, Grace. It's good to be here. It's good to be here with you. It's good to be here with everybody watching back home as well. How could you not be feeling good? We just had a great week in Bitcoin. The price is up and vibes are high, and it couldn't be a better time to be here in Hong Kong.
Yeah, we're going to get into that. But right now, we're watching some patrons trickle in. Already a really great crowd here at the Hong Kong Convention Center today. And if you're new to this or if you're a seasoned vet, there's really something for everyone here. You have the keynote speeches happening at the Nakamoto stage behind us. That's what you'll be watching on this stream today. More keynotes on the Genesis stage. We have the symposium hosted by Bitcoin for Corporations. Deal Day, where the future of this industry is being built. We have the open source hub, which is a little bit more technical. You can get some hands-on demos over there, and we'll have announcement from industry leaders sprinkled in throughout the day. So, hey, the Bitcoin conference breaks news as well. But you fall into that seasoned vet category. What can you give just a little summary of the experience here for anyone new to these?
Yeah, definitely a vet. I don't know about season. Maybe I haven't served enough tours yet, but the scene here is fantastic. Our Hong Kong event's always a little bit different than our flagship. Hong Kong's one of those cities where the East meets the West. But it's still very different than our Western events, right? There's a different flavor here, a different culture here that we're meeting and interfacing with. So it's always a lot of fun. It's always refreshing. I'm looking forward most to the Nakamoto stage where some of the treasury companies are going to be speaking. I think eyes are back on them recently with this price action and Bitcoin itself. So it'll be interesting to hear updates from them and what they've been building. And I'm also really kind of wanting to go check out this wonderful expo hall they've had built. There's even a mechanical bull this year. So
that's right. Ooh, yeah, we need to check that out. Maybe bring our video guy Noah to come do some features over there. Yeah, he's right. We brought a little bit of Nashville over here to Hong Kong with that. But you mentioned it off the top, the recent Bitcoin rally. So everyone here is in high spirits this week. To recap for those who are new, or maybe if you've just been living under a rock for the past week, Bitcoin saw a 23% spike in its price over the past week. It bottomed near $64,900 on July 24th, ripped to an intraday high over $81,000 on August 25th, its highest level since May. Today it sits around 78.8. But Sean, that volatility spike we saw last week was the highest in 3 years.
Yeah, so what's notable there is that's what they call a 7 Sigma event. And no, I'm not talking about Gen Z slang. Sigma refers to the volatility, and 7 is the amount of standard deviations away from its weekly norm. The previous two highs were in 2023, kind of that ETF Trump rally era, and then in 2019, kind of coming out of the pandemic. So, anytime we see a spike this big, it usually is led by a pretty convincing rally that will last several months.
Mm-hmm. And there were a few confirmed catalysts for that price jump. The Treasury Department buyback intervention was one of those, the renewed spot ETF demand and short covering, and then positive sentiment on crypto legislation following a White House meeting between Trump and industry leaders. And we might have more news to come from our government leaders. Our conference, we're in a unique spot right now. It's running live at the same time as the Fed meeting in Jackson Hole. That runs August 27th through the 29th. So we might get some more news out of there. Any type of news you're looking for to come out of that Fed meeting?
Yeah, it's going to be really interesting to see how Warsh responds to Bessent coming out and wanting to kind of have more active yield control, right? So wanting to manage that curve. Warsh has been very clear at the Fed that he doesn't want to be setting directional guidance. He wants the market to decide. And so that's very different than what the Treasury Department is saying, where they're going to take an active role in helping to kind of drive those rates. So I'm really looking to see if Warsh is going to play ball and be nice and join teams with Bessent here, or if there's going to maybe be some contention.
So we'll keep our eyes on the news cycle as we head into this conference. But I want to get into some of the conference storylines you can expect to see this weekend. One of the big themes is the Bitcoin versus AI trade. Another one, country adoption spotlights. We have some reps from India, from Australia, and obviously our host city, Hong Kong here. We're going to get into that. Institutional adoption, always a big theme. And then you mentioned it too, the maturing of treasury companies. So among all of the speakers we have today, is there someone you're looking forward to specifically, or just a message you hope people leave with?
Yeah, I think, piggybacking off of the Fed and what the Treasury are doing, there's there's a lot of eyeballs on yield right now and on debt, right? And maybe some questions about government debt and buying U.S. bonds. Well, in the meantime, the treasury companies in the Bitcoin space have been building up their preferred products, their debt products, and sort of building a Bitcoin yield curve of sorts, right? And very much so driven by the free market. So I believe Strive is one of those firms that's here with us at this event. So very much looking forward to hearing their commentary and how they're possibly thinking about that.
Yeah, Strive's here. We have Moon here. Metaplanet, obviously, one of our big sponsors. Thank you to them. But treasury companies, we'll hear from a lot of those reps today. Dung Chao is one from HashKey Capital. He's speaking on the next evolution of digital asset management. Hafiz Aguri, who just took over as the new CEO of 21 Capital. John Riggins of Moon, he has a talk entitled The Bitcoin Treasury Reckoning, from Financial Engineering to Real Businesses. So you'll hear him on this stream. Stay tuned for that. And then Stefan Livera speaking with our own David Bailey in a speech called From Self-Custody to Shareholders. So lots to look forward to. We're actually going to have Stefan Livera joining us on our pregame show in just a few minutes. But as we get a few more ticket holders here into the building, just what are you most looking forward to from this specific experience now in 2026 with the recent, I don't know if we can say we're out of the bear market. I don't know if I'm allowed to say that, but
I wouldn't go there quite yet. I think we still need to see some things for confirmation. Obviously there are some signs that are very positive at the moment, but I wouldn't say that we're confidently out of the woods yet. But that being said, I'm very excited for this event. Like I said at the start of the Open, there couldn't be a better or more exciting time for us to be having this event here in Hong Kong, given the recent price action. I'm really looking forward to John Riggins' talk. I think anytime you get a chance to listen to John Riggins, it's always an excellent informative session. So he's usually right on point with kind of the directionality of these treasury companies as well. So there's definitely this theme where investors are more skeptical after a bear market, right? It used to be sufficient to just have a treasury company where, hey, all we do is we're a very pure play. We just buy Bitcoin and hold it. But, during a drawdown, that's a lot harder of a narrative to drive and kind of get a bid. And shareholders often kind of feel disgruntled. And so, you've heard these kind of cries for, why don't you have an operating business? Maybe I rotate my capital into a firm that does. And so treasury companies are having to operate in a new environment now where they need to have a real fundamental business, not just buying Bitcoin.
Lots to look forward to, lots to learn. We're going to take a quick break, but on the other side of this, our pre-conference show continues. Stefan Livera joins us to break down some of the panels he'll be on. This is Bitcoin Asia 2026.
It started with an idea without borders, without permission, without limits. One network connecting millions through one shared belief that financial freedom should belong to everyone, everywhere. Because your Bitcoin can power what's next. And with Salt, you can tap into your Bitcoin's liquidity without ever selling. Now with rates starting at 7.5%. Salt, providing Bitcoin-backed loans for the past decade.
Every year, this community comes together to celebrate, to debate, to build what comes next. And every year, the stage gets bigger. Sound money, center stage. So, where do you go to celebrate the next chapter in Bitcoin history? You come home. Nashville, July 2027.
Welcome back into Bitcoin Asia 2026, coming to you live from Hong Kong here at the news desk. I'm Grace Remington with Sean Hagan, and now joining us on the desk, Stefan Livera, host of the Stefan Livera podcast. You are all over this conference this weekend. You're talking everywhere and about everything. But I want to start with our location, our host city, Hong Kong, obviously positioning itself as kind of the east-west convening point in the Bitcoin space. You kind of have firsthand experience on this being based in Dubai. What do you see as the differences between Bitcoin East and Bitcoin West?
Well, being honest, I think the let's say the North America and Europe scene is probably has a bit more of that the kind of ethos aspects of Bitcoin, whereas I think the stereotype in Asia is maybe there's a little bit more of a gamble focus, let's say, but certainly there are, I know, influencers and communities here who are really trying to grow Bitcoin adoption also. And of course, we've got so many big companies, obviously Metaplanet and many others who are really trying to drive Bitcoin awareness in Asia. I think we're just, we're just kind of going through these ebbs and flows. Like one thing I like to say is that the technical change precedes the social change, right? So Bitcoin exists, but actually getting people to understand what it is, why you should hold it, instead of treat it like it's just kind of a gamble or just a trade, but actually something that you should buy and hold long term. That takes time.
And where do you think treasury companies fit into that, right? Do you think people are viewing that more as hyper speculative here, or do you think they're viewing it more as a sound Bitcoin derivative?
So yeah, I mean, that's a great point. Like I think on some angles, people want that kind of amplification that's offered by some of these treasury companies, so they want it to go up higher or harder than Bitcoin does. Of course, that means it can dump harder than Bitcoin does too. But there are some people in that camp, and then on the other side of it, I guess you could argue the preferreds, like some of the perpetual preferreds, right? The Stretch, the SATA, these kinds of products can offer a different thing, and I think they all have a place. The way I see it is more demand for Bitcoin is good, and I think ultimately it's going to bring more people in to Bitcoin. Of course, don't forget, holding Bitcoin is its own thing. It's separate to holding equity or a preferred or this kind of thing. But ultimately, I believe it's going to attract more capital in because it can access, it's opening up the market in terms of where people can access some flavor of Bitcoin exposure. Even if we would like or prefer them to have direct exposure, they're at least getting something indirect.
So you're speaking on treasury companies and kind of the evolution of Bitcoin with our own David Bailey later on today. Another panel you're on is on the cold card hack. That's coming up at 12:30 local time. You can watch that right here on the stream. But what really intrigued me about that is the title. And I know you said you didn't come up with this title, but the name of your panel is What Happened and Why Bitcoin is Stronger Than Ever, which feels like a hard sell for people who lost seven figures. So how do you rectify the optimism with, the financial damage?
So, of course, sympathy and, no disrespect intended to people who've lost their coins. But I think this industry has had a lot of these custody failures. Now, some of those were centralized, right? We can name them all, Mt. Gox and FTX and Celsius and BlockFi and whatever. But I think what happens is each time some of these failures happen, we will have improvements. And it's similar to like the aviation industry that, yes, there were horrific accidents in the early days, but over time, there were improvements made to the technology and the safety and the standards that people applied. And I think we'll see a similar thing in Bitcoin custody, whether you are doing self-custody or it's at the big boy, custodian level. And so I think we will see renewed interest in things like multi-signature and, of course, renewed interest on making sure we're getting appropriate entropy in the generation of our Bitcoin private keys, the seed relating to that. And so I think these technologies, these products, these businesses will be built up around that help more people secure their coins. And I think it'll be a lesson of removing single points of failure. Now, to be fair, there'll be some people who don't want to go down that pathway because maybe that's part of the conversation or the argument is, oh, look, people used to say self-custody is easy, and this is proving now that maybe it's not that easy. So there'll be some people who go ETF or they'll go to custodial Bitcoin, and then there'll be others who really focus and want to learn more about, okay, how do I get multi-sig with multiple vendors so that way I'm secured against some of these risks of a failure in one of those devices, right? The interesting thing with multi-sig is it gives you a point of, it gives you fault tolerance. It means you can make a mistake and still not lose your coins. If you've got like a 2 of 3 multi-sig or a 3 of 5 multi-sig, it allows you options. But there's no free lunch here. There are trade-offs with all of these things. But I think longer term, I think multi-sig is probably where things are going to go for people who are securing larger amounts, right? Smaller amounts, people just do whatever.
Is there a risk? We have a few more seconds here. Is there a risk that AI can secure everything continuously, becomes the new form of false confidence?
Yes and no. Like, I think what we're starting to see now is, yes, with the cold card hack, people are speculating that the timing lined up with Kimi K3, and that was an AI model that was apparently, could have been used to do some of these attacks. We've seen various other attacks across the industry. Bolts.exchange had, a vulnerability. There are other hardware wallets that are disclosing and putting out patches and updates. So I think it's just a new reality for all of us that open source still needs a lot of AI-assisted security work. And so I think that's what we're all going to see across the industry, whether you're doing self-custody or not, or service providers. There have been hacks at various bridges and things like this, even in like crypto land. So we're going to start seeing that even in Bitcoin land too. So I think it's just going to be a new reality of AI, both for offense and then the defensive side of it will need to apply more AI also. And it's going to happen everywhere because here's the other thing. Even if you do put your coins with a custodian, you've got to trust that you don't get your account phished or taken over, and that could be AI assisted too.
Well, we have to head to the stage now, but Stefan, thanks so much for joining us, and really looking forward to hearing your panels later today. So have fun, enjoy the conference, and I'm sure we'll see you around.
Thanks for having me.
But the stage is set. Let's head over to the Nakamoto stage now for opening remarks from CEO of Bitcoin Inc., Brandon Green.
Our conference today, talking about it a little bit. I scribbled down some notes, so if you see me reading, that's me reading my notes. So what I realized is that for many Bitcoiners, Bitcoin has been the sole source of hope in the face of a world that felt overwhelmingly and increasingly broken. We're just going to work on this just a little bit. But you see, Bitcoin emerged in the aftermath of 2008. There were bank failures, bailouts, institutional distrust. Well, we may just have to go a little bit. Hey, Craig, can you help with the slides are here? Then there were the forever wars, COVID, political dysfunction, trillions of dollars that got printed out of thin air. And through all of it, Bitcoin offered one incredibly simple proposition. You can opt out of this. Ordinary people can take their power back, and maybe by opting out, they can build a better future than the world that we inherited from our parents. That sense of hope has powered all of Bitcoin's history. And I think it explains our boom and bust cycles a little bit better than sometimes we admit. We have adoption, we have belief, we have disillusionment, and then we have adoption again. But through it all, Bitcoin was fighting for legitimacy in the eyes of the majority of the world. Something strange happened in this past cycle. Number one, at the same time that Bitcoin was gaining real legitimacy in the eyes of massive institutions, another transformative technology exploded onto the scene: artificial intelligence. And AI carried with it something that Bitcoiners were accustomed to believing belonged almost exclusively to us: optimism about the future. Suddenly, millions of people were discovering another technology could radically increase the power of the individual. A single person could build things that once required a company. A student could have a tutor. A programming person could have an army of agents. A creator could operate a studio from a laptop. And a tiny team could take on problems that once required massive institutions. And it created a very strange psychological problem for Bitcoin. What happens when the world suddenly evolves? What happens to Bitcoin? What happens to Bitcoin when it's not the only source of technological hope for Bitcoiners? And what happens when Bitcoin is no longer standing alone on the pedestal of innovation, decentralization, and human empowerment? There's another tool now for these sovereign individuals, for these agency maximalists. And so the question is, what happens? I think the answer is obvious. But I think it's also an answer that our community is beginning to struggle with. So I wanted to talk about it today. The truth is that Bitcoin alone will never solve every problem humanity faces. In fact, Bitcoin empowers us to solve the problems that humanity faces, but it's not the only thing now. AI does not diminish Bitcoin's role in the future, it just contextualizes it. It gives us a clearer picture of what the sovereign individual of the future might actually look like. Someone with extraordinary computational power, abundant information, access to leverage and energy, increasing control over their communication, and a monetary network that they can transmit and store value without asking permission. That's the vision of the future. That's what Bitcoin is going to empower, but it's one piece of the architecture. It's probably the most important piece. That's why we're all here. We believe it's the most important piece, but it's not the entire picture. And so I think that accepting that has been difficult. And financially, this bear market has actually been relatively calm. It's been mild. We only went down 50% from all-time highs this time, and it makes it kind of hard to believe that the drawdown is already complete. Is it complete? Is the bear market over? I don't know. We'll talk about it. We'll talk about it during this event. But psychologically, I think this has been one of the hardest bear markets that we've had, because this time it wasn't just the price of Bitcoin that took a hit. This time, the Bitcoiner's ego also took a hit. There were memes about pivot to AI, capital invested into other things, talent moved out of the industry, attention moved away. The industry felt smaller. And for the first time in years, Bitcoin wasn't unquestionably the hottest technological story in the world. And it wasn't just because the price went down, it was also because this other phenomenon in AI took off. And some Bitcoiners reacted as though another technology becoming more important somehow made Bitcoin less important. But these two things are not in competition, AI and Bitcoin. In fact, I believe that this instance, Bitcoin remains intellectually isolated from everything. That has become an anchor around Bitcoin's adoption. And you can see this instinct with the Bitcoin 10 fork that happened earlier this year. A tiny group of Bitcoin purists became so uncomfortable with people exploring Bitcoin for the purposes beyond just savings and beyond their definition of savings that they were ultimately willing to change consensus to prevent those use cases. They literally forked themselves off of Bitcoin. Think about the irony of that. In order to keep Bitcoin unchanging, they had to change Bitcoin. Because what actually needed to remain unchanged wasn't the code, it wasn't the consensus rules, it was something more abstract. It was the idea and the definition of what Bitcoin was supposed to be. That's what they needed not to change. Bitcoin had to be the same thing, pure, simple, separate from the rest of the world. A pristine monetary object sitting behind glass, something to accumulate, to admire, to protect, but never to touch. But the honey badger of money does not care what these people think about it, what it's supposed to be. Bitcoin keeps moving. And increasingly, its next chapter, it will refuse to sit neatly inside the stories that we've told ourselves about its first few chapters. Bitcoin was supposed to be protection from the money printers, but now governments hold it as a strategic reserve asset. Bitcoin was supposed to be a middle finger to Wall Street. Now it's the most successful product in Wall Street's history. Bitcoin was supposed to exist outside of corporatism. Now publicly traded companies around the world are competing to accumulate it. And Bitcoin was supposed to be a technology that weakened the machinery of geopolitical conflict. And yet this year, when the US, with its SBR, bombed Iran, the Bitcoin price tanked and gold skyrocketed. And meanwhile, Iran started charging Bitcoin for the tolls in the Strait of Hormuz. So what we're seeing now is a much stranger, a much more complicated version of Bitcoin's story than its previous Bitcoin talk forums, existence. But this is what adoption looks like. Because while Bitcoin's childhood was defined by separation from the broken world, Bitcoin's adulthood will be defined by its integration into it. And adulthood is complicated. For years, Bitcoin would remain ideologically pristine because almost no one used it. Now it's much harder to remain pristine. Governments own it, banks custody it, corporations finance themselves around it, billions of people can access it, and now even machines can transact with machines, and agents can begin controlling their own capital with Bitcoin too. Success means that Bitcoin is colliding with the messy reality of civilization, and I think that that's a good thing. Bitcoin is becoming more complicated, and it doesn't make it weaker, it makes it more interesting. So this is why it matters. This is why it matters. Bitcoin acquiring new users and new use cases doesn't diminish its monetary properties. It means more people want block space. It means our vision of the future was incomplete. And so that's an exciting realization, because it frees us from having to believe that Bitcoin must somehow carry the entire future of civilization on its shoulders. It doesn't, at least not alone. We're allowed to be excited about these new technologies that are emerging: intelligence, robotics, space, biotechnology, whatever comes next. And as Bitcoiners, we should be, because the objective was never to build a world in which Bitcoin wins and everything else loses. The objective was to build a world in which humanity wins. And so maybe it's fitting that we're having this conversation today in the year of the fire horse here in Hong Kong. The fire horse only comes around every 60 years. And for the macro guys in the room, the fire horse also usually means a time of economic trouble, we'll call it. Maybe this bear market was just the fire horse keeping us on our toes. And I don't know if the Chinese zodiac is a good Bitcoin price indicator, but it can't be worse than stock to flow. So we'll give it a go. But the fire horse is also associated with independence, intensity, speed, and a refusal to be constrained. It's also associated with volatility, unpredictability, and transformation. So I can think of no better symbol for Bitcoin right now. Because if there's one thing that this past year and this past cycle has taught us, it's that Bitcoin was never meant to sit still. It was meant to run. That's why standing here today, somewhere around what feels like maybe the end of this bear market, or at least the beginning of the end of the bear market, I find myself more excited about Bitcoin than I have been in years, because we are charging forward. We are going to build the best chapters of Bitcoin's story yet. And they lie ahead of us for the same reason that I believe humanity's best chapters lie ahead of us. Our capacity to build and create has never been better. Bitcoin will be woven into the future, an open ledger and a value system shared across individuals, corporations, countries, and even maybe clankers. And it's growing up. It's finding its place in the infrastructure of civilization. Over the next 2 days, we get to explore a piece of that future together. The Bitcoin story is just getting started. Welcome to Bitcoin Asia. So without further ado, I have the great honor of kicking off our first session today, and I am pleased to introduce the Honorable Johnny Ng. Ladies and gentlemen, Johnny Ng. Thank you.
Good morning, everyone, ladies and gentlemen, Bitcoin investor or Web3 builders. Welcome to Hong Kong. It is my absolute honor to welcome you to Bitcoin Asia 2026. As I remember, this is the third time happening in Hong Kong, which is the single largest fintech event in the world. A few years ago, I attended the events in Miami. I can see over 50,000 attendees to the event. And last year, according to records, there's around 30,000 foreigners come to Hong Kong to attend the event last year. It's a really huge event, so I'm really happy here to address you this morning. This premier global event gathering result returns to Hong Kong, our city, is a very powerful witness to a solid reality. Hong Kong stands as an undisputed premier hub for Bitcoin and Web3 ecosystem in Asia. Just recently, the crypto markets once again demonstrate this incredible resilience. After navigating a lower bound of around $57,000, now the Bitcoins made the incredible rebound, welcome back to nearly $80,000. This momentum reminds us that true values always wins over short-term volatilities. Here in Hong Kong, our greatest strength lies in our enduring stability and unique institutional designed. Under the unique framework of one country, two systems, Hong Kong enjoys the best of the worlds. We maintain our distinct common law system, a freely convertible currency, and the seamless, unrestricted flow of capital. This framework makes Hong Kong the ultimate super connector and super accelerator, a secure, highly regulated gateway linking mainland China's enormous economy network with global markets. This institutional excellence is backed by concrete, undesirable numbers. According to the recent research by Boston Consulting Group, Hong Kong has officially overtaken Switzerland to become the world's largest cross-border and offshore wealth management center, managing over around $3 trillion in offshore assets. Furthermore, our total assets under management is around 20% to a record-breaking $5.5 trillion. What is even more remarkable is that over 54% of these capitals come from international investors outside of mainland China and Hong Kong. When you build your Web3 enterprise or deploy your digital asset funds here, you are popping into the deepest pool of compliance, liquidity, and professional wealth management in the world. My friends, Hong Kong scoring Web3 ecosystem did not happen overnight. It is the result of deliverables phased policy evolutions. When we published the policy statement on development of virtual assets in late 2022, many onlookers wonders if we were just tracing a trend. But we proved them wrong with Hong Kong speed. We pioneered the launch of Bitcoin spot ETFs in Asia and established a world-class VATP virtual assets trading platforms, licensing regimes to institutionalize tradings. We choose the harder but correct path of balancing the compliance with bold innovations. However, to build a truly robust financial architecture, we cannot leave any regulatory loopholes. The industry cannot survive in a Wild West. That's why, as a legislator and lawmaker, I am actively collaborating with our regulatory bodies to enter the next phase of Web3 governance. The formal legislations of over-the-counter, OTC, crypto exchange, virtual assets advisory services, and digital custodians. For too long, the physical OTC exchange terminals and unregulated broker have operating in a gray area. You can see this over 200 retail shops all around in Hong Kong, like MOT, Tsim Sha Tsui, Mong Kok. You can see many around, which is establishing risk to both retail investor and market integrities. Through these upcoming OTC legislations, we aim to bridge and bring this fears to crypto's gateway under a regulated operators and investment advisory firms and institutional custodians. Hong Kong will become one of the very few jurisdictions worldwide that offers total end-to-end regulatory clarities, from institutional spot ETFs down to street-level retail exchange. We are not suppressing the market. We are building the compliance infrastructure required for the next multi-trillion dollars wave of institutional adoption. As we know that there's a lot of family funds, insurance institutions, they all allocate resources like the cryptos assets like Bitcoin or other crypto assets into their portfolios for the risk balancing, which is the world trend, including Hong Kong. We are all, we framework our legal system and law to make sure it can happen in a way which with speed but safe, which is really important, which Hong Kong believe. But we must think bigger. Crypto and Bitcoin is borderless. It cannot be contained by any single city or economy or country. That's all we know in U.S. that the Clarity Act hopefully will be happens next month. We hope so. But in Asia, lots of single countries are developing and doing some regulations in the borders. If we want to secure Asia's leading voice in the global Web3 narrative, we must replace the fragment competitions with regional collaborations. To turn this vision into reality, I recently joined hands with my esteemed colleagues from the South Korea National Embassy, Representative, the legal lawmaker, Mr. Min, to officially launching the Hong Kong South Korea Web3 Policy Advocate Alliance. This marks Asia's first cross-regionals inter-parliament platforms for civil and policy cooperations in Web3. Our alliance is highly practical. We are actively working together to align digital assets regulations, harmonize stablecoins framework, secure cross-border data flows, and connect blockchain infrastructure between Hong Kong and Seoul. This alliance is just beginning. Our strategic goal is to extend this blueprint across the rest of Asia. We want to invite progressive leaders and innovators from the Middle East, Southeast Asia, and Middle Asia to join this united network. By aligning our regulatory standards and linking our liquidity pools, we will unleash massive regional synergies, empower cross-border R&D, and accelerate real-world blockchain application across the entire continentals. And also, not only the cryptocurrency or the markets, we will embody the AI together. As all we know that the money flow to AI a lot, the infrastructure, the memories, the GPU, and you know, Korea is one of the pioneers developing the AI hardware infrastructure. Hong Kong is also discovering many ways to invest in this huge market, but not alone AI. We have to connect together the AI model token together with what we are talking about, the tokenizations of our Web fees. I believe that Bitcoin is one of the very good synergies. As remember last year, we have the layer 2 infrastructure. A lot of innovators are thinking about how Bitcoin technologies can be uplifted to embed all AI infrastructure together to attract more funds and more innovative developers together in our domains. Finally, my friends, Hong Kong is not just about serious business, laws, and alliance. It is also a city of unmatched, beautiful culture and lifestyles. While you are here for the incredible conference for 2 days, right? 2 days and tomorrow's, I believe some of you have arrived Hong Kong a few days ago or stayed more days in Hong Kong. I warmly encourage you to take some time to explore everything our home Hong Kong, which offers. Go out and enjoy the really beautiful views of our world-class famous Victoria Harbour, and take a ride to look at our impressive mountain landscape. Even though today is heavily rain, I think afternoon, maybe tomorrow is a good weather. Hong Kong is also a true food paradise. We are home to have a huge number of world-class Michelin-starred restaurants waiting for you to explore. And here is lead to insider tips from a lawmaker. Hong Kong has absolutely zero wine tax. Okay, no tax for white wine. So please make sure you to unwind, celebrate your breakthroughs, and enjoy a few more glasses of best wine of the town during your stay in Hong Kong with us. The capital is here, the framework is here, the best lifestyles are here. Thank you very much. Have an extraordinary summit and enjoy your stay in Hong Kong. Thank you.
Welcome back into the live news desk at Bitcoin Asia 2026. I'm Grace Remington with Sean Hagan, and now joining us on the desk, Hunter Albright, Chief Revenue Officer of Salt Lending. So great to see you.
It's great to be here.
We just heard from Johnny NG, one of Hong Kong's most vocal pro-crypto legislators. He says Hong Kong is the undisputed hub for Bitcoin in Asia. Just as you walk around today, as we get this conference started, what does it mean to have such a big presence here in Hong Kong for Bitcoin?
I think it's fantastic. So this is the second year for coming back, and it's been wonderful to see the growth and the interest of Bitcoin in the market, and also the evolving perspective of how it can be used. I mean, Asia Pacific has really been, I would say, trading has been a focus on how to think about Bitcoin as an asset for day trading, for growing wealth more in the short term. A lot of the conversations we're having is thinking about reframing that, how to think about Bitcoin as an asset really to build wealth over a longer period of time. And I think that is, as I've had conversations with individuals, there's been a lot that's come out and similar with what's happening in the U.S. in terms of average age of first-time home ownership is higher, is over 40. And so they face some of the same challenges about how to get into assets that can help them build wealth, and from businesses, how they can build more financial resiliency and flexibility.
So you've been to multiple of our events, Hunter, all around the world. Do you think the U.S. is leading the path in terms of building products around Bitcoin and kind of the financialization of Bitcoin?
I do think sort of the institutional market is developing in the U.S. more rapidly than a lot of other places in terms of the sophistication of the products that are becoming available. But what I'd say is over 2026 in particular, we've seen a lot more rapid regulatory growth and improvements globally. A lot is happening here in Asia Pacific. A lot's been happening in South America. Europe is making progress as well. And so I've been going around saying this has been the bullish bear market I've ever been a part of. And part of it is all the building that's been happening behind the scenes in terms of getting the capital stack, the products that are available in the ecosystem built out to allow people more points of entry in terms of how they get access to Bitcoin.
You just said this is the most bullish bear market we've ever had, or at least it feels that way. I'm curious, how is Bitcoin-backed lending volume looking right now?
So when you're in a bear market, it definitely suppresses growth overall. But what's interesting about it is people still service their loans. They are long-term holders. They want to keep access to their collateral. One of the things that we've continuing to been innovative with at Salt is really downside protection. How to help people keep their loans even when price drops, so that they have access to the upside exposure when the markets rebound.
And what do you think are best practices that people need to think about, right? A lot of Bitcoiners, hear the word leverage or they hear the word debt, and maybe they come from the Ramsey school of thought where that's always bad, right? What do you think is a useful framework for Bitcoiners to take when they're thinking about putting their Bitcoin to work for them?
So I've spent my career really in unsecured lending. And so when I talk to people about Bitcoin, it is secured lending, right? You have put in the work to acquire the asset that has value, and I think most of the people in Bitcoin believe it has greater value in the future than it does now. So you don't want to lose that exposure, but also you want to be able to have access to it. So I think if we look back at the ultra wealthy, the biggest corporations, the thing that they have done to build their wealth is be able to leverage assets to generate income, to generate additional investment without the tax implications. And so especially in the US. And that, I think, is the opportunity for a lot of Bitcoin holders is say, hey, I have this asset, it has value. How do I think about accessing that value without giving up ownership?
All right, Hunter Albright, Chief Revenue Officer of Salt Lending, joining us on the desk right now. We're going to get more insights from you in just a minute, but right now let's go back to the Nakamoto stage.
Oh, that's interesting. Okay, so last one. Who would have rather borrowed against it to access liquidity? Right. So that's what this whole talk is going to be about. I'm Omer Hassan, the co-founder and Hi. Okay, thank you, Jeremy. So quick show of hands. Who here holds Bitcoin? Please raise them up high. Keep them up for a second. And who holds the Bitcoin for an institution, a company, a treasury, or a fund?
Yeah, I just want to check in. Do you want to go by?
All right. And now, who has ever sold some, not because they actually wanted to, but because you needed the cash? Oh, that's interesting. Back credit, or just credit against major digital assets, have the same framework working behind it. So, traditional credit is a solved problem today. Fixed rate, known payment dates, a counterparty that you choose, collateral that only moves if you stop paying. Roughly $140 trillion runs on that exact system. And now on-chain lending took a pretty different path, and on purpose. It was built for instant access and instant liquidity. Anyone in, anyone out, at any time. Now that's real innovation, right? And the teams behind it really do deserve credit, pun of course intended. But a system built for liquidity has to protect the pool of where that liquidity is. So rates are floating, positions are shared, solvency is enforced by price, and most importantly for crypto, automatically, right? And that's exactly what you need for margin finance. But it was never meant to feel like a mortgage. Now, so here's the real difference that matters. In a pooled market, which is pretty much all of on-chain lending and credit at the moment, price is the enforcer. The price goes down, the collateral gets sold automatically. Whether it's 3 a.m. or whether you're enjoying a Michelin star meal in Hong Kong, it doesn't really care. So even if you've made every single payment on time, you're still going to be liquidated. So on Pogon, payments are the enforcer. Make your payments, keep your Bitcoin. Miss them, and the default happens the way it has in the bond market for centuries. So how does Pogon really work? It works in 4 steps. A lender sets up a credit desk or creates a loan offer, sets the terms, the amount, the interest rate, the duration, the collateral ratios, and of course, the most important part, the number of missed payments it allows. Now, the borrower posts the Bitcoin, which is mirrored into the market. More on that in a second. The loan runs on a fixed term and a fixed rate. The collateral enforces exactly what both sides have agreed to. If you repay, the Bitcoin stays with you. If you stop paying, a default occurs in the traditional way. So this isn't liquidation per se. It's the opportunity for the lender to seize the collateral, and importantly, they don't have to. They can actually call you and say, hey, make the payment, right? And each loan is a tradable claim. It's not a share within a pool, so it's not fungible. And that kind of eliminates this liquidation cascading risk. So, enough theory. Here's what happened on October 10th when the price of Bitcoin dropped. Excuse the ominous music. All right, so here, what we can see, sorry, I'm getting a bit stuck here, but anyway, it was around 40 billion was liquidated in time, and that is an enormous amount in leveraged positions that were basically destroyed, right? And that was 1.6 million accounts affected. Now, these were leveraged positions, and this is a big problem that we have constantly in crypto credit at the moment. And there's several reasons for this, right? So I earlier told you about how the mirror is creating the position for the Bitcoin to exist in the credit market. So how does this really work? We won't get into the technical intricacies here, but until now, Bitcoin in credit has meant a compromise. You hand over your token to someone else's balance sheet, wrap Bitcoin is handing over the custody. Tri-party setups are, like with OTC desks, are custodial. So your CFO is not really going to sign up to that, right? That's why DeFi gets this bad sort of a rap. It's impractical for the average person and the average company to really understand and go through all of the processes of topping up your balance and doing all of these other things. The risk curves and the learning curves are just too steep. So we built the Bitcoin mirror so that you don't have to do that anymore. Think of the deed of your house. When you have a mortgage, the house doesn't actually move into the bank's vault. The deed carries the obligation, and the house stays yours. So this is the same idea. The Bitcoin stays on Bitcoin. A mirror UTXO of that Bitcoin is represented in the credit market and creates the obligations. So when the loan ends, your Bitcoin comes back. And here's why this is possible now. The mirror is a BitVM-based system. BitVM has been around for a while as an academic exercise, but the problem was really cost. Verification was so expensive that production-grade anything was out of reach. We brought it down from $14,000 to $36, and that's just the start. The proof of concept is public. It's on our X. Go check it out after this talk. So, and this is all happening right now. Bitcoin-backed credit is forming as an asset class, and we're building the loan book before launch. Our founding cohort of borrowers have already indicated $500 million in demand, and on the lender side, regulated institutions have indicated up to $1 billion. And both numbers keep climbing as we get closer to launch. So, institutions, come talk to us about the founding cohort. It goes live in Q1. And for everyone else, the retail waitlist opens today at Pogon.io. We aim to launch that site around the middle of next year, and honestly, how fast depends on you. Put your indication on the waitlist, and we can expedite that. If you hold Bitcoin and you want liquidity without selling, this is pretty much built for you. If you allocate stablecoins and want to lend to the terms you set, to counterparties you choose, with the risk that you can price, this is also built for you. Old finance got credit right. On-chain credit got transparency and access right. Pogon's trying to get both right. So we're dubbing this capital without compromise. Feel free to find me after. Thank you.
Everyone has an opinion. We want evidence.
No hype, no echo chamber.
Just better questions.
And better answers from the biggest names in Bitcoin.
This is BMTV. I'm Grace Remington.
And I'm Sean Hagan.
Bringing you market insights you can't find anywhere else. We'll see you weekday mornings at 9:30 Eastern on Bitcoin Magazine TV.
Welcome back into the live news desk at Bitcoin Asia 2026. I'm Grace Remington with Sean Hagan and Hunter Albright joining us on the desk, Chief Revenue Officer of Salt Lending. Well, we're coming into this segment fresh off a promo for BMTV launching September 14th. Super excited to co-host that show with Sean every day, 9:30 Eastern time, Monday through Friday. And we're really trying to put a product out there that's never been done before and kind of educate people on how Bitcoin relates to macro markets, TradFi, geopolitics. We're really happy to have you and Salt Lending as a sponsor on the show, and I'm sure we'll have you on plenty of time. But just going off of that, what do you think the future of the Bitcoin message looks like? Because you've been in this space for a long time, so you've seen several different iterations of Bitcoin. What do you think the message needs to look like now as this ideology develops?
Yeah, first of all, I mean, BTC Inc. and sort of BTC, sort of the Bitcoin Magazine has been great partners, and we're very enthusiastic and looking forward to the launch of BMTV. And I think it really plays a pivotal role in the maturing of the industry. I think there's still a lot more education that needs to take place, that people understand Bitcoin as an asset class as opposed to something that you can just trade or make a sort of quick buck with. And I think that framing and helping people understand the foundational beliefs of it, the technology behind it, but really sort of the opportunity for it to be a solution for a lot of challenges that are being faced globally.
And Hunter, you used the word education there. I know that you have a background in education. I know you currently teach at a business school, and I know that at University of Colorado, I believe, you used to teach a course on Bitcoin.
Yeah, so I have spent my career for the most part in traditional finance, really running unsecured lending portfolios globally. And as part of that, right, I've seen what works and what doesn't work in the existing system. And so I got my PhD back in the day, and I've always loved teaching. And so in Colorado, I teach in the business school at the University of Colorado, and was fortunate enough to be asked to teach the first blockchain and Bitcoin course starting in 2017. And that really got me more involved in the Bitcoin community and the crypto community more broadly, and which has narrowed into being much more Bitcoin focused as I've gone through it.
Hunter Albright of Salt Lending, thanks so much for joining us. Always great to hear from you, and I'm sure we'll see you in the coming months on our show.
It's been a pleasure.
Yeah,
look forward
and
to
you're
it.
speaking on a few panels today or this weekend, so we'll look forward to hearing those as well. But enjoy your time here. Let's go back to the Nakamoto stage now to hear from Alexander Mann, partner at Fulgur Ventures.
Infrastructure in Asia.
Awesome.
The second point is to announce the launch of an accelerator with our good partners at ARC in Sri Lanka. So if anybody's interested in building a Bitcoin company, then we'd love to see you in Sri Lanka for a program where we help guide you through the process of building a Bitcoin company. And the third, we're trying something new this year, which is a request for startups. So we want to try and highlight some of the opportunities available in the Bitcoin space for anybody who's interested in building on Bitcoin, and to try and sort of open source the way we think about building on the infrastructure. Okay, so this might be useful for people who are looking to build in Bitcoin, just to offer our framework as to how we think about it. So this is a little bit simple, but we'll build on it. So Bitcoin is two things. It's an asset and a monetary protocol. Bitcoin, that asset, is what you buy from your exchange, limited in supply to 21 million, the ultimate store of value, as you guys all know. And it's what individuals or companies put on their balance sheet to try and preserve their purchasing power over time. Bitcoin's also a monetary protocol. So if you want to move money across the planet at the speed of light with no permissions and for very low fees, then that's what you use when you use the monetary protocol. Now, it's also useful to think of who the end user is. And a very simple way of thinking about it is the end user could be an individual, it could be an institution, or it could be a nation state. And the product of the individual, the institution, the nation state, with the asset and the monetary protocol, helps you think about what sort of application you should try and build. And the point I want to make here is that the application service for Bitcoin is wide open, globally, but specifically in Asia as well. For example, the way you buy Bitcoin, the way I buy Bitcoin, is very different from the way an institution buys Bitcoin. It's very different from the way the government of El Salvador buys Bitcoin. All three entities also then have requirements to custody that Bitcoin, maybe to incorporate it into new types of financial contracts. Bitcoin, the monetary protocol as well, is different depending on the end user context. An AI agent probably is not using the blockchain to move a fraction of a cent, but it might want to use the Lightning Network. A nation state needs to move $1 billion to settle a trade deficit. They're not going to use the Lightning Network, they're probably going to use the blockchain. So it's instructive to think of who the end user is and how that applies to the asset or the monetary protocol itself. And for anybody who's thinking about building a company, I think Bitcoin represents an amazing asymmetric opportunity right now, for a few reasons. Bitcoin is humanity's most important tool. Society does not work without money, and Bitcoin is the apex money we've yet to devise. The second is that the technology completely exists. There are not really technological hurdles to build interesting, valuable applications in Bitcoin anymore. The hurdles are really commercial. It's, can you solve distribution? Can you solve brand? Can you solve getting the right regulatory licenses in whatever country you're operating in? Third is that Asia actually has the opportunity to leapfrog a lot of the antiquated back-end financial services technologies that people in the West are using. Here, you can sort of skip that and go straight to Bitcoin. And the fourth is that the field is completely empty. A lot of venture activity, a lot of people building in the space have focused on crypto and the launching of tokens rather than building on top of Bitcoin itself. And if you are thinking about building on top of Bitcoin, a couple of principles worth bearing in mind, that what we're looking for specifically, and venture funds who focus on Bitcoin are looking for, is no tokens. Tokens are purely a crypto phenomenon. Whatever you're building should be aligned with Bitcoin's success. We don't need new blockchains. The principle of unilateral exit from whatever you're doing must be respected, and nothing trivial. So it's an opportunity to build really meaningful stuff in the Bitcoin space, and I'll highlight a couple of examples in a second. The other misconception it's worth challenging is that there's a perception that you can't build interesting stuff on Bitcoin because it's not programmable enough. That's actually not true. Pretty much whatever you want to build on top of Bitcoin, or whatever you want to build generally, if it touches the financial sphere, can be done on top of Bitcoin. Over the last few years, there's been a huge amount of work and effort in Bitcoin L2 protocols. So you have the Lightning Network, Liquid, Arc, Spark, eCash. All of this offers incredible functionality that's not being used at all right now. I'll give you a couple of examples. If you want to issue stablecoins, for whatever reason, that can be done on top of Bitcoin, on Liquid or the Spark protocol. If you want to do real-world asset tokenization, which is obviously a big theme, that can be done on top of the Liquid protocol. So pretty much whatever you want to build can be architected on top of Bitcoin, and there are very few people doing that, so it's a worthwhile pursuit. And I want to give you a specific example. And this example is interesting because it's so simple, and it indicates just how early we are in Bitcoin. So if you agree, and presumably you do, that Bitcoin should be the primary savings asset, or not even primary, secondary or tertiary savings asset for individuals and institutions across every single market, then presumably a Bitcoin-specific financial services app should exist in every single market across Asia. And actually what we have in Asia is mostly crypto casinos. So it'll be the large exchanges which sell Bitcoin, but they also sell a variety of other crypto assets. And the problem with that is that their business model is to sell Bitcoin and then to sell meme coin 450 in order to make the trading fees. What we need are high-integrity, Bitcoin-only specific applications in every single market across Asia. And that is a huge opportunity. What it would look like differs depending on if the end user is the individual or an institution. Both end users have slightly different requirements. An end user probably just wants a way to quickly, easily, cheaply stack sats on a regular basis. And note, if you can acquire, say, 10 to 20,000 users in a country in Asia with a population of 100 million, you've probably built a $20 to $30 million business. So this is a huge opportunity, and nobody is doing it in the variety of markets across Asia. The key things to solve, as I mentioned before, are not technological. The technology to spin this stuff up is actually relatively trivial, and it's quite quick. What you need to solve is brand, distribution, so figuring out how to acquire customers, and licensing. So you have to you have to deal with local regulators and make sure they're on side and you're fully compliant with whatever the restrictions in your local market are. You solve those three things, you acquire some customers, you've actually built the genesis of a Bitcoin bank. You can then begin to layer on other types of Bitcoin financial products. So even this very basic infrastructure doesn't exist in Asia and in most Asian countries, but there are successful precedents in the West, so we know it exists. And this is the sort of stuff that we'd like to see and we'd like to fund. Fulgur generally doesn't just invest in Asia, we invest globally. And depending on what market you're in, there are huge numbers of opportunities. If you go on to our website, fulgur.ventures, we have a full request for startups tab, and you can see all the sorts of businesses that we think are viable and we'd love to see built. If you have any ideas, you're welcome to come and talk to us anytime or just reach out through the website. So final thing is that we'd love to see people building on top of Bitcoin. If you're interested, go to fulgur.ventures, have a look at the request for startups. If anything you feel is interesting, feel free to apply through the website or just come and find us and talk to us. We're open to pretty much anything that moves the needle for Bitcoin. That's our sole objective. And we are also launching an accelerator in Sri Lanka alongside our partners at ARC. If you'd like to come and work with us there for a period of however long you want. We're taking applications now. You can start on the 1st of October. And if you're really serious about building on top of Bitcoin, that could be a great opportunity as well. Thank you very much.
It started with an idea without borders, without permission, without limits. One network connecting millions through one shared belief that financial freedom should belong to everyone, everywhere. Because your Bitcoin can power what's next. And with Salt, you can tap into your Bitcoin's liquidity without ever selling. Now with rates starting at 7.5%. Salt, providing Bitcoin-backed loans for the past decade.
All right, welcome back to the Bitcoin Magazine News Desk. I'm Sean Hagan. I'm here with Matt Crosby and Maurizio, both well-known Bitcoin analysts and speculators, dubious speculators, some may say, myself included. Gentlemen, the jury's out on if we've bottomed. What are your thoughts on this?
Maurizio, after you.
I'll go first. I'll break the ice. I think it doesn't really matter. Psychological angle, but I think so. I think we've seen the worst part, but it's going to be bumpy until the end of the year, perhaps, because many people believe in the Fourier cycles. I call them cyclists. So the cyclists are going to find out that the bike has been stolen because they think the Fourier cycles are not really a thing. So yeah, I think we did bottom, but it's going to be choppy.
Yeah, I would say it's rare to see this type of bullish move off of a long period of chopping and consolidating around a 50+% retracement without it being the bottom. I mean, if you look at 2018-19, within that first 100 days of moving off of that $3,000-$4,000 range, we were close to $14,000. If you look at 2022, we were chopping around $16,000-$17,000. Within 100 days, we're at $30K. Same for the previous bear market, and moving near $20,000 in such a short space of time above key resistance levels, aligning with macroeconomic factors turning a little bit more bullish, and that genuine feeling of capitulation and disbelief from people, almost assured that Bitcoin was going to visit 50K, 40K, 30K, whatever it may be. It's just ticking all the boxes to say, people are sidelined and the path of least resistance is to the upside.
Now, you both mentioned chopping sideways, and Matt, your analysis there, talking about previous cycles. 100 days is a lot of time, right? So that's a lot of time for us to potentially chop, move around, before perhaps continuing a trend to the upside. Now, you both are of the opinion that our true bottom is in, but many people will hear that and think that what we're saying is perhaps it's now up-only time. Do you think that that's the case? Do you expect us to kind of revisit what we used to be kind of prior resistant, maybe visit that as support, or what's your read on the next couple days to weeks?
So I think capitulations are made up of two separate parts. Everyone focuses on the price-based capitulation. This big violent move to the downside, the big red candles taken as 50, 60, 70% down. But there's also the time-based capitulation, which is just genuinely boring people out of the market. I mean, let's be honest, over the past few months, seeing Bitcoin just between $60,000 to $64,000, it's felt endless of just boring people out of the market. And I don't know if we've necessarily ticked that box yet of generally just seeing Bitcoin bore people around. And yeah, I don't think it's going to be, we're rocketing up to six-figure territory, in the next couple of weeks. But I think this move has at least set the tone that the time-based capitulation is probably mostly over. I think the price-based capitulation is now behind us. But yeah, I still think there's going to be some time chopping around these resistance levels above us, that 1 year, 50-week moving average. And once we kind of get above that, I think people are really going to start to realize, the worst is behind us.
Yeah, I agree. I think either way, when you're in a bear market or a bull market, price is going to move up and down, and the market is going to punish most of the participants, and timing the market is really tricky business. So I think having a presence throughout the whole market is much better with a DCA approach as opposed to trying to catch this bottom. But we will see probably more pain ahead in both sides.
And do you think that this cycle is poised to be similar to the last cycle? Or, I've seen a lot of analysts coming in and saying it might be a more explosive cycle previous to maybe 19 or 21.
Well, history rhymes, right? They say it doesn't repeat, but I think data samples are way too small. Like, we only have a few cycles saying things like, this happens in 2013, ever since, it's just too small of a data sample. So I think every time is kind of different in a way, and it could be, we have not seen a major top coming in. 126 wasn't, like Benjamin Cohen says, it was apathy, right? So I think we will see, I guess, a much smaller correction on the downside.
Absolutely. And thank you both for your time. We're now going to cut away to the Nakamoto stage.
Good morning, everyone. It feels so great to come back to Bitcoin Asia. Let me start by a story. In September 2015, when Vitalik just turned 21, and when Bitcoin price was about $250, HashCase chairman Dr. Xiao Feng decided to invest in Ethereum. I have been very fortunate to be part of the investment team since then. How time flies. 11 years has passed. And today, Bitcoin trades at 78,000 US dollars. But when I look back over the 11 years, I think the biggest change is actually not the Bitcoin price. It is who is sitting in the room. 11 years ago, where's my slide? About 11 years ago, this industry is all about developers, miners, holders, or believers. Today, look around, more institutions, banks, asset managers, institutions, and even regulators are here. So I want to talk about what happens after crypto becomes institutional. Crypto started as a new asset class, but it may end up helping us build a new financial system. I hope to talk about history through products. In the first stage, we invest in tokens, protocols. So our question is always, what will be the next successful protocol? And then we came with liquid markets. The question is, how do we trade and manage risk at scale? And then came institutions with the products like ETFs, index funds, structured products, treasury solutions. So the question becomes, how do we turn these assets into institutional grade products? And this may sound small, but I think it's very profound. Let's take ETF as an example. After 31 months of launch, the US ETF's AUM is now still $84 billion US. It was 175 billion at its peak. And you look at the institutions, there are over 2,000 of them participating in this institutionalized product. So the lesson I find more interesting is Bitcoin probably may not need another blockchain to unlock that capital. It needs a new wrapper, and ETF is the wrapper. And sometimes product design may unlock more value than protocol design. Currently, we're seeing some big shifts, mostly 3 of them, 24/7, on-chain, and global. Let me explain them one by one. First, 24/7, crypto proves something that may sound crazy. 10 years ago, that is a financial market that never sleeps. And now, both regulators and industry leaders are moving towards the same direction. NASDAQ, CME, New York Stock Exchange, London Stock Exchange, they're all extending their trading hours. So perhaps the future is not a crypto learning to operate on banking hours. It might be banking learning to operate on crypto time. Second, on-chain. Today, our security travels through siloed venues, like brokers, exchange, clearinghouse, custodian, before it can be settled. But looking forward, ownership, transaction, settlement can increase live on the same programmable infrastructure. And that is why I think tokenization is often misunderstood. Tokenization is a new financial wrapper. Let's look at a number. Today, the number, let's say, the biggest tokenized fund, BlackRock's built, is about $2.7 billion US. And tokenized equity is about $2.2 billion US. But it's a tiny drop compared to the ocean of traditional financial markets. All assets can be tokened. Equity, bonds, funds, credit, but they are segregated by jurisdiction, by venues, by currency. We are sitting here in Hong Kong. The Hong Kong capital market is different from the capital market in Singapore and Middle East and other places. But when you look at it, the capital is actually becoming global. We still divided by traditional capital markets. Looking forward, when capital can be traded around the clock and settled across borders, the competitive question then changes. Let's use stablecoin as an example. It's a good use of a global payment and settlement. The market is about, the total size of AUM of stablecoin is about $300 billion US. But when you look at the big players, they're all moving towards building their own stablecoin rail. It is JP Morgan, Visa, Master, and the mega banks as well. So now we zoom out and look at it, exactly what we're building. I think we're building a 5-layer financial stack. At the bottom, our assets can be crypto, can be traditional asset classes. Above that is money and settlement. That is where the value travels. And above that comes market infrastructure. And then financial products, as we have discussed earlier. And finally, I think very importantly, is the global capital. When family offices, banks, asset managers, pension funds, sovereign funds. So the opportunity is not one crypto sector, it's an entire financial stack. But what this means for HKCEC as an ecosystem builder and a financial infrastructure builder, we have been in a space for over a decade. Today, HKCEC Group's regulated exchange, custodian, asset management, on-chain infrastructure, and tokenization are serving hundreds of thousands of users and institutions. And at HKCEC Capital, we have been building across the investment spectrum. Many of you know that we launched Hong Kong's first batch of spot Bitcoin and Ethereum ETF. Also, we are the first public company in Hong Kong now. Today, we manage strategies across primary and secondary market, passive and active exposure, and different return profiles. And this, I think, is where structured products becomes particularly interesting. Institutions, they do not just want the same thing. Some want upside, some want downside, some want a neutral exposure. So you cannot just tell institutions, here's Bitcoin, just buy it. We need to ask, what outcomes does the client actually want? So that's why HKCEC Capital has been developing structured products and customize our strategies for different investor objectives. This, to me, is the evolution of asset management, from selling exposure to operating outcomes. Lastly, allow me to share how and where we're looking for investment for the coming decade. At HKCEC Capital, I would summarize the next opportunities in 5 themes, not 50 sectors. First, as we discussed, financial infrastructures, not another crypto exchange. We are interested in infrastructures that connect on-chain capital with traditional capital markets. So it can be a regulated clearinghouse, custody, settlement. We think the bridge is more interesting than the island. Second is productization. This actually might be underestimated. An infrastructure becomes standardized, the value will move upwards. In light of time, I will not go into the details. Next is tokenization. Tokenization is always misunderstood. It's not a new asset class. It's a new wrapper that gives access, easy access for institutions. And don't think of RWE as one vertical. It's the entire value chain from insurance, compliance, custodian, trading, settlement. Fourthly, it's global liquidity. We all know liquidity is what matters. And lastly, is, I think, also very interesting, is the intersection between AI and the finance and digital asset as well. When these two come together, we might be able to see AI-enabled research, AI-enabled risk management, wallet, and even AI-enabled trading strategies as well. So when these two systems converge, the entire new financial market becomes possible. Before I end my presentation, I hope to leave you with one picture. That is, we started with a token and a protocol, more crypto native, and then we build products, ETFs, index funds, yield funds, structure funds, and then we move up with what is going on, the 3 mega trends, 24/7, on-chain and global financial infrastructure. And on top of that, it's financial stack connecting assets to global capital. For the past 10 years, people have been asking, when will traditional finance come into crypto? I think that is the wrong question. Traditional finance is already here, and crypto is moving into traditional finance. Imagine a market that never sleeps, a market where a family office in Hong Kong, a bank in Hong Kong, in Singapore, a pension fund in Europe, or investor in the Middle East, they can all access the same liquidity on the same rail. That will be the next decade for financial infrastructures. In conclusion, we think the end game probably is not to bring traditional finance into crypto. It's the other way, nor the other way around. It's to build a better financial system with the best of two worlds. Thank you, everyone.
Welcome back to the Bitcoin Magazine news desk. I'm Sean Hagan. I'm joined by Alex from Folger and James from ARC, two gentlemen very active in the Asia region. Alex, let's start with Folger. In your fund here, based out of Singapore, I believe. Could you give us a little insight into your activities here in the region?
Yeah, so Folger is a Bitcoin investment group, Bitcoin venture group. We're probably the most prolific Bitcoin venture investors in the world. I think we've invested in over 120 Bitcoin-specific companies since 2018. And we're launching a new fund here in Asia, $50 million for Bitcoin-specific infrastructure in the region to try and propagate sort of Bitcoin infrastructure specifically in Asia.
Awesome. And I believe you're doing a joint venture with with James and the ARC team in Sri Lanka. Can you tell us a little bit about that, James?
Yeah, sure. So ARC changes the trajectory of people and places. And at the minute, we're doing a lot of work in Sri Lanka. We're actually there to help develop the entire technology sector. So not just crypto and not just Bitcoin, but much more interestingly, specifically for us here, we are launching a Bitcoin accelerator kind of in Sri Lanka. So if you are a builder, kind of like building something on Bitcoin at the beginning of your journey, you're extremely welcome to apply kind of like online. If you go to arc.lk/Fulger, that's arc.lk/Fulger. You can apply to come and join us from October in Sri Lanka and work with Alex, work with I and other mentors to start and build a Bitcoin business that actually matters. Because like Alex has just said on stage, for something so important, it's actually still unbelievably difficult to buy, to save, and to spend Bitcoin in actually most markets in the world. And so we're going to try and make a difference for that. Not just, again, in Sri Lanka. The Sri Lanka is a really interesting turning point, kind of like right now. It's an incredible place. I recommend you visit. They're actually in the process of regulating digital assets at the kind of like the moment. Yeah, we're there. We're launching this program in Sri Lanka, but it's to build for the entire world. So if you've got an incredible business or you're based in Asia and you want to rally to a flag where there's going to be a bunch of incredible Bitcoiners building together, then please come to us in Sri Lanka.
Now, you mentioned Sri Lanka is at a bit of a turning point, right? It's a market that hasn't gotten a lot of love and attention over the years, but I think eyes are starting to turn that way. And a question I think is interesting to ask is, do you think Sri Lanka has the potential to maybe be the El Salvador of Asia?
Yes, I think actually more. It's already much more developed than like an El Salvador, right? This, if it, is known as the Pearl of the Indian Ocean. It's an incredible destination. I mean, I don't think there's many other places where you can see blue whales and elephants in the same day. But actually, there's an incredible bunch of technology kind of like sector there already. It has an amazing set of engineering talent. Very often, all of these global companies, you know the names of, they've all got engineering outfits kind of like in Sri Lanka. And a big part of what ARC is doing is trying to help Sri Lanka capture more of that value for Sri Lanka and for Sri Lankans and bring in the Sri Lankan diaspora back. But yeah, it's incredible. They've got a new government in place at the minute who, his motive effectively is keeping Sri Lanka clean, or at least the motto. And so it's like, it's never been a better place to do business. It's an incredible place. Timing's amazing. Economy's booming. I really recommend everyone coming and visiting us and visiting Sri Lanka. It's an incredible country.
Well, thank you, gentlemen, very much. Again, this was James and Alex, very active in the Asia region. I appreciate your insights, gentlemen. We're now going to cut away to the Nakamoto stage, where we're going to hear a keynote from Irene Gao of Bitmain.
Scale capacity from the grid. And today we are exploring together how to use it effectively. So let's see the data. There are 103 gigawatts of data centers in the world right now. And this number will be doubled in 5 years. So it will go to 200 gigawatts in 2030. What this means? So it usually takes 18 to 30 months to build data centers from groundbreaking to energize. And there are 26 gigawatts of AI load of them. And that number will go to 100 in 5 years. And from the data, we find out there are 30 to 40% of it is actually redundancy. Why? Because the lead time of electrical equipment is doubled compared to 2022. And also, there's a huge queue on the interconnections that you cannot avoid. What happened to the industry when everyone is chasing the clock and there's no slack, there's no more capacity? It's overcontracted. So what this means, the redundancy of the industry of today is almost like 30 gigawatts, and which was almost 2 times of what we have. We're from mining industry. The total network difficulty is estimated 16 gigawatts. And that's a gem from us is, we migrate from different places to seek for redundancy electricity. When we see such a redundancy of electricity, we will think about it, how to use it more effectively. So somebody will think, if it's idle power, it's fine, but it's actually not. It's already built. So if you have 100 megawatts of power, you have to pay at least 85 of it. It's not been one utility. It's difficult. It's actually the industrial standard. We'll show you some data of it. For AEP Ohio, if you sign a power purchase agreement with them, the minimum power consumption, which means the minimum bill you have to pay is 85% of it, and you have to sign a 12-year contract. And there are also some data of other states. It's become so common because only in 2025, these 36 states in the US have carried out the new tariffs about the minimum usage of the electricity that you signed. And some of the tariffs even require you to pay like $1.5 million per megawatt in collateral. That's the thing. No matter you use it or not, you have to pay for it. That's why today we're exploring how to use it more effectively. What we can put the power to work. our industry, mining and AI data centers, have so much things in common. First of all, the engineering. We share the same electrical engineering, the same infrastructure from the very beginning. So that enables mining can coming in a very short period of time to use those electricity that you cannot put into use for the first 6 months. And during the construction of AI data centers, the electricity can put into usage, and that already brings you the cash flow during the transaction. And even after the electricity, the AI data center coming online, the GPUs are coming online, you can still use the 30 to 40% of redundancy to ensure the profit of your infrastructure is doubled. The redundancy of the electricity which was built is paid. So not only mining is the engine to use those extra surplus or random electricity, we can also explore the other ways. You could see battery is perfect for curtailment. It's curtailed beautifully, but you could see it cannot deploy immediately. The lead time is about 2 years as well. And you can lease it to another tenant, but that's another thing to negotiate. And you can also leave it idle. And idle is what most of the data centers are doing right now. So only mining can say yes to all those 6 elements that allows the primary load for AI, or primary load for data centers, and other loads that's sitting next to each other on the same site. And whenever you need the load, whenever the primary load requires, it can be settled down immediately. And it's fast to deploy it, and you can start to get it up online in 6 months. And there's more data about how to use it. During the construction of the interconnections and the data centers, the miners is put into use, and it generates 147 million gross. And after the data center go live, it doesn't mean you have to remove all the mining data centers. It can be work on the same sites next to each other. And you can generate $44 million for the redundancy electricity. That's dramatically lower the bill you have to pay for the redundancy power. So in a 5 years period of time, from the day one, you put the mining data centers alongside the AI workloads, and you can have $427 million in gross revenue. So that's the data to show you how they work. And that's also the reason why we should put those two together. And then I will show you why. Here's the picture, a very simple line for how the mining data centers can be side aside the data centers. So the mining data centers have its own circuit. It can be totally separate with the transmission with the AI data centers. And whenever the primary load needs, you can switch it one from the other. But most of the time, from data that the surplus redundancy power that's sat there to prepare for a fault, that almost never happens. So why not take advantage of it? And what we can do, Bitmain is the leading mining rigs manufacturer. We provide a customized solutions for all the industry. We start building the hydro solutions since 2023, and we have gigawatt scale data centers, mining data centers around the world. So it's our expertise to work together with you to provide you the mining fleet solutions. You can own the fleet, and all the profit and margins are yours. The mining fleets are yours. And also you can use our customized solutions that once the power is there, we will give you solutions which is available to be plug and play. And the third one is, we can also do hosting. Since you have a lot of redundancy power, and we will have our mining fleets there, and you only need to get, the electricity consumed paid, and you don't have to put the mining fleet in your balance sheet. We can be very flexible on this collaborations, and what we want to avoid is to see such a lot of power is being wasted, and till 2030, the price, the capacity of the VC power goes doubled. So this is the idea. We have one grid that can power two kinds of compute, and there's two kinds of revenue in returns for all the owners. Think about it, and welcome to talk to us. Thank you.
Hello everyone, my name is Zhu Chongko. You can call me JC. I'm the legislator at large in Taiwan. First, I owe you an apology. I'm recording this video in Hong Kong. Just like you can see, I'm beside Victoria Harbor. I had already arrived for Bitcoin Asia yesterday, but a major vote was suddenly scheduled in the parliament. I have to fly back to Taipei yesterday, so I cannot join you on the Nakamoto stage in person. I'm truly sorry that I cannot meet you in person, exchange idea face to face. Still, I hope these few minutes you can get some ideas about what we're doing in Taiwan and what's the current status of Bitcoin reserve in the future in Taiwan. My message is simple and important. The cheapest Bitcoin strategic reserve plan for a government may not begin with buying. It may begin with not selling what public institutions already hold. In our case, one sentence in the official explanation to a new law begin to change that default. Let me briefly explain why I have worked on this for a few years. My job is to write technology law, tech policies. I'm kind of like the geek and the nerd in the parliament. But I also see my role as an educator, making new technology, emerging technology, for example, like Bitcoin, cryptocurrency, blockchain, understandable, lawful, and usable. In March 2026, I led the proposal for the first ever Virtual Asset Service Provider Act in Taiwan with 19 co-sponsors. In June, the legislature passed the first ever dedicated virtual assets law in our jurisdiction. But the most important work started earlier. For 2 years, I kept asking a very simple but very important question in the parliament and in committee. How much Bitcoin and other crypto does the public sector actually hold? It sounds boring, but clear policy may begins with a clear number. And at first, nobody had that number. Then luckily, it came the answer. As of October 2025, judicial authorities were holding 210.45 Bitcoin. We got official answer from the government. They also held Ether, stablecoins, and other assets, 14 types in total, worth about 1.3 billion new Taiwan dollar at that time. Here is the important detail. Zero Bitcoin was bought with public money. These assets came mainly from seizures in criminal cases. But this does not mean every Bitcoin already belongs to the government. Some may need to be returned to victims. Some cases are not final. So we must be precise. Seized is not the same as finally confiscated, and neither one automatically means Bitcoin reserve yet. So the inventory changed the debate. We were no longer discussing an imaginary asset. Public institutions were already holding Bitcoin. It's the truth, it's the fact, it's today. From today, maybe we can see the future for Bitcoin reserve. The real question became, what rules should apply while they hold it, and what should happen when ownership is finally decided? Could it be the Bitcoin reserve, maybe in the future, and also accumulate more Bitcoin in the near future? This is the sentence that began to change the default. The official explanation to the Virtual Assets Service Provider Act, the Article 47. That article means a lot. It says that when criminal proceeds are virtual assets, they should, under the relevant law, in principle be returned or confiscated in virtual asset form. In plain English, if the assets is Bitcoin, keep it as Bitcoin when the law allows. If it should go back to a victim, return the Bitcoin as its original form, which is Bitcoin. If it is finally confiscated, do not sell it immediately, only because that was the old habit. Originally in Taiwan, in many cases, the government or the judicial authorities, they would like to sell the Bitcoin even the case is not final, because they don't want to hold Bitcoin. They are afraid about the price change or afraid of a lot of reasons. So they might sell Bitcoin at the beginning. In the Article 7, we make it, very clear and have a reason and kind of like a law to make sure the government has a reason to not sell the Bitcoin directly or immediately. This does not create a formal Bitcoin reserve yet. It does not ban every sale. A sale may sometimes be legally necessary, but it could be a reason or could be a written law for the judicial authorities to hold the Bitcoin. What it does is to give public agencies and judicial authorities a clear legal and interpretive basis to preserve the assets in kind and, where the law allows, delay a sale instead of selling immediate. The goal is not to hold forever in every case. The goal is to avoid an unnecessary early sale before ownership, victim claims, and lawful use are clear. That matters because selling is not neutral. A sale chooses a date, fix a price, and removes every future option, for example, like Bitcoin reserve. Preserving the original asset keeps those options open until the law decides what comes next. If another government wants to learn from this, the order of operations matters. First, count it. Require a written inventory. You cannot govern an asset that nobody has measured. Second, custody it. Use secure, separated wallets, more than one approval for transfers, and an independent audit that connects blockchain records with legal records. Third, write the default. Preserve the assets in its original form. Return the same type of asset when legally due. If an agency wants to sell, it should explain why. Only then comes step 4, debate a formal reserve. Many people start at step 4. They begin with price, purchase size, and political argument coming. That creates resistance immediately. Step 1 through 3 are less exciting, but they are cheaper, safer, and easier to defend. Do the boring part first, build the balance sheet and the rules following. Then debate strategy with facts, not slogans. Now I want to be very precise. I have proposed studying a Bitcoin allocation equal to 0.1% of GDP, or roughly 6 to 700 million US dollars. That proposal has not been adopted. The central bank and the financial regulator have raised concern about volatility or liquidity or a custody. These are serious questions. So there are two separate achievements. A formal reserve is still advocacy. The in-kind default is now in the official legislative record. That differences is important. I'm not claiming that we already created a reserve. We created a legal framework, a legal path that can protect victims, improve custody, and allow finally confiscated Bitcoin to remain available for a future public decision, which is maybe someday we finally have a legal framework for Taiwan to have a Bitcoin strategic reserve. You don't need a price forecast to support that. You only need good records, clear legal ownership, and accountable rules, just like the Article 47 in the explanation part in the Virtual Asset Service Provider Act in Taiwan that we just established and passed the third reading and announced by the government. So I will end with the phrase at the heart of Bitcoin. Don't trust, just verify. And this quote is what the quote I was using in my closing announcement in the parliament.
Taiwan will begin to answer how responsible digital finance can go from Taiwan to the world. History will remember this day as we establish verification and build trust through the law. Don't trust, just verify. Thank you, everyone.
The same rule should apply to public administration. If a public institution says it holds digital assets, it should show the number. If it sells them, it should explain the reason instead of selling it immediately by default. And before anyone calls those assets as a reserve, the legal owner, victim claims, custody, and audit should all be clear. Only after that should we discuss whether to buy more. I want to specially thanks to a brilliant cryptographer, Adam Beck. I'm really honored to be able to invite him to come to the parliament and introduce us the basic knowledge of Bitcoin and the layer 2 idea and the other technology to help a government understand Bitcoin. And also I would like to say thank you to Bitcoin Magazine to share my words in the parliament after we finally passed the virtual assets law. And also I want to say thank you to Bitcoin Policy Institute, which is BPI from DC. Connor and his colleague helps a lot. They wrote a really amazing document and report to help our government to understand the importance of Bitcoin reserve. And I'm also really honored to arrange a very important meeting with Central Bank, the Vice President of Central Bank, and BPI to talk about the tokenized reserve. Maybe Bitcoin or maybe the other type of tokenized reserve. But of course, Bitcoin is the best. And also I want to thank Bitcoin.com to have an interview with me in Japan, in Tokyo. And I shared some ideas about the current status in Taiwan and the Bitcoin reserve in the future. I just want to say sometimes the most important Bitcoin policy is not a dramatic purchase. It is one careful rule that makes an immediate sale less automatic and gives public institutions time to make a lawful decision. I look forward to staying connected connected with all of you in person or digitally, and to maintaining a close relationship with Bitcoin community and this conference. As you know, in Taiwan, we're kind of like the center of AI world. We produce a lot of semiconductor chipset. We have TSMC. We have a lot of great manufacturing company. We have a supply chain finance. It all could connect with Bitcoin, with cryptocurrency, with blockchain, and of course, Bitcoin Reserve should be a plan for the near future. I will keep moving this work, of course, the Bitcoin Reserve in Taiwan, carefully, legally, and step by step. Thank you for your understanding and attention, and thank you, Bitcoin Asia.
Welcome back to the Bitcoin Magazine news desk. I'm rejoined by James, and this time we're here with Isaiah Austin. Gentlemen, we just heard from a legislator in Taiwan about Bitcoin as a strategic asset. Bitcoin's entering the geopolitical conversations around the world now. Isaiah, you're really on the pulse on the U.S. side of things, and James, you're really involved here in Asia. How have you seen the story developed? Is the West leading the East? Are they kind of moving at the same pace? And where does this geopolitical story go from here for Bitcoin?
Yeah, well, I think that the U.S. obviously is the first mover in this, right? You see President Trump established a strategic Bitcoin reserve a couple of years ago, and then just as of, last week, President Trump talking about that he would listen and he's very much open to the U.S. acquiring more Bitcoin in a strategic way. So I think that's been kind of the shot heard around the world is like, we need to move fast on this asset. With that being said, there's a lot of different innovations and strategies that's been used in Asia markets that have not been adopted in the U.S. So it's going to be really interesting to see how Bitcoin is used in this region compared to the West over the next few years.
It's kind of interesting, right? Because the US probably, we would say, is the world leader in building Bitcoin companies, in Bitcoin adoption. But actually 10 years ago, it was so anti this industry. It was incredible, right? We now know about all the debanking that happened. As a Brit, that happened in the UK kind of as well. But I think like now the US is leading the charge. And I think like for Asia particularly, I think you can expect to see more and more regulatory clarity. More and more acceptance of this, more and more adoption. And I think that's part of why we're here, again, like launching this kind of like Bitcoin accelerator in Sri Lanka that you can all come and participate in, because we think there's a massive opportunity for companies to be formed, helping to get Bitcoin adopted all over Asia, not just Sri Lanka, in all of these markets. So I think it's an incredible time for this part of the world.
And, you talk about that pivot that's happening in Sri Lanka and legislators wanting to usher in an era of, opportunity and innovation. What do you think has kind of caused them to go in this pro-Bitcoin, pro-innovation direction?
Again, Sri Lanka's still taking baby steps, right? And so they've just put some regulatory clarity out around virtual asset service providers, and so that you can go there and do business and know that you're doing that in a legal and compliant sort of like way. But it's still the beginning. But I will say for Sri Lanka particularly that they are open for business. There's an incredible kind of like government that's in place right at the minute. And just actually the people. There's you'll know like so many companies that will have engineering talent there in Sri Lanka, building these companies, the brand names that we know. But actually Sri Lanka hasn't historically captured as much of that value, right? It's like if you're building a company in Asia, you're incorporated in Singapore or maybe even in Delaware, right? And so there's a real opportunity for Asia itself to start capturing more of the value that its talent sort of creates. And I think for the work that we do with ARC there in Sri Lanka is all about that. It's like how do we benefit Sri Lanka and Sri Lankans with the not just with Bitcoin but across the entire technology sector.
Absolutely. And so we're hearing a lot about Bitcoin as a geopolitical asset all across the world, including the Asia region. And we're about to go to the Nakamoto stage to hear the case for India as an untapped juggernaut. Let's find out if that's the case.
There we go. Okay, a disclaimer. Our moderator didn't get a visa, so he couldn't come last minute. I was meant to be a speaker. So now I'm playing the role of a moderator as well as a speaker, so please bear with me as I try to do both jobs. Today's topic, India as an untapped juggernaut. India, 1.4 billion people, 50% of them under the age of 30. We are ranked #1 by chain analysis for crypto adoption 3 years running. That's India. So who's on stage? We have Aditya. Aditya is the founder of Bitcoin Bharat. It's a grassroots adoption literacy program across universities and colleges all across the country. 100 events, 60+ cities, and that isn't even scratching the surface. Next to him, we have Harish. Harish is the co-founder of India's first Bitcoin exchange. In 2018, there was a circular that said Bitcoin is deemed illegal with financial institutions. Him and his team took it to Supreme Court and had it overruled. He is royalty in India.
Thank you.
And I'm Santosh. I'm the founder of Student of Bitcoin. I'm an angel investor. I'm focused on creating the infrastructure for startups, and I just organized India's first Bitcoin accelerator program. So that's introductions, and let's get right into it. There is a misconception that Bitcoin is illegal. So Harish, you're obviously placed best to answer that. So what is the state of Bitcoin in India from the law?
So after 2020 winning the Supreme Court case, so India is totally illegal to hold Bitcoins personally as well as on your balance sheet. So any individuals or the companies can hold Bitcoins on their individual level as well as company level. And also VDA has been recognized by our income tax plus our MCA, and everyone has been recognized this as a virtual digital asset.
So hear that, everyone? Bitcoin is legal as an individual, as a corporation. So if anyone tells you otherwise, they have no idea what they're talking about. Come talk to this gentleman right here. Next. Aditya, you're focused on university students. I'm curious to understand, typically when you go through your conversations at these universities and colleges, how do they react to Bitcoin?
So talking about Bitcoin, first when we go to any college or any university, once they hear about Bitcoin, they say, okay, when it gonna reach $1 million? What is the Bitcoin price currently? And is it a good time to buy Bitcoin? They are like streamed into these questions, and this is understandable because most of them get this information from financial news, or maybe you can say YouTube videos from financial influencers. But spending some time in our session, like for an hour or two, they start question why it is capped to 21 million. What is inflation and how Bitcoin is solving inflation problems? What is self-custody? How mining is securing the network? So like this, their perspective changes within the 2 hours of our session.
Wow, so 2 hours of the session, and out of those 2 hours, what aspect of Bitcoin do they resonate the most? What aspect of Bitcoin do they resonate the most in those 2 hours?
Mostly they get into the self-custody part. First of all, when we just talk about money, what is money and what are how the evolution of money happened and what is the current problems we are facing with the monetary system. Then we introduce how Bitcoin is solving those problems, and they get curious about the technology, how this technology works, how this mining part works, and what is self-custody. These are the few things they focus a lot.
Okay. So we briefly touched on law, we've talked about the students, and Indians love gold. It's innate, we've always loved it, we buy a ton of it. Indian households alone own $3.8 trillion worth of gold. That's 31,000 tons, 4 times more than what the US owns. So as gold lovers, Bitcoin is the natural evolution, right? So Harish, what parallels do you see between gold and Bitcoin for institutions and corporations?
So as you know, like lot of institutes are sitting with cash, surplus of cash. So they are happy to invest in terms of Bitcoins and the Bitcoin structured product. As India is still untapped market for structured product, so we need lot of structured product in India where the larger corporates can able to invest in terms of to buy the Bitcoin in self-custody plus in terms of structured product.
And what type of structured products? I mean, there's so many, there's whales, there's institutions here. Which one would be ideal for India?
Ideal for India is like an Bitcoin on their balance sheet, plus the structured on the yield product, because India is having a lot of mutual funds sitting on the $150 million of $150 billion in the mutual funds. So people love to invest directly on the structured product in India. It may be like ETF, as you know, like BlackRock and Geo is already partnered in India. So maybe soon they may be coming up with Bitcoin structured products for ETF and other products.
Okay, so Harish just name dropped Geo. Geo is owned by India's richest man, Ambani. He has a net worth of, I believe, $250 to $300 billion. And that company, Reliance, is now in talks with BlackRock. And we all know BlackRock has the brilliant IBIT ETF. Some, depending on which side of Bitcoin you are, you like it or you don't. So Harish, you believe that IBIT could change the game in India then?
There will be a lot of opportunities in terms of for the IBIT companies in India, because people love to invest in the stock exchange.
And Harish briefly mentioned that it was 150 billion. Actually, the mutual fund AUM is 900 billion. So we're closing 1 trillion. So we love gold, we love mutual funds, we love money. So India just makes, Bitcoin makes sense for us to evolve into that position. So Aditya, gold, if we love gold so much, how is the student population viewing this as an evolution into digital gold?
So talking about the students, they have a strong belief in gold. Because in India, culturally, everybody in every Indian household holds a lot of gold. And they have inherited their financial literacy from their parents. And these parents believes in gold more. But this young generation is quite curious. They have a lot of curiosity about the digital transformations that we are facing. If something that is handy, that they can use their phone to access, in Bitcoin, what we do, we can just access through our phone. But in gold, it does not happen like that. So they get quite curious about, okay, this is the new technology and we can store our things in here. They understand what the inflation and what are the, gold is not easy to carry everywhere and Bitcoin is easy to carry, portable. Bitcoin is portable. So these are the few aspects they go through, few pointers, and then they start comparing between how Bitcoin is compared to gold, and why we call Bitcoin as a digital gold. Like it can be compared as that way. So this is how their perspective changes.
So how about Santosh, like in startups in India, you are seeing for the Bitcoin?
I'm glad I get to speak as a speaker as well. Startups in India, of course, Google CEO, Indian, Microsoft CEO, Indian. These are all exported talent that left India and joined as employees externally and have built a career. In India, that's changing. We're exporting talent less and starting to build more. And when it comes to Bitcoin specifically, the talent is excessive. They're brilliant. Now the question is, do they have the right platform to build and take it to market? So that was the entire thesis of why I came back to India. To those who say, why don't I sound like those two? I was educated in Canada, which is why my accent's slightly different. But I moved back to India this year to hold and organize India's first Bitcoin Accelerator program. Why? Our talent sometimes builds and isn't aware on how to take it to market, how to make money out of it, and I wanted to make sure we change that, and we give them the platform to put them in front of you. Alex from Fulgur was earlier on stage, so how do we make sure the talent has a pathway to capital when it comes to Bitcoin specifically? Of course, traditional fiat, the crypto ecosystem is quite flourishing. Alex himself had a statement that hundreds of millions have flowed into crypto, but not much into Bitcoin specifically. So that needs to change, and I believe we're planting the seeds for it, and it'll take a bit more time, and with the support of everyone here, we'll get there.
Cool.
Talent. I've said the talent multiple times. I almost said it 4 times in my previous message here. Aditya, you're closest to talent because you see university students day in, day out. What is it going to take this talent to become the juggernaut in Bitcoin? What do they need to do?
First of all, proper trimming is required for them specifically to become like, building into this ecosystem. There are a lot of companies worldwide and open source. And, in India, multiple students are also already into the open source, into Bitcoin open source programs. And yeah, they are very curious. And if you can see, there are a lot of engineering graduates India is producing day by day, not year by year, okay? And if we talk about seeing the opportunity, and if you want to build something in India, this is the great opportunity. Just come to India, just talk to them, like trim them, and you can start building with them.
So for the audience members that want to come and hire talent, what would you recommend?
What do you think about this?
Sorry?
What do you think about this?
So if the audience members had to come and hire from the universities, how would you recommend they go about it to hire from the universities?
You can just go to the different colleges, or maybe you can do some hackathon kind of stuff. Just do hackathon, ideathons kind of stuff, and you can actually find really good talents. Like in India, all students are so excited about different competition. They want to compete with different students India-wide, not only to the university. They want to compete with the India-wide students. So if you want to enter this space, in India space, you can just organize some hackathon, ideathon, and just, you can get the best out of those talents.
Okay. So what I'm hearing is if the audience members host these competitions India-wide, not just for one specific college, that'll draw in all the talent pool to apply, contest, and ideally become a funnel for them to ideally hire into. Is that fair?
Exactly, yeah.
Okay. Harish, you deal with corporations, so we've talked about talent. Let's talk about institutions. Is it the structured products that's the gap for institutions? Because we need capital to flow for us to become a juggernaut.
Yeah.
And what do you think needs to happen for that to become reality?
See, India sit with lot of capital where we don't have structured product. For an example, insurance, like India pays more than $100 billion in terms of insurance premium. Today, we don't even have the product for Bitcoin-backed insurance. So we need lot of, and also the solar and the renewable energy is on its peak in the India, because India is thinking about to do net zero by 2030. So we have a lot of renewable energies, and we are welcoming the Bitcoin mining companies and other companies to come to India and explore, because opportunities are very huge, and the renewable energy we have in India is very huge. And recently our Indian government has done tokenization of India bonds where it can be traded. So a lot of opportunities in India has been untapped.
Okay. It sounds like we need a regulator on stage to support us with all of this so everything becomes easy and clean.
Yeah, because India is totally like, as of now, it's an untapped in terms of structured product as well as the Bitcoin mining.
Okay.
And also the lot of renewable energies are available in India.
So it sounds like all of the mining companies here need to pay a lot of interest to what the solar capacity we have in the country.
Solar and the wind and hydro.
Okay. So some of you might be wondering, okay, they've been talking about store of value institutions. What about payments? Similar to WeChat, we have something called UPI, Unified Payment Interface, and that's the rails that money moves in India. It is like magic. So when it comes to Lightning in India, the application I wouldn't say is immediate because we have UPI. But that said, Harish, at some point, UPI will make mistakes. The National Payments Corporation will make a mistake. Maybe they might charge a fee, because right now, when you use these rails, it is free. So when I send 1 rupee or 1,000 rupees or 1,000,000 rupees, it is free on this infrastructure. Is that going to last?
In terms of AI infrastructure and all, so maybe Bitcoin will be using for the in between the AI agents, but normal users are already been targeted using by UPI, because it's free right now in India and it is very accessible to everyone. And even if you can buy some less than $1, you can pay with our UPIs. So India is more on UPI payments.
Okay, but that's an interesting thread to pull on, because in the world of AI now, how many here use AI? Just the whales. Audience members, anyone else use AI? There's just a few. Okay, okay. We see the hands, thank you. So in this age of AI now, you're suggesting then from a payment standpoint, India's primed to adopt it for agentic payments.
Yeah.
Okay. So then maybe I'll toss it to Aditya. In the agentic payments world, how do you think developers make sure that puts us on the global stage? Because if developers focus on using Bitcoin as a payment tool for agents, then do we need human adoption if agents will adopt it better?
I think it needs a huge adoption because like as we were talking about UPI, in India, like due to the digital India, everybody is having phone, right? In India, you get cheaper smartphones, cheaper internet, and it is very easy to access the technology. And if we talk about UPI, everybody is using currently, you know, nobody in India, like I would say, very few people carry cash too often. But if we come to like we can say that making Bitcoin just like UPI, everybody, like we can use it for every day. But we can see that there are not lot of like, you know, awareness or understanding among the people, like they can use Bitcoin as well. So if we can say Bitcoin and UPI can go side to side, but for like, you know, there's still a long way to go that we can see that, okay, India, everybody is using Bitcoin as for the day-to-day payment.
Okay. And what about the agents themselves? If we go into the agentic payment route, what happens then?
Sorry, didn't get it.
In the agentic payment route, if all the students are developing agentic payments on Bitcoin, what does adoption look like then?
Then it will be smooth.
Then it'll be smooth.
Then it will be smooth.
Okay,
Yeah.
so the answer I'm hearing is humans adopting will be a struggle from a payment standpoint, but agents will be extremely smooth, and that would be a path for us to be a juggernaut.
Exactly.
Yeah.
Okay. I'm curious, what other thoughts do you two have? Like, what do you believe is stopping us from being on the global stage so that we could draw in capital? Lucas is sitting right here. How do we bring Lucas to India?
So India is having a lot of opportunities where people are still not seeing our India. So whether it may be in terms of mining, whether it may be in terms of user adaptability, because youngest generation we have in India, where they can able to adopt the technology very easily. You can go to some three-tier village in India, they have the smartphones with internet. So you just think about that one, and the adoption maybe go to the roof. And also, like, youngsters are investing on mutual funds and the stock, and this is also the alternative structured product and Bitcoin on their individuals level.
Yeah, I mean, I moved to India 6 months ago, and it's crazy. Everyone on their phone wants to trade, wants to invest money, gold, like it's top of everyone's minds. And, you know, I'll share a quick story. So in India, we have this last mile delivery service called Blinkit. Imagine anything you want, it'll bring it to you in front of your doorsteps in 10 minutes. When we first moved, we needed everything for the house, from cleaning supplies to a couch. The couch took 24 hours, but everything else that was perishable or disposable came in within 10 minutes, including groceries. Now, what that's done is it's created this environment that people believe money can come that quickly as well. And you add in the fact that 50% of our population are below 30, we're digital first, we have digital payments, they're all looking at charts, they're looking at numbers, and they're looking to make money. And now, this is extreme potential for us to come in and give them the message of how does Bitcoin fit into this portfolio they're looking to grow. And you don't need to be stuck staring at your screen the whole day or trying to follow a trend. There's digital gold. Whatever your parents said, save for the rainy day and you'll be okay. Save with Bitcoin for the rainy day and you'll be okay. So there's no get-rich-quick scheme. And that's why I believe India's primed. And for everyone here, you should definitely come and take a look yourself. So we have about 4 minutes left, so we should start wrapping up. India has tons of wealth. It has so much wealth. Like the top 5 families, Indian families rule the country. The Ambanis, the Tatas, the Birlas, the Adanis. they rule corporations and institutions. I believe roughly over $1 trillion are just 5 families. What do you think comes next in this world when there's such immense wealth with these families? Do these families does it just take one of them to say yes and then the floodgates open? How do you think, how does it play out?
Of course, yes. Of course, yes, because India adopts very, very fast in terms of new technology. It's just a time. So all the wealth families, and now we are already seeing the wealth families are into Bitcoin, buying the Bitcoin. So it will the next wave will be on terms of adopting the structured product in terms of ETF, PUS, and all other products.
Aditya, what do you think about the big families adopting? Which one do you think it takes?
Mostly probably Ambani's.
The Ambani's?
Because through Reliance they can do that. And once any of these companies, maybe our Ambani or maybe Adani start talking about like, okay, let's do something on Bitcoin, I would say adoption would be much faster into this country. Because as I said, like our parents, or maybe these 30, 40 years of generation, they have a strong belief in those people. Like what is, like their perspective is that what they said is correct.
What do you think, Santosh?
After 6 months in the country as a resident, so I've always been a tourist, even though I'm Indian. I've lived abroad. I've lived there now as a resident for 6 months. What I'm realizing is 3 things move our country: cricket, Bollywood, and religion. And I don't see religion saying anything about Bitcoin soon, but I do believe Bollywood and cricket can say something. So now, can we get Sachin Tendulkar to come out and say something about Bitcoin positively? I think in due time we can. And if he does, 1 billion people will flock in.
Which actor can do that?
Sorry?
Which actor can do that?
I mean, I heard Amitabh Bachchan made money in Bitcoin many years ago. So Amitabh Bachchan is a royalty in our movie industry. So the names are there. If anything they're doing undercover, now it's a question of how do we bring them to light? And if we can do that, and it becomes mainstream, the floodgates will open. And then everyone here is going to beg to be in India.
Yeah.
So, go ahead.
No.
I think it's time to wrap up. The timer's ticking down. So, closing thoughts. What should everyone take away about India? What is the one message they should walk away from this conversation about India?
I would say India has a lot of young talent, lot of talented people India is having. And it is the best time for any company to experiment out any project. If you want to build something, build it in India, because this is the best time.
So in terms of corporates and the individuals, we have a lot of capital in India. So you are welcome to test our market with any kind of products.
I'll keep it simple. Just don't sleep on this country. It's going to surprise you. Thank you.
Thank you.
Thank you.
It started with an idea without borders, without permission, without limits. One network connecting millions through one shared belief that financial freedom should belong to everyone, everywhere. Because your Bitcoin can power what's next. And with Salt, you can tap into your Bitcoin's liquidity without ever selling. Now with rates starting at 7.5%. Salt, providing Bitcoin-backed loans for the past decade.
welcome back into the live news desk. This is Bitcoin Asia 2026. I'm Grace Remington, your host, and now joining me on the desk, Randy Hipper, the digital asset educator, aka Miss Teen Crypto, and Anya Dragovich, creator of the Honest Money Show, Australia's only female-only podcast. So amazing. I'm super excited to talk to you guys. You guys work in the education space, which is obviously so important for Bitcoin. But Randy, I'll start with you because you are a veteran when it comes to these conferences. It's actually my first conference and it's Anya's first conference as well. So yeah, what can you tell us about the experience?
Well, welcome. First of all, I think this is such a great time to actually meet people. We always see the keyboard warriors, but who are the people that show up and actually dedicate their time and leave their mom's basement to go to a stream? And this is just so amazing. I love these conferences. I think this is the best time to prove who's really here for the right reasons and to keep building together. I think a lot of people in traditional industries are just used to climbing a ladder, but in crypto, we're actually building that ladder. So I'm very happy to be here. Thank you for hosting this panel. You're killing it, by the way.
Yes, so are you. You both are. And I'm really happy to have you on the desk with me. Anya, so what made you decide to come to Hong Kong this year?
Well, this is my first conference and I'm here to represent Australia and the Honest Money Show. Yeah, I'm having a really good time and I'm loving the conference and the vibes here.
So excited. Well, you've said, I want to talk about your podcast a little bit, because obviously globalization of Bitcoin is a really key piece of this, but you've said Bitcoin is still seen as taboo in parts of Australia. I'm curious what specifically causes that reaction and what's worked for you in changing someone's mind.
Yeah, it really is. So we're in Australia, we're a little bit behind the UK and the US in terms of adoption. I don't really know why that is, but a lot of the time I find that people still are keeping it down low that they have Bitcoin allocation because there is taboo around it. I'm trying to help deal with that in Australia by having those conversations, and if they see normal people using it, hopefully they will see that it's not something that is not money for criminals, but it's really money for everyone.
We're talking about different, pockets of the world, demographics adopting Bitcoin. So Randy, I'm curious to get your opinion because you obviously appeal to Gen Z. What's something that young people actually get right about Bitcoin that maybe the older generations miss?
I think what the younger generation gets right is that we actually own our money and do stuff that's instant, right? This is the TikTok generation where we're just scrolling, and we want things done and we want them done now. And when it comes to Bitcoin and crypto, we're able to actually enter a financial system that we would normally be excluded from. You're under 18, you can't get on a crypto exchange, you can't get into stocks, but with DeFi, all you have to have is an internet connection, open a wallet, and you can take part in decentralized finance, whether that be Bitcoin or actually investing in now tokenized stocks. So we're actually opening up this whole new world. And because we have everything at our fingertips, it's something that the generations before us did not have. So I was just on Fox Business for a Gen Z special talking about why Gen Z is getting involved in stocks and crypto so early and owning more than their parents is because we have the tech and the motivation and the information to do it.
I'm so curious because you've been doing this since you were a teenager and you're so passionate about the space. What originally got you into Bitcoin?
So my father told me about it 10 years ago. In 2016, I was only 13 years old and I just didn't think I could have anything to do with it. I thought it was just finance bro stuff, just older people things. And by the time I was 16, it was 2019 and I was like, oh, all we have to do is scan a QR code, copy and paste a username, and we can send money to anyone, anywhere in the world. People my age were throwing away their pennies that are discontinued and nickels and dimes, and we just didn't carry cash. My younger sister doesn't carry cash. She never paid with a physical card. She just tap and pays. And so I thought this was the future of finance. Had a few $100 in my bank account, and I was growing up being told, oh, you keep your money in the bank, it just grows, you earn interest, when actually I earned no interest and my purchasing power continued to go down. So I decided to put my money in Bitcoin. And when I was 17, it was April 2020, I was a junior in high school, and I just woke up and I had Miss Teen Crypto come to my head, saw that it was available on all platforms, took the username and ran with it. By November 2020, I was hitting the streets asking strangers in Manhattan if they knew what Bitcoin was. I was putting art on the blockchain to show my generation that being your own bank with Bitcoin is important, but being able to broadcast your talent to the world with no intermediaries is also important to be the next step in this digital economy. So I just kept going. Now I'm at Bitcoin Asia about 6.5 years later, and I'm just so happy to be a symbol for Gen Z and for crypto in general. This is about empowering the entire world. Everyone's entitled to our inalienable human rights that the US was founded on, which is life, liberty, and property. Bitcoin encapsulates that and blows it up.
That's an amazing story, and thank you for sharing. We got to take a break, but Anya, we'll hear more about your story and your insights in just a bit. Let's go back to the Nakamoto stage now for a fun little game. Chris Cedar of Bitsurance leading Who Wants to Be a Satoshi Millionaire?
Paul Storz is right. Who is that? Who in the audience? Who is Paul Storz is right? All right, I expected it to be Paul Storz himself, but yeah. All right, 81 people, 91 people, those are rookie numbers, come on.
Yeah, Chris, a question. Can Uncle contribute to the prize fund? Like, fiat?
So who wants shitcoins? How much is that?
It's just my business cards.
That's like $100?
Yeah.
I mean, you
Come
can
on,
give
not
prizes
$100.
to like places 4 till 10. You can do a money shower. Yes.
Okay, after.
The prize pool just increased. Rockstar Dev's personal stack. All right, so 110 people. Let's give it 2 more minutes, and then we will start. In the end, I will ask a question. There will be multiple choice. You can select the answer, and then you have to press send. And then, if you're correct, we will see this in the leaderboard. And you guys, you also play along. And I would say, 1 more minute.
Yeah,
It's
come on,
110
join.
people. I mean,
Join.
there's some...
Scan the
110 is
QR
good.
code.
You can join later. 120, wonderful. All right, 126. And we're going to start in 10, 9, 8, 7, 6, 5, 4, 2, 3, 2, 1. And your first question today. Who wrote the very famous tweet, running Bitcoin? Was it Hal Finney? Was it Peter Todd? Was it Adam Back? Or, I don't know who I put here, Nick Szabo? Yeah, Nick Szabo. I don't see all of the answers. You see them, select the correct answer. Maybe there is a hint in the image. Who wrote the very famous tweet in 2009?
Yeah, I thought the questions will be harder, but this is warm-up, right?
So the questions will likely increase in difficulty. 1 more second. 82 people answered. Let's see. Overwhelmingly, we have, wow.
Yes.
41%.
Are we competing or?
Yeah, are we competing here or we're collaborating?
Publishing our results later? Or?
So on the more difficult question, this is just to get everybody up to speed how it works. Let's have a look at the leaderboard. First place. So in the end, if there's a tie, quickness gets you to the first place. You have to be correct and you have to be fast. So we continue after this very easy question. Guys, I hope you're ready. On to the next question. From which newspaper was the headline embedded in the Genesis block, Chancellor on brink of second bailout for banks? Was it the Times, the New York Times, the Financial Times, or was it Newsweek? In the very first block on January 3rd, 2009, Satoshi embedded this very famous headline. And from which newspaper was it? Maybe there is a hint.
I think I got it, but...
What did you answer, Alex?
Financial Times?
You said Financial Times. It was Rockstar. Do you know?
Yeah, this is actually...
No, actually. I don't know. I know it's a London
Koji, what did you...
Times, probably. I
The
don't know.
Times, correct. It's just the
Yes,
Times.
the Times.
It was a fake out with the Newsweek here.
It's a
Oh
tricky
wow,
question.
we have like
A lot of Times.
almost equal distribution. What does this do to our standings? Oh wow, Grafton from Lunar Rails on number 1. Where's Grafton?
Hey, Koji right there.
Round of applause for this guy. And we continue with the third question. The oldest Bitcoin exchange in China goes by the name Bitfinex, Binance, BTCC, or CEX.io. Which of these 4 is the oldest Bitcoin exchange in China?
It's Bitfinex.
Koji, do you have an idea?
Well, it's Bitfinex from China. It's kind of an interesting question, but...
What do you say,
I don't know. It
Alex?
feels like a trick question.
Is it a trick
CEX.
question?
I mean, I'm not sure.
You're not
Is
sure?
CEX still around? Is the exchange supposed to be still around? Oh?
So wisdom of the crowd was correct. It's BTCC. So
I
launched in
guessed this
2011.
one.
Come again?
I was lucky, so I guessed this one, yeah.
That's correct. Wonderful. So let's see what did this to our standings. Oh, Grafton dropped off. Who's Charo? Hands up in the audience. Congratulations. And Koji, is that you? Is that your handle?
It is me.
In
It is.
second place, but he's not getting any prizes, so he's out of competition. We continue with the fourth question. Quick maths. If one Bitcoin trades at $1 million Hong Kong dollars, how much Bitcoin can I buy for 50,000 Hong Kong dollars? Is it 0.02, 0.05, 0.2, or 0.5 Bitcoin? If one Bitcoin trades at 1 million Hong Kong dollars. I looked up, it never reached 1 million. It was very close. I think the all-time high was 950,000 Hong Kong dollars. So looking forward to that.
Oh my God, it's a math question.
Math question. What did you answer, Koji?
I'm nervous.
Show me.
No,
Public calculus.
Maybe I got it wrong. I don't know.
Interesting. And you?
0.05.
And you?
Yeah.
0.05.
I think I got it wrong, actually.
So the audience.
Pressure moment.
Yeah, we have here in Asia. Wonderful.
Yeah.
Correct. 0.05. You guys are much better than in Amsterdam.
no.
In Amsterdam, I think most people chose the wrong answer on these math questions. So there is some Korean player. I'm not sure. Yeah? Sophia Klokai. Wonderful. So the leaderboard has been mixed up again. And we're going to the next question. Now the questions become a little more difficult. The world's leading Bitcoin ASIC manufacturer by revenue goes by which name? Is it Bitmain, MicroBT, Bitdeer, or Canaan? I think they're all represented here at the conference. But one of them has the lion's share of the revenue globally. They are a pioneer. And you chose Bitmain, you also chose Bitmain, and you also chose Bitmain.
Unless it's a trick question, I think.
Why would I do trick questions? Do you not trust me? Yes, the majority chose correctly. It is Bitmain.
I mean, when you said they were pioneer, they did it for me, so.
I mean, the inventors of the ASIC miner are also on here, and that would be Canaan, so they are even more pioneers.
The inventors of ASIC, ASIC Boost, and all of the other stuff.
ASIC Boost, what was that? Do you want to explain what ASIC Boost was to the audience?
No, I'm too old.
You want to get out alive? Okay. So, the leaderboard has not changed that much. I think first and second place are the same. And yeah, those characters I don't recognize and cannot pronounce. All right, we go to the sixth question. Who was the first person to translate the Bitcoin white paper into Chinese? Very famous Bitcoiner. And we should see some options. I don't see them on my screen. So we have Samson Mo, ZZ, Jihan Wu, or Bobby Lee. Bobby Lee, the founder of BTCC. Jihan Wu, the founder of Bitmain, now over at Bitdeer. ZZ, famous Binance founder. You have CZ. What do you have? Jihan. And you chose Bobby? You chose Bobby, okay.
I'm not sure, actually.
So, again, wisdom of the crowd, round of applause, was Jihan.
Oh, it's Jihan. Sorry,
Jihan translated the Bitcoin white paper in 2011, went on to found Bitmain, and then went on to Bitdeer. And I don't think the first four places changed. Well done. So they all are 6 for 6. It will be a tight race. So who's in first place? Show of hands. There you are. Round of applause. No applause? Okay. Very impressive. All right. Next question, question number 7. At current block times, the next Bitcoin halving will be around April 2028. How many blocks is that away? Is it 800, 8,000, 80,000, or 800,000 blocks, roughly? Again, with a math question. When is the next halving? There are many, many hints. How many blocks are in 1 year? What are we choosing, Rocky? And oh, you have 1 second left. You didn't give an answer. What did you choose? Oh yeah, he chose correctly. Rockstar chose 8,000. Come on. It's not like in 1 week we have in 2 weeks we have 2,000 blocks, in 1 year 52,000. So 80,000 is correct.
You were too close here, so I misclicked.
Yeah, so in what place are you currently in the leaderboard? Some public shaming. You are in place
4 out of 7.
48, and you are in place 52. I think you are by far in the lead. Yeah, 20th place, wonderful. So currently in the race, Koji number 1. Let's go to the 8th question, halfway there. Japan's first Bitcoin treasury company, Metaplanet, used to be in which line of business?
Hey, I should get this right.
You should get this. Was it hospitality, fishing, astronomy, or mining? So did they deal with hotels, fish trawlers?
Yeah,
they were not making money.
It's fashion.
Come again?
It's fashion, right?
Fashion?
Yeah, I'm joking.
No, fashion is it's something else.
And you know something about fashion, Rocky. So you chose hotels. You also chose hotels. And you should know it's home ground. Time's running out. Oh, the crowd is well informed. 20% chose mining, but it is true. They were in hotel business. They're here. Go to their booth. All right. I think nothing changed in the leaderboard. There's still 4 people having all 4. Are you all seated next to each other, or are they? Where are the other 3 in the top 4? Show of hands. There's number 1.
Hey.
Nobody's coming forward. We continue with the 9th question. Which Bitcoin mining pool tags their Bitcoin Coinbase data with a fish emoji? Very famous mining pool. And we can see here in the Coinbase tag, there is a small fish. It's their signature on every mining pool. And is it Spider Pool, Ant Pool, Ocean, or is it F2 Pool? Koji quickly answered, you're still uncertain. He's going with Ocean, you're going with F2. I'm kind of disappointed, Rockstar, but you know, it is what it is. Why did you go with Ocean?
Because you scammed me with this screenshot.
Yes, I scammed you because this is again a fake picture.
Because it's a healthy block, so. Could have been
So
Ocean.
okay, it's the first time the correct answer is not the most widely chosen. It's F2 Pool. Shout out to Chun. His handle is Satofishy, and yeah, there's like starfish and him, 2 fish, F2. And oh, we lost somebody in the top 4. Somebody is now only in 5th place. But the others, 3 of those knew the correct answer. And we're moving on to the 10th question. What world's first in Bitcoin, and I will butcher the names, I'm sorry, did Shang Nangen and Yifuguo invent? Was it the first Bitcoin hardware wallet, the Bitcoin perpetual swap trade, was it the Block Explorer, or was it the SHA-256 ASIC?
Oh, this is hard.
So a woman co-invented
This is hard.
a very important piece of technology, and you chose the ASIC, you also chose the ASIC, you also chose the ASIC. Let's see if you're correct. I don't know who invented the first Block Explorer. Rockstar, do you know who had the first Block Explorer?
Yes, of course.
Roger?
No, Wiz.
Wiz?
Is it Wiz?
Is that the
No,
first
no.
one?
I'm joking.
No, blockchain.info, no?
I would say blockchain.info. Anyways, but the crowd knew it was the first ASIC miner over at Canaan. They are making ASICs to this day. And nothing changed in the top 3. It's going to be a close race, but there are people with 9 out of 10 correct, so there's still hope.
Maybe they're using AI.
Possible. You have
can't.
30 seconds, but I appeal to your honesty, and I think people do not cheat here. Wonderful. All right, we go to the 11th question. Again, with the math. If I wrote a 10-bit private key, my key is just 1 out of how many possible keys? Is it 1024, 2048, 4096? I just noticed the AI-generated dice has a weird 5. AI can't create dice, I guess. So if you roll your own seed with a low entropy of 10 bit,
No, I think I got it wrong.
You chose 2048. You chose 1024. Yeah, the audience in Asia is much better in math. 2 to the power of 10 is 1,024. Only, I think Rockstar has it correct, right?
Listen, Chris, this is last time I'm doing these game shows. Like, imagine if me as a developer got this one wrong.
Do you want to talk briefly about entropy?
No. Like, too much exploits lately, yeah.
Yeah, so entropy is the key to your security in Bitcoin. And if you have a 10-bit key, again, nothing changed in the top 5. Very impressive. So what position are you currently, Koji?
I don't know.
Still 20th?
36.
Rockstar, 36?
40th.
40, okay. Quite a poor performance, but you know, participation is everything. We go on to the 12th question. Again, with the entropy, a standard 24-word Bitcoin private key has how many bytes of entropy? Standard 24 words. Is it 32, 64, 128, or 256 bytes of entropy? If you roll your 24 words. Again, massive applause for our sponsors, Liana and Cake. Also, BTC Pay is on here.
I don't know.
What's your answer, Rockstar?
64.
64?
Because it should be like 512.
It is 32. 32 times.
I got it wrong again.
Like it's 256 bytes.
No, like 12 words are 256. Like 24 words are 512.
I don't think so.
Okay, you should. Let's ask AI, or let's ask someone from the audience.
If this is incorrect,
it should be incorrect. I'm pretty sure.
Right. Again, I make the rules. The quizmaster is always right. We look at the leaderboard.
No, you're right.
I'm right. Thank you. I'm right. 256 bit are 32 bytes if people chose 256 bit. All right, that fills me with a lot of joy. The top 5 got this correct, so I would feel embarrassed, Rockstar, that you actually tried to correct me here in a public setting, but it's okay. You will live it down. I will clip it later. All right, we go on to the 13th question. How many Bitcoin does SpaceX currently hold? Like they recently filed an IPO. And we could see they are actually one of the largest private holders of Bitcoin. Do they have none, or do they have 1,800, 18,000, or 180,000 Bitcoin? What did you choose? He chose this. And what do you choose? Okay.
Yeah, I don't know.
What is your answer?
I'm not sure about.
Oh, that is a lot of Bitcoin.
Yeah, maybe too much.
Let's see. The audience says 18,000, and again, wisdom of the crowd, correct. 18,000 Bitcoin. They would be, I think, the 5th largest treasury. Like, very impressive. And, only Chloe is now in the first place. The other top 5 did not know that, all of them. Wonderful. Chloe, where are you? You're looking for 1 million Satoshi? I don't see.
On the right.
All right, great. So we have 5 more minutes left, 3 more questions. This you should know, Rockstar, come on. The method for sending Lightning payments directly to a recipient's node public key goes by which term? Is it LNURL, is it Bolt12, is it ZAP, or is it a key send transaction? If you want to send a Lightning payment, if you push it through directly to a public node, you should know this, Alex. Come on. I only see correct answers here on stage. Let's see how technical the audience is. Oh, wow. Still, it's the most often correctly chosen answer. It's a key send transaction. And Chloe knew that. But it's still anybody's game. It's only 1 question in advance. We continue with the 15th question. By what maximum factor can Bitcoin's mining difficulty change during a single difficulty adjustment? Is it 0.5, 2, 4, or there is no maximum. So if hash rate leaves the network, or if a lot of hash rate joins the network, I mean, this is the penultimate question. Come on, you have 10 seconds, you have to answer. What are you choosing? There is no maximum, Alex, come on. There is no maximum. She chooses 4 times, you chose, what did you choose?
I'm not sure.
What did you choose?
I think 0.5.
0.5, no, you
sure.
can go up and down 4x, and this is a great audience. Like, when we did this in Amsterdam, I think, yeah, the later questions are more difficult, and 4x is correct.
See, now I understand why people didn't want to join you on stage. You just like make us look, crazy.
These are all understudies. We had entirely different guests, and they're all chickened out. Round of applause for them to have this public embarrassment here.
Yeah, no applause, see? They're like,
Alex chose, by the way, there is no maximum. I'm shaking my head right here. All right, so we go on to the leaderboard. And again, it looks like Chloe runs off. If she knows the last answer, nobody can catch her. But the others have the chance. At least 3 more people can win this game. For 1 million Satoshi, brought to you by Liana and Cake Wallet and Bitsurance here at BTC Asia Hong Kong. Are you ready? Which of these has the fewest lines of code? Is it a Boeing 787? Is it a Ford F-150? Is it WeChat? Or is it Bitcoin? So we have 4 very important things here. The largest social media network. We have Bitcoin. We have a primitive truck. We have the Boeing 787. I think I flew on one of those here. He chose, okay. He's still thinking.
I don't know, so I chose
how
Bitcoin.
many lines of code does Bitcoin have if we take out the test? What do you think? Like, back of napkin?
yeah, I don't know, but I know like it definitely has less lines of code than
No
Ford
idea.
F-150.
What did you choose?
I chose Bitcoin.
You chose Bitcoin? You also chose Bitcoin? All of you chose. I mean, it's a Bitcoin quiz. So I can tell you the most lines of code is surprisingly the Ford at 120 million lines of code. WeChat has around 60 million. The Boeing has 6 million, and Bitcoin, depending on what you look with tests and translations, it's 400,000. So Bitcoin is correct. And Chloe knew that. Round of applause. Chloe, you win 1 million Satoshi. Sponsored by Liana. Check out Liana Bitcoin. It's a wonderful inheritance wallet. It's a wonderful, wallet for your company. It does decaying, degrading, multi-sig. And Cake Wallet sponsors the prize for Satoshi Millionaire. You are a half millionaire. Zhangjiang Shang, you get 250,000, sponsored by Bitsurance. Round of applause. What is your prize? What is your 26? You are so far off the leaderboard. 39th. Oh, 22nd. Hang on, you won.
No?
Among the people on stage, Rockstar, round of applause for Rockstar. 2nd place, Koji. 3rd place, Alex. Thank you for playing. And the winners, find me over there and I will pay you out. And that's it from me. Thank you, Hong Kong.
Thank you.
Thank you.
Thank you.
Every year, this community comes together to celebrate, to debate, to build what comes next. And every year, the stage gets bigger. Sound money, center stage. So, where do you go to celebrate the next chapter in Bitcoin history? You come home. Nashville, July 2027.
Welcome back into the live news desk at Bitcoin Asia 2026. I'm Grace Remington with Randy Hipper, aka Miss Teen Crypto, and Anya Dragovich, creator of the Honest Money Show, Australia's only female-run Bitcoin podcast. I've been having so much fun talking to you ladies, so I'm super excited to hear more from you later today. You're both speaking on the panel called Developing a Sovereign Worldview from Bitcoin Principles. That kicks off at 2 o'clock local time, and you can watch it right here on the stream. Anya, I want to preview that panel a little bit, starting with you. If someone who has zero background in economics or finance is listening to your preview or your podcast, what's the one idea you'd want them to understand?
It's probably easier if you're starting from zero than if you have this pre-built notion of what Bitcoin is supposed to be. Quite often people in traditional finance have to do a lot of unlearning in order to learn about Bitcoin. So I think that's probably the better way to start.
That's such a great point. And Randy, I'm curious, does the sovereign worldview idea land differently with a 16-year-old? Because you appeal to the Gen Zers. Does that idea land differently with, teenagers, young 20s than it does with, let's say, like a 40-year-old?
You know the phrase, if you didn't take a selfie, you weren't there? I feel like that's super valid with Gen Z because we love the idea of proof of work, the proof of concepts. Like, hey, I'm here, I'm doing this. Hey, this is my money. Go on the blockchain, find that's my wallet, and that I actually own it. So absolutely it appeals because Gen Z is all about being heard. We love that our opinions are being heard by somebody and that our opinion actually matters. That's why prediction markets on the blockchain are really taking off because Gen Z likes engagement and they're actually putting their money where their mouth is, which is taking part in a poll that, again, drives that engagement and conversation that we would normally have.
And Anya, one thing you talk about on your podcast often is low time preference. What does that actually look like in a day-to-day basis for the average person?
I'm not sure what it looks like for the average person because I assume most average people don't have a low time preference. I think most people, in fact, live with a high time preference, and we can see that in the way we work, in the way we spend our time with our family. We can also see that in the dating culture even. So, I think one of the best things, the best gifts that Bitcoin has given me is the ability to kind of step off the hamster wheel and just learn to build a life rather than just a living.
That's beautiful.
So good.
We could really do a deep dive on that. Unfortunately, we got to go back to the stage, but I think we got to offline this conversation and go deeper on that. But Anya and Randy, thanks so much. Two of the best educators in the space here. We're going to take you back out to the Nakamoto stage now for more Bitcoin education with Bitcoin without buzzwords.
No. Okay, so everyone's here to learn. I like it. So what is this? Today, I'm going to share analogies that will spark curiosity when you have conversations with anyone that you meet. You might meet someone at the coffee shop, and Bitcoin might come up, and they'll say, you know what, can you tell me more about Bitcoin? And then how do you introduce Bitcoin? Do you use big words? Do you simplify it? And I was fortunate enough to spend multiple hours on the streets of Canada to interact with the general public, to see what they think of Bitcoin. I held a sign, Bitcoin, ask me anything, win a brief free Bitcoin penny, answer 3 questions, ask Bitcoin. And what I learned was people didn't understand it completely, and we have to do a simple job to help them articulate and wrap their mind around it. That led me across a journey around the world, 24 months, 90,000 kilometers, 21 countries. I met people from all backgrounds, all ages, all education levels. And during this time, how would I explain Bitcoin? It's peer-to-peer electronic cash. It's digital gold. It is a book of records. It is a blockchain. It is borderless money. It is money without trusted parties, and it allows you to do instant transactions. Now, the problem is all of this is related to money. Money is taboo. The moment you bring up money, do you know what happens? Everyone clams up. They don't want to talk about it. It's very personal. So how do we create analogies to talk about the future of money, of Bitcoin? So the first analogy I want to share today is, who is your favorite athlete? And typically when I mention this, everyone gets a little taken off. What do you mean athlete? I thought you're here to explain Bitcoin.
And the answer when I ask that is, Messi, Roger Federer, LeBron James, Michael Jordan. And then I say, well, if LeBron James or Michael Jordan releases a 21 edition limited jersey set, how many do you want? The answer almost always is, I want them all, or I want one of them. So then I say, well, next time Bitcoin comes up, think about this jersey, whether it's Michael Jordan or Messi. This works for cars. My accountant loves cars. The Porsche GT3 RS was his example. My real estate agent loves watches. My wife's friend loves bags. My friend loves real estate, even bonsai trees. I had someone who said that they are so passionate about bonsai trees and they're extremely rare, and they were able to wrap their head around Bitcoin with bonsai trees. The goal that I'm trying to achieve here is to create scarcity with an example that makes sense with them. And then I met a doctor. The doctor didn't care about watches. He didn't care about cars. He didn't care about real estate. He was married to his profession. All he cared about was his patients. So now I was stumped. So I can't use the previous analogy of your favorite athlete. What do I do? So I asked him, hey, doc, what tool or object is important for your profession? Any guesses on what he said? Any guesses? What is important for a doctor to do their profession? No guesses. Okay. He said the stethoscope. We all see a stethoscope on the doctor's. So I said, hey, doc, what is the best stethoscope brand in the world? And he said, it is the Littmann stethoscope. I'm not in the medical field, so I took his word for it. So then I said, hey, doc, so if Littmann CEO came out today with a press conference and said, we can't produce these stethoscopes in abundance anymore. The manufacturing capacity is going to have every 4 years. So if we produce 1 million stethoscopes these 4 years after, it'll be 500,000, 250,000, until no more stethoscopes can be made. So doc, you find this. What do you do? What do you think he said? What do you think he said? Come on, audience, help me out here. What do you think the doctor said? Somebody. Shout it out. What do you think he said? What do you think he said? That I want them all. What he said was, I would get as many as I can. So then, doc, when you think of Bitcoin, think of the Littmann stethoscope. And this works across multiple professions. Barbers love their wall trimmers. Audio engineers love their Shure devices. I even met a construction worker who loves the Lieberman cement mixers. Photographers love Canon. Chefs love Japanese knives. Chiropractors have their preferred practice bench. I believe it's called Ortholite. The goal here is to convey halving using an example of what they can relate to. And then I came to Egypt, and Egypt had extreme capital controls. These examples could work, but they kept US dollar up top. They all wanted US dollar. So I thought, okay, how do we create an example where we talk about the US dollar and convey Bitcoin? In this example, I played 3 suitcases in front of you. Each of them is worth $1 million. The first suitcase has $1 million of Egyptian pounds. The next suitcase has $1 million of US dollars. And the third suitcase has $1 million of gold. I then lock it up for 10 years. Which one would you pick? Gold. Why? Why would you pick gold, sir? Okay, he says because gold is money. I love it. And typically, that is always the answer. Almost 100% of the time, well, 99.9% of the time, they say gold. And then I say, why? And then this usually stumps people, because to them, well, it's gold, right? Why should I give you a reason? But I'm trying to understand, why did they say gold? So then I start pushing them. Okay, how he said, because it's money. I'm trying to understand what they think. So I say, why? What about gold? They're like, well, it holds value. Okay, why does it hold value? Well, it's treasure. It's been around for thousands of years. Okay, so what? Well, it's a precious metal. We can use it as jewelry. Okay, we're getting somewhere. So what? We could use it as jewelry. Well, we can't easily make it. Aha, okay. So there's something that we can't easily print. It's precious, it's held value across millennia. So that's why gold. So then I ask, if there was a digital form of this, would you be open to it? What do you think the answer is? Yes. Almost always the answer is yes. You notice what I've done with that analogy. The first two analogies, I didn't mention gold, I didn't mention money, I didn't mention gold. It was your favorite athlete and something related to your profession. Only in the third analogy does money or gold even come up in order to introduce the concept of Bitcoin. In this example that I just gave, that was the Egyptian pound. Well, you just replace that for the Hong Kong dollar, and you've got your example and your analogy when you meet someone here in your own home country. You see, when it comes to Bitcoin, we love throwing the kitchen sink at people, okay? When this conversation comes up, I won't be surprised if someone says, oh, Bitcoin is a decentralized ledger secured by cryptography, a growing list of blocks with SHA-256. That sounds like Latin to someone new. They have no idea what that meant. And if this is how we introduce Bitcoin, do you think what happens to them? This is how they react. They think, what in the world did I just hear? Nothing made sense. I have no idea what this thing is. I think I need to be extremely smart to understand it, so I am not going to use Bitcoin. And what have we done? By complicating it, we have made the opposing person afraid of this technology and not adopt it. Let me ask this. How many in the audience here fully understand the internet? Can you explain the internet to me? I'm going to go back to the sir who said it was money. Can you explain the internet to me? He's laughing. He says he can't. But I guarantee he uses the internet every day. So it's not important for us to have a complete understanding of a technology to use it. Can anyone explain how a car works? You drive it. You use the elevator. Can you explain how it works? Probably not. So why should that be the case with Bitcoin? We should just show them how to use it. Make it simple, make it easy. I've given you 3 analogies today, okay? And I'll repeat them. First, who is your favorite athlete, okay? Second, when it comes to your profession, which item or object is extremely important? And third, the suitcase example. 3 suitcases, each worth $1 million. You lock it up. Which one do you want in 10 years? The main takeaway is please seek to understand the person that you're interacting with. It's very easy to get caught up of what you believe Bitcoin is, what you want them to think of Bitcoin. But take a moment, ask them a question about what they like, what their profession is, and anchor Bitcoin on something associated to an item or an object that they already hold value. And if you can do that, they'll never forget it because you made it simple. Thank you so much. That's my time.
And welcome back to the Bitcoin Magazine Live Desk. I'm Sean Hagan, joined by Dylan Healy, head of capital formation at Sora Ventures. Dylan, we've seen a lot of headlines coming out throughout the course of the day. A lot of the dust has settled from this 7 Sigma event that happened last week. Price of Bitcoin absolutely ripping. You're heavily involved in the venture space, heavily involved with some of these companies that we see navigating the Bitcoin space, a lot of the treasury firms. Throughout the course of the day, we've seen articles from BlackRock saying investors no longer view Bitcoin as risk on, more as risk off. We've seen Bernstein come out and make a bullish call this morning for $300,000 Bitcoin driven by a debasement trade. What's your read? Are people getting overexcited, or do you think that that's appropriately measured for what's to come?
Sean, I'm glad you asked. I think Bernstein's sounding a little bit bearish here. The bottom is looking like it's in, and I'm seeing a lot of early allocation to the Bitcoin beta trade, which we know is treasuries. A lot of people wrote these off as a one-cycle situation, but I think we had a euphoric first phase, and these are going to accelerate on their second and third cycles just like Bitcoin has. So very excited for the treasury space. Sora Ventures is focused across APAC, specifically raising for our Thailand entity right now. And the next phase of treasuries is going to be very exciting. I think these are kind of going to become real businesses with operating companies, not just holding vehicles of buying Bitcoin. So the future is looking bright for both Bitcoin and Bitcoin Beta.
Now, I want to dive into some of your expertise here, if you will. You mentioned about the evolution of these companies, right? They're becoming true operating businesses. A lot of people thought that they were going to be one-trick ponies for one cycle, and that's proving to not be the case. A lot of them have added debt products, yield products, perhaps an alternative to the yield crisis we're in for sovereigns. Are there any other kind of novel advancements? Bernstein came out today and mentioned the debasement trade. Do you think we're going to see some more tweaks to the Bitcoin strategy here?
Definitely, they're evolving. We've seen some innovative ideas combining debasement assets like Bitcoin and gold on the balance sheet. I think there's been several companies kind of stacking operating businesses, if you will, a Berkshire Hathaway style trade. And essentially, these are going to become the biggest institutions in Bitcoin if we think Bitcoin is going to do what we all believe it will. And so stacking those balance sheets with income-producing assets, buying Bitcoin at opportune levels, learning to not buy the highs and not take on debt at the highs and be advantageous at the bottom, that's what we're excited about for this next couple of years.
Absolutely. What comes to mind to me on that bundling play is orange juice, and what comes to me on that debasement trade is someone like Farmhouse. Do you think that the AI trade is going to continue to suck the air out of the room for Bitcoin here, or do you feel that this kind of reinvigoration of excitement, it might be able to claw some capital back from that trade?
Doesn't it feel like Bitcoin's the most mispriced asset right now? Kind of got our butts kicked for 2 years with the AI trade. All capital allocation was done in AI, data centers, compute. Now they're feeling pretty overbought. People are allocating away from memory and chips and data centers, and Bitcoin's sitting there, last week at 60K. So we might see people front running that now with the pump we've gotten lately. Hopefully that capital is rotating back to the best asset you could possibly own, and that's Bitcoin. So we've been positioned for quite a while.
So, earlier you mentioned that you think the 300K projection is bearish. What is your projection, if you will? Is there a range, or is there kind of a, hey, if we can get this, I expect this price?
I think it's safe to say 690,000, probably up there with some other large institutions' predictions, and that's just being conservative.
Absolutely. So, what do you think could happen to get us beyond that price level? Is there kind of a series of magical events that could kind of give us a super cycle, dare I say?
Strategic Bitcoin reserve. Total debt just hit 40 trillion, just more of the same. Forever Wars printing money, and a couple good news headlines. Midterms go the right direction. Both sides are good for Bitcoin, and I think we're kind of just inevitable. It's more about waiting it out and letting the capital rotate back.
Awesome. Well, thank you for joining us, Dylan. Again, this has been Dylan Healy, head of capital formation at Sora Ventures. Now we're going to take you back to the Nakamoto stage.
So Hong Kong, just a few weeks ago, we had one of the biggest hacks in a Bitcoin hardware wallet that we've seen for a while, a well-known hardware wallet called the Cold Card. It was extremely tragic and sad, and a lot of people got hurt and lost their life savings. So to break it all down today, we have a panel titled The Cold Card Exploit: What Happened and Why Bitcoin is Stronger Than Ever. Please welcome to the stage our moderator, podcaster Stefan Lavera, protocol developer on Lightning, Dusty Damon, CEO and co-founder of BitSurance, Chris Cedar, and the CEO of Wizard Sardine, Kevin Loeck.
All right, thank you everyone for joining us. So we're going to be talking about the cold card vulnerability around entropy and what it means, and hopefully is there a lesson to be taken from this. So quick overview. I believe it was July 27th when some of this started to come out, and I think last I've seen the numbers, it was around 1,700 or 1,800 BTC approximately have been lost. Kevin, do you want to just start here? Because I think you were one of the first people to actually raise the alarm here.
Yeah, so technically what happened is the worst kind of bugs for a signing device, for a hardware wallet, which is like you can't trust the entropy, so you can't trust that the secret is actually secure. It's the most basic, but also the most scary type of bug. And yeah, it just happened that somebody posted on Reddit about losing their coins, and they, of course, like lost everything. So it was like a very, rough kind of post to read. But the person was also trying to understand what happened. And yeah, just looking at this post, it wasn't clear yet what exactly happened. So there was a lot of like theories in parallel, and as usual, people were calling FUD. But yeah, I guess like I was probably one of the first to really think something really dodgy was happening.
It wasn't just an isolated instance. There was possibly a systematic error going on here. That was what you were trying to get to, because you were trying to look at the transaction patterns and understand, okay, it's not just like an isolated thing.
Correct, yeah. And it's also like a lot of weird things. I don't know into how much details we want to go, but this kind of sweep, like all the money that was moved was weird in a lot of ways. Like many of the funds were actually pretty old, like didn't move on-chain for a while. So this is not a typical malware or something like that would just be on your computer and sweeping your coins, because typically these kind of coins would be more recent, more new. So when you start looking at funds that move from, I don't know, 5 years ago, that's starting to be weird. You're like, this is a very deep kind of attack. Also, like the pattern of these transactions, like why the shape of it was very weird. It didn't look like a very sophisticated type of attacks, but the amount of money and the number of wallets that were swept, you also were like, this is not just one user doing a mistake or 10 users doing like something stupid. So it was just very weird, and that's what triggered, like for me it was raising the flag, and I was like, okay, something is really dodgy there.
Gents, anything else you want to point out about this, let's say the discovery of this, and what you were, like what was going through your mind as you were discovering this also?
Well, I was getting up for breakfast when the sun came. No, just kidding. No, it was really tragic. Tragic in a lot of ways. I think, like, first off, the people, the thieves figured this out first, right? This wasn't like we developers figured out the problem, we went to race to fix it. Nobody had any idea. And I ended up looking through the code to see like what had happened. And it was out there for like 5 years, this issue, and just nobody noticed. And I don't know, it's really, really sad, I think.
Yeah, that is the thing. Did nobody notice? Like in the post-mortem, we realized, okay, James O'Byrne, like last year around July, he pointed out this vulnerability, but they failed to check if it was historically active, like somebody found it, and then like people also contacted James O'Byrne. Oh, I've already like flagged this, I mentioned this to CoinKite, and yeah, they did not close it. Probably they did not expect the fallout of that, like they didn't realize this small, like this very obscure library caused this.
They probably thought, hey, it's been working for 5 years, it must be fine.
Yeah, I mean, literally, like James O'Byrne said, like when he pitched this to NVK, he said, oh, we would have heard about this by now, meaning like, oh, tons of people would have lost their Bitcoin. And that is such, from a disclosure standpoint, like it's really poor maintenance of the code and like crisis management. And like there's so many things that went wrong. And I think the industry as a whole has to learn from this. So this never happens again.
Absolutely.
Because like, the people that were hit in this, that is what like really broke my heart. Like I had customers, clients, friends, and those were not people that staked their Bitcoin. They were not chasing yield. They were not in some DeFi protocol. They didn't have a hot wallet. They did everything right. They did the same way like we taught them. You get a hardware signer. You keep the seed offline. You do not roll your own crypto. And suddenly, 1,800 Bitcoin are being drained, and we know the median victim lost 1 Bitcoin, and that is usually all that they have saved. Like, and some people live in like the global south, and the minimum wage there is $300 a month, and you lose your 1 Bitcoin. that is disaster.
It's horrible, and the outrage is totally understandable. Like, it's our friends who have just been living their lives, making ordinary incomes, saving it all in Bitcoin, listening to all of the advice of how to store it, and putting it on a cold card was like the advice everyone was giving. And I think like one of the tragic parts of this is everyone was saying, oh, cold card's the secure one. It looks secure, it's hard to use, looks like some kind of hacker device. But the actual internals were never being audited, right? Like the correlation between what everyone was recommending with how much was actually being audited just wasn't there. And if we as a community could learn from this, I think we should have more introspection, right? We should actually try to have some better connection between review of what's happening and what we're recommending, right? Or the next charming guy who drinks whiskey and says he hates the government will screw us again.
So let's talk a little bit about what could have been done to, like in review, what could have been done to catch this kind of vulnerability. And just a quick overview for the listeners, or just to make sure everyone's following along. What we're talking about here is there was a library that related to entropy, and the cold card firmware had to call to that library, and there was an error in the way it was linked, such that they believed it was using the random number generator on the device, but it was falling back to an insecure method.
Yeah, I'd love to speak on this. I did a deep dive into it. Essentially what happened is you had a developer who was moving over their code base to a new thing. I'm trying to use not technical language here. And in the process of moving it over, they turned off the most important function of one of these wallets, the random number generator. And if that thing, they call it RNG for short, is broken, all of your funds can be stolen. And what they did, in just an act of sloppiness, they turned it off. And I think this might be a cross-language issue. Like they clearly were programming in Python. To do this, they had to move over to C, which is a harder language to use. Perhaps they were confused about what was going on. And if you look at the actual code commit, which is public, they just turned it off. And there's some explanations in the comments. You can start kind of reading the tea leaves and try to guess why they did it, but they did. And I think, for me, the bigger thing that upsets me about it is not so much that he made this mistake. Like, the mistake is human, we all make mistakes. What bugged me is there's stuff around this that's supposed to catch this. So if you think about pilots have checklists. They have checklists for everything. A, B, C, do these things in order. They also have acronyms for everything. The reason pilots have checklists is not because they don't know how to fly the plane, it's because people have died forgetting these particular steps. They say these checklists are written in blood, right? And in programming, we have certain procedures that are similar to that. We have procedures where we're trying to, when we change code, give a description of what was changed. We call these messages of commit. And then we try to have them reviewed by other humans, other experts in the field to check our mistakes. And neither of these two things happened in this case. And I think for a lot of developers that don't care about this, they might find these things as tedious. Why do I bother writing a commit message? Why do I bother getting code review? It seems like tedious, right? Well, the same thing's true for pilots. If a pilot ignored all their checklists, never checked the plane before they took off, odds are the plane would be fine. That's not why we have those procedures. We have those procedures in case something goes wrong, to give us a second chance to catch it, and none of those procedures were followed in this case. And that's what I'm most upset about.
Yeah, I think that is on the code side, on the code hygiene. There were many learnings, but you yourself, Stefan, Mr. Multisig, like we have been preaching above a certain amount of Bitcoin, a single sig might not be the safest way to store your funds. If you move to like a multi-vendor, multi-sig, this would have been, not as catastrophic. Like, to my knowledge, even if you have a multi-sig with low entropy seeds, and again, like the entropy, there was this very great comparison. A normal Bitcoin private key is 1 out of the atoms in the Milky Way times 8. And with CoinKite Cold Card Mark III, you had 22-bit entropy, essentially the amount of atoms in a single protein. So just the scale of that, like you want to hide your seed, your Bitcoin on a kernel of sand somewhere on some planet on this galaxy and not just in the palm of your hands. And if you had a multi-vendor multisig, or if you have a tool such as Liana Bitcoin, like your funds would be safe because there's so much added entropy and there is so much more protection to your Bitcoin, and everybody should look into those tools, because when we started out with Bitcoin, there was no unified standard, there was no wallet descriptors, it was really difficult to set this up, there were a lot of foot guns, and I think most of those have been resolved by now, and Liana Bitcoin, the UX is phenomenal, and I recommend it now. And like the last weeks, I had tons of clients, tons of friends that were affected or now scared with their setup that we onboarded to Liana, we onboarded to multi-sig to help the community. Because this event, I've called it the 9/11 of self-custody, because it like shook our industry at the most vulnerable spot. And like a lot of people have the wrong learning from this, that self-custody cannot be achieved by a normal person, and people are now moving their funds to exchanges and giving up like this assets. They're introducing counterparty risk again, and we should now fight back to build the tools to enable more people to still self-custody, but make it in a more secure way.
Yeah, and absolutely, that key phrase there, multi-vendor, multi-sig. The people who did that were immune from this problem. They're immune from all sorts of problems. It's not that it's 100% secure, but it's the most secure way, I think, that we know of today to store your Bitcoins. Hopefully now we're more motivated to build tooling and education to get people to start being able to do that.
Now, let me just throw in a quick point and get your reaction on this. Now, I'm a fan of multi-vendor, multi-sig. I've been promoting it for a long time, but let's be, look at the base rates, like the numbers. Ballpark numbers. You guys tell me if I'm getting these numbers wrong, but approximately in the ballpark of 10 million hardware wallets have been sold, like across Ledger and Trezor and all the other hardware wallets. And then out of that, maybe 4 or 5 million unique hardware wallet users. And then out of that, let's say 5 million users, it's probably like 50,000 users who are actually doing multi-sig for their cold storage. Something in that ballpark. What do you guys think? So I guess my point would just be, firstly, do you think those numbers are right? And secondly, we can talk about multi-sig, but if it's only like 1% of the hardware wallet users, are we,
I think you're
realistic?
wrong. I think it's much less.
You think it's even less than that?
I agree, really. It's clearly very, very few.
Yeah. But I guess my point, Kevin, you had something to say?
Yeah. I have so many things to say. In terms of numbers, we don't know. That's definitely a thing. I don't know how many Liana users there are. Liana is a pretty new software. It's not the first multi-sig software. There are a lot of others. And just in Liana, we very probably have thousands of users, right? So that gives you an idea. But then if you look at other form of multi-sig, even some that are not necessarily completely self-custody, where you have like, a third party look at, Unchained, Casa, whatever, I'm thinking, we're going probably into the 50,000 plus. I don't think it's an overestimate. I also don't think it's fair to tell people that, they should have done multi-sig. Multi-sig would have solved this problem. This is the reason why we do multi-sig. But having a hardware wallet was a great first step, and they shouldn't have been burned. Cold Card should have done proper audits. Cold Card should not have pushed back against any security disclosure they were getting. They were very much like, not rewarding anyone that was doing security work, and that's not nice. So I think it's not because people were not in multi-sig that this happened.
Yeah, and to be clear, my point of bringing that statistic up is just to say, look, yes, I believe multi-vendor, multi-sig is a good thing. There's no one-size-fits-all, but I'll also make this point that many people who are using self-custody Bitcoin today are probably doing single sig with a passphrase or just single sig on a standard hardware wallet, right? So we can talk about multi-sig, but it's like 1%, right? That's like ballpark of where we are.
You can also use multi-sig with just one hardware signer. Like one of my favorite ways to do it is have your hardware signer with 24 words, and then you have your 24 words plus a passphrase. That combined could be a Liana backup that, if you do not refresh it, after 50 months, the passphrase basically decays. And that gives you so much more security. Like you can have your seed phrase basically human readable in your desk drawer, and people without the descriptor cannot access it unless you let it decay. But we need to get more people into this, and it's exciting to see like tooling like BitKey is like multi-sig by default, or the FrostSnap devices make things more easy that you don't have to store a descriptor. You get like 3 25-word seeds. Like all these tools need to be built, but again, like with Bitsurance, we did a like research in the total addressable market. I agree, like 10 to 13 million devices have only been sold, and if you juxtapose this with 400 million crypto-exposed people, that is like, those are rookie numbers. Like these need to go up, and it's purely, I think, a UX question.
Yeah. So what do you guys think the pathway forward is? Because again, at the same time, what's realistic for people to do? Like an average person, maybe they're not that technical. What is a realistic pathway for them to secure their life savings, or at least a serious amount of Bitcoin? What does it look like?
This is an amazing question. The first thing, I'm a true believer in self-custody. Now, the latest problem was, cold card. So it was a self-custody tool, and it affected these people that actually did the work of storing their own Bitcoin, buying a hardware wallet, not leaving it on a hotkey on their phone or on their computer. They took the right steps, and they lost. This is really not cool. It's very bad for the kind of the industry and showing self-custody. But let's not forget that in the grand scheme of things, a lot more money and a lot more people lost money at custodians. If you look at, FTX, if you look at Mt. Gox, if you look at all of the other ones in the middle, Quadriga, etc., all of these things are much bigger in terms of impact. One of the good side of self-custody as well is that everyone has their assets segregated to themselves. So typically, when there is a problem, it doesn't affect the entire ecosystem. Again, a breach of entropy like happened on Cold Card is the catastrophic thing, because it could affect everyone. And in this case, it was everyone having this specific model and this specific firmware of this device. This should not happen. This is not like because you are in a multi-sig, you are going to have this problem. No, it's just there was a massive bug that should never have been there in this specific thing.
And on this, we should remember the kind of the base rates, because most people don't lose their coins because of the typical is like social attacks, or maybe some of these ways where maybe it's malware or phishing or these kinds of things. So we should remember that too, because that's actually statistically a more likely way to lose your coins, isn't it?
Yeah, I mean, my hope is that we don't just forget about this in the coming years and go back to the same status quo. And there are a lot of ways to make things more secure. I just hope we do go in that direction, right? Just a little more secure standards of practice. I mean, obviously, we can think of ambitious goals, like everyone does multi-vendor, multi-sig, everyone gets a Swiss Vault bank account, whatever, right? To hide one of their multi-keys in. We can think of fantastical security solutions. I just hope we raise the floor, right? Instead of the floor being, hey, you got a hardware wallet that you put some Bitcoin on, let's figure out like one step more of security to get people onto, right? And there's a lot of ways that could look. On the flip side, I do think as developers, as the Bitcoin developer community, we need to make multi-sig easier. And I think what happens is whenever we talk about it, we get in these like debates about what is the best multi-sig. Whereas you can show from the stats, 99% or more people aren't doing it at all. What does it matter if we argue about the best possible variation of this multi-sig security protocol if nobody's doing it?
Well, some people even argue against multi-sig. They say, no, just passphrase, or no, just single sig, because
the debate goes on forever.
That's what many people do, right?
Yeah.
So it's kind of, you sort of hit from all sides. Now, look, one other big topic that we should hit is why Bitcoin is stronger than ever, right? So let's hit this topic. Let's talk about that. Is it a matter of AI code review? Is it a matter of making it user experience better for people? What do you guys think? How can Bitcoin become stronger out of this?
Oh, it absolutely is. As a developer in the Bitcoin community, I can tell you everyone is like freaking out, which means they've stopped all their advancement of new features projects. Everyone appears to be working on security now. Everyone's going through all of their old code, being like, hey, what did I miss? What can we improve? Let's secure everything. And it just seems to be this mad scramble. Everybody focused on that. And it is a tragedy that got everyone to get this motivated, but Bitcoin is going to come out of this the most secure it's ever been by a long shot. And everyone also at the same time, the AI programmer, agents, whatever they call them, they've gotten better at reviewing code bases. Now it's to the point, if you take a big complicated Bitcoin code base, you give it say $10,000, it will find real exploits now. And this is scary today, but it's really good for even just next month. all those are going to be fixed, right? Vulnerabilities that it would take a human, like, years to go through the code base and find, they can find more quickly. So we're getting to a point where our code bases are not just robust today, they're going to keep doing these AI audits, right? I think this is going to become standard industry practice where you have AI reviewing your code for exploits continually. And I think one of the good things coming out of this tragedy is people are going to do that and take it seriously.
Yeah, I think the problem with AI right now, Bitcoin is such a lucrative target. Like the money's in the computer, and it was like foreseeable that like we are the first to get hit by these frontier AI models because it's easier like to penetrate a balloon than for developers to protect the entire surface. As an attacker, you have this asymmetric advantage. And like this was a wake-up call, and we've seen a lot of developers now like auditing other code bases, something that should have happened with CoinKite. Like we gave them too much benefit of the doubt, and nobody like looked. Now I think this will not happen again. And what happened here like will most certainly happen in the traditional financial industry as well. Maybe it's happening right now and it's swept under the table. Every single like online-facing system is being attacked now, and the barrier has been lowered so much, but at the same time, developers are also now stronger, and I think Bitcoin will be the strongest monetary network out of this.
Yes, it will.
Yeah, I would like to add as well, just back to the specific cold card bug, right? It was not that obscure. It's just that, again, there was no good incentive for people to put the time into trying to find it and trying to break it. Sometimes it's just incentives, financial incentives, as I was mentioning, having bug bounties to reward security researchers that are doing, a good job at doing stuff is very important.
That said, though, wouldn't it have been a big scalp for Ledger Don John or some of these other security researchers to be like, hey, we found this big thing and it was not there, it was not discovered for 5 years? So I get there would have been a reputational bounty for someone who found it.
Yeah, but reputation, it costs money as well. Like these engineers, they cost a bunch of money. But yeah, sure, Ledger Dungeon or whatever would have been very happy to find this bug. Then there is also the other side of the coin, which is that not everyone is an asshole. Typically, the security researcher that will find a bug is not going to sweep 1,000 Bitcoin out of cold card users. Like, this is a horrible practice. It can happen, of course. And this is not AI. It's not an AI that did something incredibly magical or enabled by AI and emptied all these wallets that would not have been done without AI. It's just, the cost of finding this bug got so low with an AI that it just happened to find it. And then the person who just asked this AI, hey, can you break a signing device? Probably something like that, like a very basic prompt, just took the money without thinking. And yeah.
What if we had a fund? If you look at big companies like, say, Apple, they have a money set aside for people that find exploits. Like if you find a zero-day exploit in the iPhone, they get $1 million at least. I think they go up from there.
I believe every single hardware wallet has that. It's just Cold Card was famously not
paying out.
Yeah, and like going back to open source, like Cold Card introduced this bug when moving from a general public license to like a MIT Creative Commons, essentially forbidding competition to use their code in a commercial way. And just by reducing the set of eyes that look at your code, because if you are a hardware wallet manufacturer and you create open source code, like I regularly see Bitbox and Trezor cooperating, helping each other on code bases, or this is cool what you're building, I'm gonna take that. As soon as you like reduce, again, this incentive for people to look at it, fewer people will look. Pairing that with no bug bounty, pairing that with generally being an asshole when people point out mistakes to you, which CoinKite or NVK was famous for. The signs were there, and we all looked away. So that is like a little bit on us on the Bitcoin influencer side that we, tolerated this kind of behavior for so long. And I think, yeah, moving forward, we should not just preach, we should practice the don't trust, verify motto that we always, claim.
Yeah.
So we've only got 2 minutes left. So I guess kind of loosely speaking, do you think people are going to be scared from self-custody now because of all this, right? Are people going to go to ETF and custodial and things like this? What are your thoughts? Just quickly, 30 or 40 seconds each.
I would love to say, no, they're going to all move to multi-sig, but the reality is that a ton of people have moved, again, more to custodians in the past few weeks, which is a horrible thing for Bitcoin in general. As a system, I'm very sad about it. I really want to tell people, self-custody is not hard. Self-custody is much better. It's much more secure. It's just that the latest bug affected self-custody users, so.
I don't know, I hope not. That's a hard question, what will people do? I think that self-custody is still the right choice for a whole lot of reasons. I think that actually it's a better time to get in self-custody because everyone's so focused on the security of it. Paradoxically, if no one's talking about self-custody risks, that would be the worst time because no one's paying attention, right? Which is the problem with Cold Card. Right now, everyone's paying attention. It actually is the best time to get into self-custody.
Yeah, like the move from self-custody on exchanges is the worst that can happen because we all want to have, we want to find the actual value of Bitcoin, and if most people keep those on exchanges, you can, fudge the numbers, and if we all withdraw, the sooner we will discover the real worth of Bitcoin, and that's why we need to push against this and champion self-custody and build the tools and help people.
Right, at least if you self-custody your Bitcoin, you know that Bitcoin's there. You put it on exchange, those guys are wheeling and dealing and borrowing against your Bitcoin all the time. Your coins probably aren't even there on an exchange.
So, yeah, I think we'll have to leave it there, but hopefully there was some interesting and educational things there for our listeners. Everyone, please put your hands together for Dusty, Chris, and Kevin. Thank you.
It started with an idea without borders, without permission, without limits. One network connecting millions through one shared belief that financial freedom should belong to everyone, everywhere. Because your Bitcoin can power what's next. And with Salt, you can tap into your Bitcoin's liquidity without ever selling. Now with rates starting at 7.5%. Salt, providing Bitcoin-backed loans for the past decade.
One of the largest asset management firms in the industry. Maybe you manage tens or hundreds of billions of your clients' capital under your control. I'm sure for many of you, it may not even be that far-fetched from reality. Your head of security gives you a call, and he says, the quantum threat is credible. What do you think your first question would be? I would assume for many of you here, your first question is actually going to be, are our coins safe? And today, that answer would be, it depends. And it depends on one particular thing, right? It depends whether or not your public key is already visible. If the address in which you hold your coins has ever made a send transaction, then your public key is already visible. And an attacker with a sufficiently capable quantum computer running Shor's algorithm would be able to derive your private key from your public key and authorize a fraudulent spend, moving your coins into their own wallet. That's what the quantum threat is. Now, if your public key isn't visible, if your public key or if your wallet has never made a transaction, then your public key cannot be targeted by a quantum attacker. But you're left in this weird limbo, where the moment you initiate your first spend transaction, you reveal your public key and you enter a race between an attacker that can take your private key, submit a transaction, move your coins out of your possession before your spend transaction gets confirmed. Yesterday, those two scenarios were your only possible answers to your clients. You would either have to tell them, no, our coins aren't safe, or you'd have to tell them, yes, they're safe, but they're only safe until our next transaction. Today, there's a third answer. But before I tell you that third answer, I'm going to tell you a little bit about who I am and where I'm from. I'm Damien. I'm the VP of Growth at the Starknet Foundation, and I lead our network's business and commercial units. Our network's core competency is within cryptography. I myself am not a cryptographer, but my job is to bring the work of researchers like Avihu Levy, our Chief Product Officer, into real, tangible products that institutions and high net worths like yourselves can rely on. And the question to me has never been, when will quantum arrive? We all know quantum will arrive at one stage. But the question to me has always been, how long will it take for you to be ready when quantum does arrive? You see, a lot of people have a very simplistic view of quantum, right? They think that quantum's going to come here, it's going to break Bitcoin's cryptography, and all of a sudden, all of your coins will be gone, and the asset, the network that we've been putting the last 10 years into gets resolved to nothing. But in reality, it's not that simple. In reality, every minute will count. There'll be a sequence of coins that will be targeted first, and Satoshis will be the first to be targeted. Thereafter, every address with a large holding and an exposed public key will be next. And there's an uncomfortable question underlying all of this, right? The uncomfortable question about how do you resolve quantum? And that question really is, how much of Bitcoin's ethos do we risk compromising in order to protect what Bitcoin is? And the proposals range from doing nothing, right? Letting the chips fall where they are, letting the attackers take the coins that are vulnerable, and they range all the way to freezing coins that don't migrate in time. I don't have a position on this, right? I don't represent the Bitcoin core community. But each of you, I'm sure, have fiduciary duties, right, to your shareholders, or contractual duties to your clients. And what each of you can't afford to do is outsource your decision-making to a future consensus that may or may not come in time. And so to those of you that I'm speaking about this, the thing that I'm presenting and what we're bringing to market is what we're calling QSB. QSB stands for Quantum Safe Bitcoin Transactions. And in April of this year, we released a white paper, a proof of concept, that detailed what QSB is. This paper introduced a new mechanism for authorizing Bitcoin spend transactions, right? If I take a step back, for a quantum computer to steal your coins tomorrow, what they need is your exposed public key. They run Shor's algorithm, they derive your private key, and they use your private key to authorize a fraudulent spend. Integral to this flow is your exposed public key, but it's also your private key authorizing the fraudulent spend. What QSB does is it introduces a new requirement to move your Bitcoin. QSB introduces a new hash authorization. And so an attacker with a sufficiently capable quantum computer, even if they have your exposed public key, even if they derive your private key from your public key, even if they try to use that to authorize a spend to move your coins out of your wallet, those things are not enough for them to do so. They still need the hash authorization. And as of today, that hash authorization is still quantum resistant. That's the solution we're bringing to the market. What we're bringing is safety for Bitcoin held in addresses with QSB enabled from quantum exploits. And yesterday, we were able to take this beyond a proof of concept. Last night, we submitted the first QSB transaction on Bitcoin mainnet, and I'm very excited to announce that as of, I think, 5 hours ago, that transaction has been mined by Marius Livestream and is live on Bitcoin mainnet. This is a monumental moment. Right? This is the first post-quantum resistant Bitcoin transaction on Bitcoin mainnet today. It required no soft forks. It required no hard forks. It required no core protocol upgrades. And it's live today. And so just to really paint the picture of what this means for all of you here and what this means for us and what this means for your businesses, right? We've built essentially a parachute, right? As we're flying through this quantum storm, we have a parachute in the airplane. Or as we're facing the threat of the impending quantum nuclear war, we have a doomsday bunker. That's what this product is. What this product is not, it is not a cure for quantum. This product is still opt-in. Coins that have lost their private keys or coins that are lost from circulation, those coins cannot be moved into an address with QSB enabled. So Satoshi's coins, coins lost over the years, those are still susceptible to a quantum attack. These transactions are also non-standard, and so each transaction costs somewhere around $100 in off-chain computational costs. This isn't a viable pathway to replace day-to-day Bitcoin spend. And most importantly, this technology is still new. It's innovative, it's cutting edge, it's bleeding technology. And institutions are usually not the first adopters of innovation. So what we are actually offering instead is a safe harbor, right? A contingency plan. We're not asking you to implement this today for your custody of Bitcoin for your clients. But what we are offering you is, on this call at 8:42 a.m. on a Monday morning, when your head of security calls you, instead of saying, let's wait and see what the Bitcoin community will do, you can instead say, let's put in place the approved plan, let's execute the contingency, let's prepare our communications. This is a materially different position to be in. And that's what our team is offering you. We can work with your engineering team today. We can put together a bespoke migration pathway only to be activated when a threat materializes. And we can help you be ready. I can't tell you when quantum will arrive, but I can give you an answer to your shareholders. I can give you an answer to the market, and give you an answer for your clients when they ask you, how safe is your Bitcoin? And so, very quickly on next steps, we're working with a very small number of institutional design partners at this stage for a first round. We're putting together the full process, the preparation, the operational overhead, the approvals, what a manual activation will look like, and what a migration flow will actually be like. We have a second round still open. This is obviously a very intensive engineering exercise across two large organizations, and so the capacity we have is limited, but we are endeavoring to, throughout the next few months, be able to offer this to every team that would like this in the market. And so if this is of interest to you, reach out to me. These are my socials, that's my QR code. Thank you very much, and enjoy the rest of your day.
To the live desk here at Bitcoin Asia 2026. I'm Grace Remington with Sean Hagan, and now joining us on the desk live is Kevin Loaic, CEO of Wizard Sardine. And you just spoke on the cold card hack over on the Nakamoto stage and what comes next. You have a really unique perspective on this whole situation because you were one of the first people to publicly flag this situation on Twitter and kind of help people through it before CoinKite recognized it at all. Can you take us through that day?
Yeah. Pretty much, in hindsight, a catastrophic day for Bitcoin. So what happened is that someone actually pinged me on Signal, just sharing me this Reddit post from the morning where someone was just saying, hey, I lost all my money on the cold card. This happens, people lose money from time to time because of user mistakes, because they got a compromised device, because they took a picture of their mnemonic, because they entered their mnemonic on a bad website. There's a lot of reasons to lose money. So having someone saying, I lost my money doesn't mean there is a problem with Cold Card. But this specific user also shared the actual transaction on the mempool. And when you look at this transaction, it was actually a lot of money that was moving. So probably not just one user. We're talking about hundreds of Bitcoins. Including Bitcoins that did not move since 2021. And this is very weird because if you have access to keys, typically you spend it as soon as possible. When you're an attacker, you're not gonna let it sit there for 5 years. And so this was really weird to see this kind of patterns. And as soon as I realized that, I went on Twitter and I asked, hey, is there anyone that I personally know that could check if they have a cold card and that their money is still on it? Because I just realized something is probably wrong, but I couldn't just trust any random people on the internet saying I lost my money. So yeah, that's just what happened. And it just happened that I was right, despite being pushed back a lot by CoinKite at the beginning. They were just blaming the users, doing user mistakes, etc. I kept pushing back and I said this might be an RNG issue, and it just happened that it was an RNG issue. So I was very, very early on finding out what happened yet.
And Kevin, you mentioned the behavior of the Cold Card organization in this, and being very dismissive at the beginning. People online love to speculate. A lot of people think it might have been a retirement attack. Some people say it was just pure ignorance. You're an expert in the security space and the custody space.
Yeah.
What's your read on the situation? Do you think this was just due to a simple oversight?
I think it's genuinely a very bad bug. It should not have happened. I'm not saying like this is a very well hidden bug or anything. It was not. It was a bad mistake, very bad mistake. But also the fact that it was pretty much obvious for anyone who would have looked hard enough would make it a terrible way to this retirement attack where you're like, oh, I'm gonna steal from my own users later, just because it's been sitting there for 5 years. Anyone who actually spent some time looking at the code would have been able to steal all of this money. So you wouldn't do that for like 5 years. So yeah, I really don't think it's malicious from their perspective. But yeah, a lot of things went wrong. Yeah.
Really great information, Kevin. And I wish we could continue, but we have to go back out to the Nakamoto stage. But thank you so much for joining us. Kevin Loaic, CEO of Wizard Sardine, doing great work for everyone. Let's head back to the stage now. Our buddy Craig Deutsch on stage with a discussion on the market demand for stablecoins.
And it works. So, and that's something we also as Bitcoiners have to admit. We started early in Vietnam in like 2013-14. And there were a couple of years where you had a bunch of startups also in Southeast Asia trying to do remittance with Bitcoin. And it was cheaper, better to do with Bitcoin versus like stablecoins. But after stablecoins got sufficient market penetration around 2017-18, that shifted. And if you are in the business to just move money around, and you care only about the spread which you get, and Bitcoin has generally a higher spread because it's volatile versus like stablecoins. So all the big flows shifted over to stablecoins, and most of the people in this industry of moving money around, they don't care about ideology. They just care about what tool solves my problem.
So, Bitcoin has really cheap fees right now, but what is it about stablecoins? Like Birkan, what do you think? Why are people using stablecoins more than Bitcoin, even though it's cheap to use Bitcoin right now?
Well, yeah, I think that the first answer, I kind of agree with Dominic, and I would say that this has different reasons. I would say that on top of everything, I would put the education first, because like in many countries, specifically, for example, I am originally from Turkey, and over there I see that Turkey is one of the, for example, main countries where stablecoins such as USDT is used for like real economy transactions. And still, even though sometimes a lot of people can afford Bitcoin, Turkey, for example, is a gold bugger. A lot of people still see Bitcoin as just another crypto token, just like they're not well educated, well informed, well studied about Bitcoin. Because sometimes we kind of forget that we're in a bubble, even like we do Bitcoin conferences and everything, but the outside world is kind of too big, and it's kind of normal that the average person he doesn't know about Bitcoin, and he's not just well informed about Bitcoin. Second question would be for sure volatility. Like undoubtedly for a merchant, like for a regular guy, for a regular share who understands Bitcoin, sometimes if Bitcoin, for example, drops for 50%, it's even better, right? He can buy it on a better, and he can do a better DCA. But for a merchant who maybe works with a 3-4% margin for every transaction that he makes, for every product or services that he sells, a drops or an increase of 30-40% can get a lot of complexity. He needs to do a lot of balance and liquidity management, so that you cannot expect this from a small, maybe grocery, small merchant. He cannot think about this volatility while his goods, for example, are in transit to overseas. So I would say this volatility and aggregation it's still, in my opinion, the main reasons why stablecoin is being used more than Bitcoin right now.
Thank you. Yes, I mean, the volatility is really tough for people that are just trying to make it, to pay their bills and to, operate a business. The panel name is Pragmatic Maximalism, which is kind of a play on toxic maximalism culture. And, we're seeing this big change in the Bitcoin culture right now. The panel before us earlier was talking about the cold card exploit. And I'm curious, like, are there, Kishin, like, do you think that we should just be welcoming stablecoins with open arms? Or, like, what are some risks that you might see with the stablecoins?
Yes, so the situation in Japan is a little bit different from what you guys described in Vietnam and Turkey, where there's actually very little actual adoption of stablecoins so far. And one of the main reasons is that the exchanges in Japan do not support Tether. There's no place where you can exchange Tether in Japan. And even then, we have people in the business sphere very excited about the potential of stablecoins. And so this is actually kind of presenting us with an opportunity to introduce Bitcoin payments as part of kind of a package. I think stablecoins, one of the main reasons, I guess, in Japan that we don't have them yet is regulation. So the exchanges can't handle them because of regulation. And the Japanese regulators have been continuously making it more and more difficult to, for example, withdraw funds off your exchange, to deposit funds into an exchange. And because of the way that stablecoins work, I can only see this getting worse. So a lot of the interest is in ways to make it cheaper to do international transfers using stablecoins. But since most of the expense is already in the regulatory sphere, I feel like it would only get more and more expensive to do that as time goes on. If that answers your question. I feel like stablecoins may temporarily be a solution, but in the long run, they will just be regulated into the same cost as what we have with traditional payment rails.
So, the like KYC, the regulations, the closer and closer intersection of stablecoins and Bitcoin might create challenges. I think sometimes people might not realize that a stablecoin is a centralized token. It is issued by a company, and that company can freeze your funds. Whereas Bitcoin is censorship resistant. The fee market makes it so people can pay a higher fee, and some miner somewhere around the world is probably going to accept that higher fee, which is what makes it censorship resistant. One thing I'm curious about, like right now, the stablecoin volume is on Tron, Ethereum, like. We're starting to see people are wanting to bring stablecoin issuance back to Bitcoin, where it's operating on Bitcoin rails. So, like, Birkan, I know that that's starting to happen with RGB. Like, do you see that it needs to be on Bitcoin rails? Is that important?
Well, it is. This has various reasons. First of all, Bitcoin itself, well, first of all, just don't forget that, for example, the biggest stablecoin issuer in the world, USDT, has been actually was born in Bitcoin with OmniLayer, right?
It started on Bitcoin.
Yeah, starting in 2014, and then eventually moved and shifted to other chains because of like physical and intangible reasons. But right now, actually, the scenario in Bitcoin is changed. There's all of these LTUs. We're trying to work about scalability and everything. And Bitcoin, it has some unique features that it actually can help the stablecoin adoption. Stablecoins itself needs Bitcoin, in my opinion, and Bitcoin needs stablecoin too. Why? In my opinion, the first reason ever would be, for example, the privacy feature that we could have on Bitcoin. The privacy level that you have with stablecoin on Ethereum, for example, which is where one of the major flows is not even comparable with the one that you can have with Bitcoin. With RGB, for example, with the use of client-side validation, you keep all the data only client-side, and which is very different than a global consensus. So think about, for example, a big company or a big bank who wants to send $10 million. He cares about if this money is seen or not. The second reasons, in my opinion, would be the possibility and the potential that we have with the Lightning Network on top of Bitcoin. With the Lightning Network, you can basically use the stable coins in a peer-to-peer way, with a better privacy, and you can basically, since Lightning Network, it's this interoperability layer, you can route all of those between LTUs. So you can enable atomic swaps and making sure that, and basically doing something that Tron cannot do. So I would say that stablecoin adoption needs Bitcoin more than ever. And the volumes, for example, that stablecoins coming into Bitcoin would help Bitcoin ecosystem, would help Lightning channels, and the attention. Because like every attention that you're taking out from Bitcoin and you're giving it to other chains, you're helping the other chains. We want all the attention to Bitcoin.
Yeah, we want to bring everything back to Bitcoin is my personal take on it. Dominic, you run an exchange, right? And so, can you tell us more about what you're seeing with the demand for stablecoins? Like, do you think it's that people want the dollar, or do you think that they like the digitization of it? Like, what are you seeing, and why do you think that is?
We also run, for example, a couple of Bitcoin ATMs where generally the less sophisticated users go to. This is just like tourists which come to Vietnam, for example, and try to cash out some of their money into the local currency. And the questions which we have received, like 9 out of 10 customer service questions upfront, was essentially, hey, can I also cash out my USDT on this machine? And then we told them, like, no, that's a Bitcoin-only machine. And they're, oh, I don't know how to use Bitcoin. This is a reality that nowadays we have on the world probably like easily 10 times as many stablecoin users than Bitcoin users. And we as a Bitcoin community need to think hard about, like, okay, how do we do something about it, which is not like ideological, like, hey, you need to learn about the creature of Jekyll Island, whatever, and why stablecoins are a bad thing. People don't care. They care what works. And right now, stablecoins, for better or worse, take up a lot of this market.
I mean, the revolution will not have good UX. And right now, Bitcoin doesn't necessarily have that. And it seems like the stablecoin market does. So, is there something that Bitcoin can learn from this? Like, do you think that Bitcoin will, like, become a Trojan horse through their stablecoin industry? I guess, Keishan, what do you think? Like, why do you think these stablecoins are kind of a Trojan horse for Bitcoin?
Yeah, I'd say it goes both ways for sure. We can see that, so we, at Japan Bitcoin Industry, we run kind of a off-ramp, I guess. We would say like a gift card store that only accepts payment over the Lightning Network. Like we don't accept stable coins or even on-chain Bitcoin. And we've seen pretty steady use. And I mean, all in all considered, like even with the privacy, I think Lightning payment UX is actually not as bad as people like to complain about. They just don't really realize what they're giving up by reusing addresses and doxing their entire balance and all of that. Again, like I think in Japan the interest in stablecoins is not for remittances. Most people do not remit internationally in Japan. I think 99% of people have never done an international remittance in Japan. But the interest is more in consumer payments, especially for online content, say manga or anime. A lot of that is not serviced by the US-based credit card networks because they don't want to be sued for potentially legally ambiguous content. And so these companies are looking into ways to increase their revenue, and they don't really care if that revenue comes in Bitcoin or stablecoins. They don't really care if it costs 5% to transact, because it's revenue that would otherwise not have happened. And I think once we can bring that to market, we're working on that right now, once we can bring that to market, we can kind of show that, I mean, stablecoins have their value, obviously, but so does Bitcoin. And a long way down the road, I think, as I mentioned before, we end up with stronger regulation on the stablecoins, and Bitcoin's a lot harder to regulate internationally. So yeah, I'd say it's a Trojan horse for Bitcoin in that it's giving us an opportunity to kind of piggyback off of the stablecoin hype. But also we need to be careful in how we integrate these products, because otherwise we may end up with a very permissioned definition of Bitcoin payments.
Birkan, do you see any concerns around the stablecoin integration with Bitcoin, or do you think that ultimately it's positive and it's going to be almost impossible to regulate Bitcoin through the stablecoin industry if it's built on top of Bitcoin?
I think there's a different market for everything, and there's a different market for every end user. Stablecoins have a specific market, have a specific portion of end users, and sometimes this portion of end users are willing to do all the process, are really to go into all the steps of the KYC, for example, to get to be able to do that transaction with stablecoin. And if you don't, you just can't use Bitcoin with no KYC. I was just discussing before with a friend. I don't think eventually, even though, for example, right now the whole stablecoin, all of them combined is like about the total market cap. I guess it's like a little more than 300 billion. Even though this is going to be into 1.5, 2 trillion, and hopefully some of those will be absorbed by Bitcoin. I don't think this will affect Bitcoin in terms of regulation, in terms of like influence on the price and everything. Because I really think these are just different targets, different segments, and if Bitcoin wants to be regulated in some country, or stablecoin wants to be regulated, and so Bitcoin eventually, you will always be having another country, another regulation, another government who's willing to do like a different approach. Or you will always, what I think is that anything is black and white. You will always have a lot of tons of grays where you can basically kind of play around and you can do arbitrage. So I'm not that concerned, to be honest.
I want to go back to the culture side of things. You know, Bitcoiners were prided themselves on being toxic maximalists. And I think that started the shift somewhat with the, the invention of ordinals, where, maybe some Bitcoiners thought that, hey, this is a cool thing that's being built on Bitcoin that used to only be on other chains. And then some Bitcoiners were the monetary maximalists, potentially even just recently forked themselves off the network because they were so against anything else being done with Bitcoin. So like, Dominic, do you think that culturally we're in a new paradigm? Do you think that the toxic maximalism is dead? Do you think it served Bitcoin? Like, what do you think about the culture of Bitcoin and how it's changing?
Okay, so since I'm also have been still involved into like some of the Bitcoin communities back in Frankfurt, but also here in Saigon, I know how important it is to guard the community from like all this kind of crap. Because especially Vietnam, but certainly also quite a few other countries, if you don't guard this community well, it gets overrun by people who are just coming to extract value. And for this reason, we have like very tight vetting process, like in the Saigon community, and also like the other communities in Vietnam adopted this essentially. With that said, some of this like toxic maximalism was more like type of an identity thing, where like people just chasing virtue points online. It's not really helpful to actually, if we are talking about practical maximalism, like to identify how can we increase Bitcoin adoption on a level where it actually solves problem for the users. Rather, it's just like, okay, who can yell the most at some other people because they're not purist enough? Makes you feel good, maybe, but it doesn't help the cause. And that's why I think like we really need to shift like looking at other things, what's going on, without like just having like this hyper-allergic reaction to it, because yeah, that doesn't help us. We need to realize like stablecoins are a thing, a few other items are a thing, and we need to look at why does it work and what can we learn from it.
So, you know, when I first joined Bitcoin, my recollection of the narrative was that anything worthwhile would end up being built on Bitcoin. And so, you know, going back to like the ordinals, whether or not you think it has value, whether or not you think inscriptions are dumb, you know, it's a piece of technology that is being added to Bitcoin that was originally just on other chains. And I think that with stablecoins, even though they are initiated or were started on Bitcoin, they're kind of coming back. And so, you know, when we're thinking about Bitcoin as a culture and Bitcoin as a technology, like, do you ultimately think that these other tools being built on Bitcoin are useful, or do you think that, you know, Bitcoin should only be money and it should just be the Bitcoin, the asset, as money, and not even, you know, the network just being used to facilitate Bitcoin transactions? Keishan, what do you think about that?
So I think Dominic brought up a great point about the scams, and I think we do need to actively call out scams, because people kind of view the entire crypto space as the same thing, and that means the scams reflect poorly on Bitcoin. Whether we like it or not, whether it's true or not, that's how people seem to see it. So that's one thing that we still need to do, but I think we over-fixated on that a little bit too much. There are other things that we should be highlighting, the positive aspects of Bitcoin, which are basically freedom, cutting out the bullshit middlemen, cutting out the bullshit regulations, all of these things that can add value to people who use Bitcoin. We need to be more celebratory of those things, and I think celebrating those things is, and you know, policing use cases is contradictory. So I think we do need to be more lean into the freedom more than you know, policing use cases on Bitcoin.
Yeah, I mean, I agree with you, and I think that has always been, I mean, that's the birth of toxic maximalism, right, is there were so many scams, so many people that were getting burned by false promises, and, you know, that's where the Bitcoiners were like, no, Bitcoin's different, it's different than crypto, and basically made everything else is a scam, or a shitcoin. You know, you mentioned the basically like trusted third parties, and as Nick Szabo says, like trusted third parties are security holes. And even in the white paper, it says, you know, all the issues of banks is the trust that's required for it. So, you know, Birkan, like we're talking about reintroducing third parties when we're talking about the stablecoin issuance. So, you know, what's your take on that?
Well, I would say that first of all, you always need like a money for doing different things. In Bitcoin itself, as we always say, there's Bitcoin as money and Bitcoin as protocol, and Bitcoin as protocol actually enables all of those. So coming back just to the maximalism debate, I would say that maximalism, if maximalism is defending Bitcoin, these had different narratives in different times. In 2013 was different, in 2017 was different, and today probably should be different as well. Right now, in my opinion, should be even wrong to defend Bitcoin by saying that stable coins are wrong, because basically you're damaging Bitcoin in that way, because you're allowing that the flow is going anywhere else and the attention is going anywhere else. Regarding third parties, you're absolutely right. There are going to be third parties, but there are third parties anyway when you're dealing with exchanges, with KYCs, and when you're dealing, for example, with wrapped Bitcoins. Let's say that you want to trade and you want to play around with wrapped Bitcoins, with other memes, other tokens. You want to avoid to not have those, even though you want to have stable coins. So I don't think stable coin is the reason why we'll be having third parties or we'll be having scams. You will have those anyway. And if you want a full control, full custody of everything, of your wealth, of your money, you can just use Bitcoin. Stablecoin is not by solving this problem. This problem has been solved already in 2018 in 2008 by Satoshi. Stablecoin is just a matter to just make something faster that is right now Bitcoin is not ready to do, and this can help Bitcoin and vice versa. Yeah, there are going to be third parties, but there are third parties anyway.
Yeah. So, you know, we're running out of time here. Dominic, do you have any final thoughts about this? Like, do you think pragmatic maximalism is the way to go?
Just to catch on what he just said. Bitcoin essentially also forced the emergence of stablecoins in the first place. Because we had before already like quite a few attempts of people building like these kind of shadow banks where people can just move money around. Maybe you remember like in the very early days, what was it called, Liberty Reserve or something like this. So you could exchange this for Bitcoin back in the day. That guy also got busted, thrown into jail, money laundering, whatever. But then when Bitcoin, like 2013-ish to 2017-ish, started really taking up market share, and was in the same time like Tether came around and some of the other stablecoin companies later on, they didn't get thrown into jail. There was probably some reasoning at some point like, okay, this Bitcoin stuff is providing a challenge to us. What can we do to like put the lid back on? And letting stablecoins getting away with like very light regulation was like one way. And so far it has succeeded for now, which doesn't mean that not down the road at some point the regulation will come back into force here.
Thanks, guys. We're out of time, but actually our next session is going to be talking about stablecoin regulations specifically. So thank you, everybody. Appreciate it.
Thank you.
Welcome back into the live news desk at Bitcoin Asia 2026. I'm Grace Remington with Sean Hagan, and joining us now is Damian Chen, VP of Growth at StarkNet Foundation, and you're joining us fresh off a really cool announcement from the Nakamoto stage. You just pulled off the first quantum secure Bitcoin transaction ever on Bitcoin's mainnet. So for someone who's never heard of quantum computing, why should a regular Bitcoin holder care about what you've just demonstrated today?
Yeah, that's a great question. It's also really nice to meet you guys and to be here. I would say quantum is an ever-looming threat for Bitcoin holders, right? The idea is that someone, or one day when quantum technology is sophisticated enough, it can run what's called Shor's algorithm and derive your private key from your public key. If you've ever made a spend transaction on your Bitcoin wallet, your public key is available. And then with both of those, they can authorize any transaction, even if it's fraudulent. And so they can move your coins from your wallet into their wallet, and then you lose custody of your coins. Of course, the broader implication is really just Satoshi's coins and other dormant coins that have been lost throughout time. Those being taken by North Korea, market sold. It's like just a big looming threat on the outlook of Bitcoin.
And you know, how big is that threat? How time sensitive is that threat? Obviously, this is something you're thinking about over with your firm. You know, you're making these solutions for it. Do you feel like you're in a race against the clock here? Or do you think there's a little bit of breathing room to try to figure something out?
Right. I want to preface this by saying that I'm actually not a cryptographer by trade, right? I'm the VP of Growth. I take care of our business divisions. But our team behind us, like the 100-strong engineering team at Starkware, they're all like engineers and cryptographers by trade. To them, they won't really give me a definite answer, right? They say 2 years, 5 years, 6 months. I don't really know. I think the main thing that I'm focused on is optionality. For people like institutions, like custodians, like centralized exchanges, they need to have a safety net in place should this actually ever come online.
So bring us back to your announcement on stage. What exactly did you announce? For those folks at home that maybe are just now tuning in, or maybe they're watching a recap, help us understand. This went through Slipstream, I believe. It's a non-standard transaction. But what does this transaction look like?
Yes, so what we demonstrated overnight is what we're calling QSB, so a quantum safe Bitcoin transaction. It was first published in a white paper, I think in April, by our chief product officer, and in it introduces an additional component to signing a spend transaction on Bitcoin. Instead of just relying on the private key, the ESTA signature, it introduces a new hash component to it, which is quantum resistant. And so if you have an address with QSB enabled, then coins within that address cannot be moved out just with your private key. It still needs to go through this hash authorization, which today is quantum resistant. And so by moving your coins in, you effectively have quantum resistant tokens on Bitcoin mainnet live today. And that's what we demonstrated overnight.
This is all really fascinating, and I'm really thankful you're sticking up here with us for the next segment, because we have to go back to the stage, but I want to hear so much more from you. We're going to take you back out to the Nakamoto stage right now for Casper Wong, CEO of Web3 Labs, on stablecoin regulations in Asia. We'll be right back.
All right. Once again, my name is Craig Deutsch. I'm the Director of Programming for Bitcoin Asia and all of the Bitcoin BTC Inc. Bitcoin conferences. We've got another one coming up in Amsterdam in early November. Hope some of you can make the trip. Our next year's event is going to be in Bitcoin Nashville, Bitcoin 2027. We're going back to Nashville. Really hope some of you can make it out. That one's our biggest one. If you think this is packed, you should definitely come out to Nashville. So our next panel, we are welcoming out Casper Wong of Web3 Labs, Andy Leon, who's a best-selling author, Benjamin Quinlan of Quinlan and Associates, and Ben Berenson from Asia SGE. Let's give it up for them.
Good afternoon, everyone. Good afternoon, my friends, my bro. Welcome to the panels in Bitcoin Asia today. We are tackling a highly critical topic. How will stablecoin regulation shape the Bitcoin's institutional adoption in Asia today? So I think everyone knows stablecoins are the bridge between traditional finance and the crypto and Bitcoin ecosystem. I think as regulated across Hong Kong, Singapore, and some of the and other cities in the world, I think the big question is, will these rules act as a catalyst or institutional Bitcoin adoption or a bottleneck? So we have a very strong and leading lineup today. So let's start it with a very general questions in this topic. I think Asia is not only a single market. I think it is highly fragmented with different approach in Hong Kong, Singapore, or even US and elsewhere. So how does the fragmented stablecoin regulatory landscape complicate an institutional ability to build a unified Bitcoin strategy in Asia? Andy?
I think in order for this to be more unified, in Asia, most of us would think that Asia, operates like a block together, but actually it's not, right? Each country is having their own rules. For example, if you look at Hong Kong, they are more institutional driven, right? You can see a lot of very active sales guys going around. If you go to Singapore, it's more from a payment perspective. Right? We talk about strong AML, we talk about a lot of these rules and regulations around payment. And then if you go to South Korea, for example, they are more, maybe more innovative, but at the same time, because they have restriction in their capital control. So it's actually very difficult for Asia to sit down and work together. So maybe like what CZ said the other day, maybe we should have a more unified set of rules, maybe like a passport, that you could use it throughout the whole of Asia, or maybe even in ASEAN, for a start, because at least ASEAN is a block of 10, right? So I think with more unified rules, with clearer rules, things can move a little bit further and faster. And again, this goes back to some of the things that I've said, from my regulation days where we talk to regulators. We often tell the regulators to always, keep yourself in an open position, right? Have an open mind, have a good set of regulations, but not overreaching on everything. If you start to overreach on each and every aspect for stablecoin, it is very difficult for you to move, from country to country. And the stability will not be there. And if the stability is not there, and that will not attract big capital flowing in. So that's my few cents worth on that topic.
I think there's a huge dependency on the access model into the underlying asset. If you are an institutional investor and you are investing indirectly through ETFs or other related products, the stablecoin regulations are, quite frankly, irrelevant. I think if you are looking at a direct access model, then it fundamentally will reflect upon your risk appetite to use non-regulated and/or regulated stablecoin on-off ramps. And for certain institutions, this will really matter. For others, I think far, far less so. So in terms of creating what I would call a highly fragmented Bitcoin strategy, not so much, but maybe a fragmented local digital asset allocation strategy, maybe. because that's going to be very jurisdictionally dependent. And I think the liquidity associated with a particular underlying asset in a market would have some bearing on whether the on-off ramp into that channel is governed by a regulated stable or not.
I like what's been said. I think that the key word that I heard was unified. And when we work with clients and they want to move cross-border, they're thinking about how to do it. Normally they go and they ask lawyers, but it's not really a lawyer question. When you're looking at unified and looking at regulation, in my opinion, it starts with operations. And when you know how to build an operation in the right way, you gradually kind of fit yourself into the local regulation. There's no pan-Asia unified system. Passport is a very nice thing to have, and I think that today, if you go to a regulator and you show them a list of other licenses that you have in other, in other jurisdictions, it favors you. But in reality, there's no pan-Asia. It's very local. I think that the approach needs to be local as well. I think that the understanding of local strategy versus a cross-border view is the way to go. And it starts with how you really build yourself within a jurisdiction to understand both the regulatory risks, but also how you can scale a business in a way that makes sense. But one more thing that I think makes sense from a unified, for that unified type of question is operators need to remember that it's never seamless. It's never a clean slate. There's always issues. In some point or another, a regulator or someone will come and knock at your door. And when they come and knock on your door, then starts the blaming game. And if you have a passport and you can get licensed in different jurisdictions based on one authorizer, then who do you blame when things go south? And I think that this is really the main caveat in that.
May I share more information about stablecoin license or stablecoin ordinance in Hong Kong to all of our participants? I think specifically in Hong Kong today, the Legislative Council and Hong Kong government have passed the legislative ordinance from last year. And two licensed stablecoin issuer is going to or will issue the licensed stablecoin in Hong Kong in fourth quarter. So I think a lot of people or a lot of our participants are commenting the ordinance or the law in Hong Kong. So I think when we're talking about regarding the law or the stablecoin ordinance over the world, I have other questions I want to explore with our team is that, do you believe that comprehensive stablecoin regulation will be the ultimate catalyst that open the floodgates of Bitcoin institutional adoption in Asia? Or could over-regulation actually become a bottleneck for promoting this? How about we start with by Ben?
Yeah, no, I like this question. I think it's a really good question. I also think that the secret sauce behind that question is not particularly about only crypto. A good example of that is South Korea. When South Korea lifted the ban, it was a long ban in South Korea. They lifted the ban on crypto trading for institutions. And suddenly, I don't remember the number, it was a huge $300 billion, something like that, flew in the first quarter. But then, reasonably soon after, they introduced a new tax regime. And it dropped that volume by, I think, 70 or 80% very soon after. So I don't think it's particularly the question of very comprehensive regulation versus how do you loosen that. And normally when you introduce a regulation, it will be a very tough one until gradually you understand where are the right places that needs to be loosened. That's what supposedly Sandbox is about. But in reality, look, if you look at Hong Kong, great announcements. I was in the room when Eddie Luke introduced the HKMA stands for priorities for the HKMA. And everyone are aggressive. Everyone thinks that there's like this big few years coming up. But at the same time, as an example, Hong Kong also introduced end of last year new framework for cybersecurity. Cybersecurity is a big threat when you look at crypto players, phishing attempts, hijacks, whatever. And when you look at that and the very particular points around that, you see that this impacts every big player in the crypto industry. No one asks how this impacts that. People focus only on the big buzz around stablecoin. So to go back to the question, does comprehensive legislation matter? Is it important? Should we look at it through a certain lens? We should. Protection for the John Does, the John and Marys is very important. I think retail is a big market, and at the end we need to think about the third person in the street and how they're going to adopt crypto. From the other hand, yeah, we look at it from a different lens because we're, long time in the market, we're purists, we want Bitcoin to be adopted, Bitcoin to be used everywhere. How do you compensate that gap? I think that's the big question. And it's across broader regulation and cross-border also.
Benjamin?
So if you look at the stablecoin ordinance in Hong Kong and the regulatory posture of this city, there were two issuers that were recently approved by the Hong Kong Monetary Authority for their license. And they were two of the three note-issuing banks in Hong Kong. There were a lot of applications that went in for a stablecoin license. One of the core things that I believe was front and center of regulatory agenda is not to create additional walled gardens of closed ecosystems where these stablecoins could benefit a particular company or an issuer without having the wider adoption of the general public. And I think this was an important step to building that trust in the broader public of this being an equivalent type of currency as to something they're familiar with because it is ultimately backed by their note-issuing banks. Now, would this matter for traditional institutional crypto investors? I don't think they care. I think they've been using various unregulated stablecoins for a long period of time, USDC, USDT, but if a regulator decides they ultimately don't want those unregulated stablecoins circulating in their jurisdiction, then it will create a natural impetus for these regulated stablecoins to be the correct and regulated and compliant conduit as an on-off ramp into Web3 assets. And that's very important. And it will matter for certain more conservative institutions because they will invest in an asset from a fiduciary perspective that may be regulated. They will do it through a platform that is regulated, but the on-off ramp at this point in time is not regulated. So I think that provides that last leg of regulated bridge. Of course, there's a lot of other regulations, but just in terms of the access to the underlying asset, for some institutions, this will matter. And for retail, it really will bring a level of at least investor protection, as Ben mentioned, that I think people can feel a little bit more comfort with vis-a-vis an unregulated stable.
I would say from another point of view, right? I think the institutions are not worried about regulations, but they are more worried about uncertainties, right? Some of them, they are literally not certain whether, example, they start a fund in Hong Kong, for example, or maybe they start a fund in Singapore, for example. What kind of restrictions they can be imposed, to some of this stable coin that is in their system, right? And most times we will always talk about this stable coin context, from a US perspective, right? But if you see the table with some of these government guys and the regulators, for example, I think there's a clear distinction between a private stablecoin versus some of the things that we are talking about here, which is more like a tokenized deposits, right? So the word stablecoin is kind of loosely used in many different aspects.
But in our conversation here, I think it's very clear. You know, we talk about risk. You know, we talk about different countries, how they're going to do that. But to me, I think it's still about the uncertainty, right? As long as the certainty is there, the regulations is ironcladded, everything is there. I think that will not stop any institutions from adopting stablecoin. In fact, if we slap the traditional finance rules onto all these new stablecoin, that could become a deterrent, you know, in my opinion. So it's kind of hard to, you know, to give a definite answer, man.
I want to jump in one more time. Okay, we're in Bitcoin Asia, right? And Bitcoin Asia, we need to give some room for Bitcoin also. And I think Bitcoin, I'm a Bitcoin maxi, I believe in Bitcoin. And I think that, you know, like any fiat currency, the strength of the currency is the strength of the economy and the flag behind that. And we all believe in Bitcoin, otherwise we probably wouldn't be here. When we look at that, we can take China as a really good example. When China banned completely crypto, it didn't mean that the crypto appetite went away. And this is an extreme situation. When you look at other countries and you see how regulations being developed, the one thing that you can always sit down and tell yourself is, my Bitcoin is good. My Bitcoin, I can stay maxi. So for me, it means also from a payment perspective, that if I'm in Singapore or in Hong Kong, and there is a stablecoin issued by HSBC, I cannot use it cross-border, or unlikely at this point in the near future. But if, instead of looking at stablecoin as a settlement for Bitcoin, you can look at Bitcoin as a payment mechanism where the final leg settlement would be with a local issued compliant stablecoin. You have 2 issuers in Hong Kong, but you have about, almost 300 in the world. Out of them, close to 90% of the volume is between 2 coins. And one of them is by far dominant, and it's unregulated. And we trust it because it's always been there. But we can also trust Bitcoin because it has always been there. Point being is, you can try to take a Bitcoin as a center, as an anchor for your strategy, cross-border payment, settlement, and approaching to banks. How do you approach banks in terms of assets, rather than focus your strategy around stablecoin with hindrances towards Bitcoin? Does that make sense?
That I agree totally. You know, in fact, if it's a Bitcoin, no, if it's a Bitcoin strategy, I think it's a bit more sexier than what we see right now. And use Bitcoin as a credit system would be an even more sexier thing, in my opinion. But the biggest problem is right now, the TradFi guys are talking about TradFi. The so-called crypto guys are trying to, you know, go back to the more centralized mode. But the best way to really look at is to really get the bank guys to really come on-chain, right? Reap the benefit and the yield on-chain together with us, right? And then, of course, when we put our money into the banking system, you know, of course, we you know, they reap the benefit from us, right? So if there isn't this pull and pull relationship, it's very difficult for us to come up with a foolproof strategy for people to move on. So maybe the only strategy is to stick with Bitcoin. You know, that would be great, you know?
I'm sorry, gentlemen. I think time flies. We only have around 1 minute for each other for wrap up. How about like this? I want you guys to share your views to the future. Yeah. What do you think about the stablecoin? How do we shape the Bitcoin ecosystem or the whole cryptocurrency system in the upcoming future? And for example, like 3 years, 2 years. I think we have 1 minute for you, for each of you, for wrap up. Benjamin, how about you? How about you first?
Well, ultimately, it would be really nice if it's not stablecoin for the sake of just purely investing in Web3 as that bridge. I would love to see the real impact of stablecoin being that it becomes almost indistinguishable for me in the real economy. When I open a payment app and I have a look, I have a stablecoin balance in there, I know that I can go and pay at a merchant with that. I know that I can also invest back in the market with that. The future is ultimately about the ability to discern between what is a stablecoin as a digital asset versus a stablecoin being the equivalent of a digital fiat. And that would be the hope for the future, because that transportability between Web 2 and Web 3 worlds is really where you're going to unlock huge value in the future potential of stables.
Andy.
I would say that the future will be on-chain, right? Like I said very briefly, everything should be on-chain. They reap the benefit from the on-chain stablecoin, maybe backed by some Bitcoin fund or something, and then it will just be a win-win situation, right? But we should also understand that the future is not only about Web 2 or Web 3. I wrote a book about Web 4. So the autonomous intelligence is going to come in, and that is also going to create a hell lot of money flow and capital inflow. So I really hope to see more activities on-chain than what we are seeing right now that are all residing with the banks, with the centralized exchanges. We should go on-chain, man.
Yeah, I totally agree. I think I'm working quite a lot in the tokenization space, and definitely see the future on-chain. If it's wealth management, trading, other means of settlement, compliance, you can see that really everywhere now, and big banks are stepping in also. So that's definitely the way. What I do also see is that banks are very slow. They don't know how to develop that across the entire bank. And when we look at big banks cross-border, even more complicated with global macro elements. So in reality, I think that we need to rely on coins like Bitcoin, or unfortunately unregulated coins like USDT. I'm sure that if we ask the audience, there are more Bitcoin holders here than USDT holders, because who holds USDT for no reason? And I think the future is bright. I think it will take some time. I think payments is a bigger focus right now rather than big banks and big regulations. But those things are in the right direction. So I'm bullish.
Thank you, Andy, Benjamin, and Ben, the incredible insights. Please join me to give another big round of applause to my panelists, and enjoy the rest of the conference. Thank you very much.
Welcome back into the live news desk at Bitcoin Asia 2026. I'm Grace Armington with Sean Hagan and Damian Chen, VP of Growth at Starknet Foundation. We were talking to you about the quantum secure Bitcoin transaction you showed us live on the Nakamoto stage earlier in the day. And we just want to hear a little bit more about the Starknet Foundation and all the important work you do.
Yeah, look, the transaction was just a huge milestone, right? Like, it went from being a proof of concept, a white paper 5 months ago, and now it's actually live on the network. We wanted to do this first before we came out with any product, just to show that it actually works. And so now the next step for us really is going B2B and finding institutions being like, hey, we have this fail-safe in place, there's a parachute, would you guys like to have it and be able to deploy it should the need ever arise?
Absolutely. And as Starknet, you know, you're obviously thinking about protecting customers, protecting people using Bitcoin. Are you thinking about privacy as well? I know you have a whole suite of products.
Yeah, at our core, Starkware is a cryptography company, right? And so initially they deployed their innovation, ZK Starks, onto Ethereum, which allowed for scaling the blockchain to have much higher throughput. Core to the actual math behind their cryptography is privacy enablement. Our public network today, well, previously didn't have private enablement. We just turned that off. But recently we've turned it back on. And so what we actually allow on Starknet with Stark20 primitives is every transaction you have, every balance you have, every send receive, that can optionally be private. And it's something that we can enable with our technology quite easily, and we can bring to other networks as well.
And on top of that, you know, with Starknet building on multiple chains, what's your outlook for building on Bitcoin, right? You know, are there things that Bitcoin can do to expand usability with things maybe like from the computational lens or through the stablecoin lens? without requiring kind of a core protocol upgrade, or do you think something that extreme would be needed?
Well, one of the things that we were really big advocates for were Opcat, right? Opcat is a proposed core protocol upgrade to the Bitcoin network, which adds a new Bitcoin script, and it would allow for us to actually deploy our ZK stocks natively on Bitcoin itself. Obviously, it's a big change, but we think that it's a necessary change. It's one of like the original. It was one of the original scripts that Satoshi had recommended for the Bitcoin network, but then had turned off before it went live. We think that it's necessary because it enables unlimited scale. If we could have stocks on the Bitcoin network, what we could have is proofs settled directly on Bitcoin, transactions happening off-chain, and for those to all be verifiably proven on the Bitcoin network itself.
And do you think that there's a kind of a market impact of that, right? Do you think there's capital that might be sidelined waiting to engage with Bitcoin? Right now it's currently in the broader crypto ecosystem.
Yeah, that's a great question. Look, I think the way that Bitcoin has developed has necessarily meant that the rise of centralization services around it has proliferated, right? Like custodians, exchanges, the way that people send and receive, like most of those things go through like a big company. And that's because the network itself is primitive and it's designed to be primitive so that it cannot be breached. I think if we did do a protocol upgrade and more compute could actually go through Bitcoin natively while still maintaining decentralization and safety and all of those things, it could open up a new market. Like that's the whole idea behind Bitcoin scaling and Bitcoin L2s. And we think there's a way that it can be done correctly.
I'm curious, if you had to bet, what year does the world actually need this kind of protection to be in place and ready to use?
Oh, that's very interesting. I don't know. I don't know.
Put you on the spot there.
No. I just think, I think decentralization and like decentralized trading venues is one of those things that people don't know they need until they definitely need it. And the way that, I don't know, decentralized venues have grown with like Hyperliquid versus Binance, right? You wouldn't necessarily have known that you needed a Hyperliquid when Binance was around. But then you have regulatory crackdowns, and then you have issues, and you have KYC, and you have all these things that add to this demand. And so I wouldn't be able to give it an exact date, but I do think it's going to come at some stage, and that people will look for these alternatives.
Well, this is all really fascinating stuff. Thanks so much for sharing your work with us, Damien Chen, VP of Growth at StarkNet Foundation. Enjoy the rest of your time here at the conference. It was great to hear from you.
Thank you, guys. I've really enjoyed this. Thank you very much.
Great meeting you.
We'll go back to the Nakamoto stage now. You'll see a little bit from our friends we had earlier on the show, Randy Hipper and Anja Dragovic, for a little 101 refresher if you need it. Let's go back to the Nakamoto stage now. We'll be right back.
As Miss Teen Crypto, I started in crypto when I was about 17 is when I created Miss Teen Crypto in April 2020. So now I'm 23. Basically grew up here, and my goal from day one has always been to change the world and spread Bitcoin adoption and to empower my generation and everyone to know that they could own money that can't be censored and to be able to escape inflation and have a better future for everybody.
Hey everyone, I'm Jake. I'm from Ohio, and I got into Bitcoin through, actually I was into trading, and then that made me, and I found Bitcoin, and then you go down that rabbit hole like everyone does. And then I eventually got into content creation, and now I do content creation, and I cover emerging systems. So I cover how countries are changing, I'll cover how a country might be using crypto. And so I'm just an educator, and I like to explain where the world's going and how you might position yourself. And I love Bitcoin too, so.
Hey guys, I'm Adam, Australian but live in Panama. I'm the old guy on the panel. I'm 52, retired. I love Bitcoin because I'm morally opposed to having to ask permission of mummy and daddy banker to use my own financial power. And so I love spreading the Bitcoin gospel to teach people what real freedom actually feels like.
Amazing. So I just want to say we're still very early in Bitcoin. How do you hold your conviction when there are so many smart people telling you still that you're wrong?
You know, when I first started my brand, I was in high school, and I remember a guidance counselor coming up to me asking if I was okay. They were like, "Randy, are you okay?" I'm like, "Why?" And he said, "Because even the teachers are talking about me, students and teachers, because he said they just don't get what you're doing." And that is why I really was motivated to educate, because when everyone says no, that's when you say yes. And you have to double down on your conviction, because I did my own research. I know what Bitcoin is, and I know that the future future of money is digital, it might as well just be something we own. So once you have that core fundamental understanding of what you're investing in or what you're a part of in general, it makes it a lot easier.
For me, I really like things that just make sense.
Yes.
And I like things that are simple. And everything to do with our financial system in America is complicated. And I like really simple things. Having a system that's mathematically built in with inflation just makes sense. It's really simple and easy to transport around. So it's really easy to hold my conviction because it just literally makes sense. And then, people will discover it on their own, and I try to help educate people and do my job. But, ultimately, everyone's going to figure this out at some point. So.
Yeah, I think the biggest thing you can do for conviction is actually use Bitcoin. So many people come to these conferences, and when you first get into Bitcoin, there's a saying, we come for the money, we come to get rich, but we stay for the revolution.
Yes.
And that sort of crossing happens when you actually start to get paid in Bitcoin and you transfer and you pay someone else in Bitcoin. That's when the penny drops about how powerful it is. And if you learn to run your own node and you learn to actually use the network, then the conviction starts to really sink in.
Absolutely.
All right, now I'm very curious to learn, was there a time in each one of your journey where you really felt that your conviction was challenged? And do you want to tell us about that time?
I think when I started my brand in 2020, it was right before Bitcoin flew up to 69K. And when it came back down, everyone was all doom and gloom, Bitcoin's dead. And then that's when I started my second podcast called The Daily Zest. That's almost at 900 episodes today. And it was because I knew that we were in the right place, but it just didn't seem like that because it was the wrong time. And then Bitcoin went up to 126K and then went back into the trenches. And then again, people are going to try to push your button and say, well, you know what? Bitcoin's dead. And then after these hacks and every company goes up and it comes crashing right back down, it's because this is a new industry and the bad needs to get cleaned out so we can keep moving up. Every time we had an FTX or a cold card incident now 4 years later after that, there's always going to be something that the media tries to portray as the end of Bitcoin. But when you're living in this space for as long as I have, being and knowing about Bitcoin for 10 years, I just know this is unstoppable.
Yeah, I mean, the similar answer. When the cycles just happen naturally, and yeah, when it's not hard for everyone to see their net worth go in half. But when that happens, all these events happen, and then there's a point where it just something will happen, then the cold card thing, and then it doesn't even really go much lower, and then that's when everyone's kind of lost hope and stuff. That's when the cycle usually rebounds. So you get used to it. I'm new to Bitcoin as well, 2020, 2021. So I started in that first cycle, and then when it goes down, and it's always a little tough, but I just was deeply believed in at that moment, and that was thankfully a great time to accumulate and be more interested in the topic. So
you know what they say, when there's blood in the streets,
Exactly.
Yeah.
Yeah. It's a great question, Anya. The thing that shook me most, and I've been through 3 bear markets now, was the recent cold card hack. And I think as a community, we need to be able to talk about that in real terms, because that really, for the average person, and we want Bitcoin to be there for the average person, that really shone a spotlight on a vulnerability that so many people missed. And the people who shipped the device with, verify, don't trust, the irony of that, right? The one sticker on my laptop was verify, don't trust from the cold card that I had. Fortunately, I didn't lose funds, but I think that's the only thing that's shaken me, and I think it really does. I think the panel earlier was correct. We're going to come out stronger. But I think for people in the room, if you're new to Bitcoin, don't ever be afraid to ask what sounds like the dumb question.
Yes.
Because we're talking about something so important here that, killing your ego early will give you a better Bitcoin journey. And just keep asking if you don't understand. You're not stupid. Bitcoin is hard. It's everything people don't understand about money combined with everything they don't understand about technology. And where that overlap is Bitcoin. So it's not easy, and everyone in this room was born into a fiat world, which is a complete scam, and it seems normal. And when we're shown truth, truth looks abnormal. So it can be really hard to join the Nebuchadnezzar and get out of the soup.
Adam, back at you again. I just want to ask, which bear market is the toughest? Was it the first, the middle one, or the last?
I mean, the first one, because you're just not used to the volatility, right? Now it's like that meme of the girl walking away from the bombs going off in the background. Like, it just doesn't faze me, but it's all in the brain, and it's such a head game. Bitcoin will definitely kill your ego, and it'll teach you more about money than anything else that you could possibly do.
Absolutely. Randy, how do you keep headlines from quietly shaping what you actually believe?
What was that?
How do you keep headlines from shaping from what you believe?
Oh, I cover this on my podcast all the time. I think headlines are psychological warfare because you could see, like, for example, when Bitcoin dips, they're like, oh my gosh, the ETF outflows are enormous. No one cares about Bitcoin. But if you look at the chart, Bitcoin was the same price, no matter what the headlines say. So I think it really comes down to, again, doubling down on your conviction. Do you know that money is going digital? Yes. Do you know that it's something that people want to be empowered by? Look at the Genesis block, where Satoshi Nakamoto put that headline, Chancellor on the brink for second bailout for banks. Why did he put that there? To signify, one, why Bitcoin was created, but two, because he wanted to exemplify that Bitcoin actually encapsulates free speech. In the United States, we talk about our inalienable human rights of life, liberty, and property. Bitcoin encapsulates every single one of those inalienable human rights. We own something that can't be taken. It liberates us where we could put a message on the blockchain that literally cannot be censored. So this is a free speech asset and a freedom asset that's fit for everybody, not just Americans. And I think everyone in the world that breathes and has a heart that beats is entitled to those inalienable human rights.
Great answer. Jake?
Yeah, I make content a lot, and I really don't look at headlines much. I just kind of stay curious, and that's the biggest thing for me. I just want to I find things naturally interesting, and then I follow that, and then I make content related to that. So, yeah, I really don't look at much headlines. I don't let them affect me usually. So, yeah.
Yeah, I imagine there's also a point where it becomes funny a little bit, like and amusing to see what the mainstream media is saying about Bitcoin. What about you, Adam?
Yeah, I mean, since COVID, I've just become a contrarian with pretty much everything mainstream media has to say. And I mean, in short, I think they want to control what we say. They want to control ultimately what we do with our money. And that's why Bitcoin and self-custody, running your own node, is such an important part of, I think, people's sovereignty. This idea that banks can interpose themselves or governments can interpose themselves between what you sacrificed, your one sacred life, and you expend that time away from your friends and family to earn money. Australia is becoming the worst in the world, where they literally banks will stop you from transferring money out to buy Bitcoin. How dare they? What an absolute disgrace. And I think when you look at the headlines, they're saying the quiet bit out loud now. They want to censor what you say. They want to censor what you do. Frankly, they can go to hell.
Well, yeah, because also the banks are working in the background. I think that's also why a lot of people should not be listening to headlines, is because while everyone is sitting on X arguing with each other over the most stupid things, then you have the banks in the background that are sitting there laughing at us as they're building tokenized deposits and CBDCs and working on all their tokenization with stocks. So don't listen to anybody else. Keep doubling down before it's too late. I don't think it's ever too late, but I think before Bitcoin hits 1 million, I think we should be looking out.
And vote with your money. That's the most powerful thing you can do, is vote with your money. Take
Yes.
some of it into self-custody, where you don't need anybody's permission to, spend your economic value.
Own your money, own your future.
Yep. And your feet. You can vote with your feet too.
Well, you guys are going to love this next question because it cuts to the heart of what this panel is about. So what does having a sovereign worldview actually look like to you?
For me, I think being sovereign just means being in control and being confident while you're doing it. I think a lot of people get very nervous when it comes down to being your own bank because it is a responsibility. I think we're breaking generational wheels, right? And I always say, in traditional finance, there's a ladder that's already been there for generations, but in crypto and Bitcoin, we're actually building that ladder ourselves. So I think, just, again, doing your own research, understanding what Bitcoin is, and then taking taking that next step to say, you know what, I don't need a centralized entity to hold my money, be in control of my money, and then like you have the Federal Reserve and the central banks that actually determine how much you're worth, and we don't get to vote for the money printer. We're just suffering the price of that money printing. So I think if you want to opt out of a system that is completely corrupted and you want to opt in to something where you have that freedom and you actually have a say, again, it goes back to the Genesis block and the freedom of speech.
Yeah, like I said, I think it's very empowering. With Bitcoin, you can vote with your money, but then you can, like I said, you can also vote with your feet. And I'm just so interested in all the potential that's going to allow us as humans in the future. Depending on, you can go to different places, and I think everyone has a lot more power than they realize. And I'm really interested in internet-first communities and then how they will eventually use Bitcoin. So, like the sovereign individual, but more like the sovereign collective. And I think my worldview is shaped around that and building communities in different places. And I find that to be the most exciting part because Bitcoin really empowers all of that and makes it possible. So.
Yeah, I think this sovereign mindset comes back down to a lot of just first principles thinking around what we do in exchange for money, which is give up our sovereign life force, right? And this separation of state and money is the fight of a lifetime. I sit on stage with these young people, and I remember I was brought up in Australia where my dad was a school teacher, my mum stayed at home and looked after 3 kids, and we had a house, and we survived in middle class. These guys will never be able to do that. What is the impact on society when kids don't have parents at home anymore? When parents are both working to pay somebody else's parent to babysit their own kids? The downstream effects of broken money are profound, and we're only starting to see them now. This is what these corrupt, inept politicians and banksters are taking from us as a race. And so we need to claim that back, and the only solution to that that's true, honest money that's not broken is Bitcoin, which is why I Bitcoin and try to orange pill as many people as I can to at least have some part of their economic value stored perfectly through time through this incredible gift from Satoshi.
Yeah.
Yep. Yeah, Adam.
One of my best performing videos on Instagram was what the heck happened in 1971, and that's when we went like fully off the gold standard. And that's like all we can do. We can just educate people about what's going on, and we're all educators up here. And yeah, people do not realize how much better the middle class was in like 1950s to 1970s America. Like you really could survive on one income, but now you really can't. More people live at home than ever, and they just don't really understand fundamentally that it really boils down to just the money being broken. They want to blame all these other things, but really it's that simple. And we could just do our best to educate the world about it.
There's one line out of a book which I'd like to share here. It's a book called The Tao of Bitcoin. And in that book, there's a profound line where it said, we have turned our houses into hotels, our cars into taxis, and our bodies into porn. That is what broken money has done. And it's a disgrace. And Bitcoin fixes that.
Yeah, and I think like even what Gen Z suffers is just the insurmountable crushing pressure of inflation where, even I think about the bills that I pay that my parents didn't pay, such as cell phone and internet and all of these other things that we don't even think about. Like we're buying cell phones, which are like over 2,000 US per phone, depending on what you're getting. And, you still got to like pace that out. So, I mean, even compared to generations before us, that's why it's even more important to keep hedging against inflation. So that way we can keep up. I feel like Gen Z is just running to keep up before they're even behind.
Yeah, so what is something that keeps you grounded? I imagine there are a lot of Bitcoiners in the room today who feel a bit lonely within their friends and family, perhaps. What's something that keeps you grounded when you don't have a support network?
Yeah, I think, when you come into crypto, when I was in high school is when I started my brand, Miss Teen Crypto. I was a junior in high school, and I was getting bullied, and especially my family bullied me, my classmates bullied me because they just didn't understand what I was doing, and I just really thought I was a loser. And then I joined crypto Twitter, and I saw that there were so many people, everyone in this room, were on the same page, and you're really not alone. So I think social media is such a blessing in that way, so that way you can find people that you actually resonate with, that are on the same page, and like, you know, they want to change the world, that we're not okay with what we have right now. That's why we're here. We're saying, you know what, we're not going to deal with the bare minimum. We're better than that. We're not going to settle for less. And I think that's what we should be aiming for, is to take over the world in the best of way, because self-sovereignty and this hope of freedom is so important, because the only thing greater than fear is hope.
Yeah, shout out to everything you said. I love that.
Thank you.
I feel like we both, all of us, we want to change the world, you know?
Yes.
And that's what keeps me excited is communities and the future of communities and how humans will organize themselves. I spent a lot of time at network school, if you've heard of that. It's a lovely place, and the internet lets us bring the like-minded people together. And we're in this unique day and age where you can use social media. I could spend 5 hours making an Instagram reel and 1 million people could see it. This was never a thing before. And we could use this to build and get like-minded people together in the same places in the world. And I'm not kidding, I encourage everyone here to try to be a part of a community, because a lot of people are not in communities now. And feeling like you're part of a tribe and you're part of something that really is special, and I'm not kidding, it really makes you a lot happier as well. So that's just, I'm just so excited about the future, it's hard for me to even think about negative things a lot of times, so.
Yeah, I mean, for me, it's just keeping my head in Bitcoin and other things I'm interested in. I think today with YouTube, we're so connected. This event will be televised out to so many more people than are here in the room are going to see this. So stay connected, get to as many events as you can. And yeah, Bitcoiners are among the nicest people in the world. Like, you just find morally sound people in Bitcoin. So it's such a great community.
I want to try get 2 more questions in. I'm really curious to know, because we have a great divide in, I guess, generations here. We've got a Gen Z, we've got a millennial, and we have Gen X. What is the one thing that Bitcoin has impacted your generation specifically?
I think, you know, Gen Z has such an interesting angle, because I mentioned this on the news desk earlier. Gen Z has this phrase that if you didn't take a selfie, you weren't there. So we understand the whole premise of actually owning our information and saying, like, no, I actually was at this event. Here's my proof. So the whole idea of proof of work and the whole idea of, like, you know, when you're on the blockchain, okay, here's my transaction, it went to this person, like, that's proof. That's immutable proof. So I think that's what Gen Z really loves, and especially because we're a TikTok generation. This is an instant gratification generation, and we have everything at the tip of our fingers. So our parents didn't have that. You know, they had to go through so many intermediaries like a broker just to invest in a stock. But when you're 17, 18, what are you downloading? Coinbase, Robinhood, and you're immediately able to add liquidity to the market, and therefore you're prepping while you're in a lower tax bracket for the future when you anticipate you're going to be in a higher tax bracket. So I think Bitcoin just gives this generation hope that we won't be behind. We'll actually be more ahead and create our own generational wealth, whereas everyone's saying that we have to wait for our parents to pass down that wealth. No, Gen Z is creating that wealth, and it's with crypto.
Amazing.
I think that's one of the coolest features we have going on here. We have Gen Z, Millennial, and then Gen X, and it's like really cool, and we're all educating we have completely different target audiences, and we're educating them at different angles. I would say millennials are probably the most naturally inclined to Bitcoin. A lot of millennials are like, you know, they realize it's hard to buy a house and stuff. A lot of people like me, a lot of millennials are on Robinhood. So for me, a little easier than you guys, I would say. But yeah, I think millennials are more inclined and naturally into this stuff. So what about you? What do you think?
I just want to give a shout out to anybody in this room over 55 or 60 here learning about Bitcoin. Like, respect. Because for that age group, it's really tough.
It's hard.
You know, because they're used to making money from houses and money printing just making them rich along the way. And I just think it's forcing older people to rethink what they thought they knew. And I love that moment when CZ was debating Peter Schiff, Mr. Gold, and CZ leaned over and said, "Peter, here's a bunch of gold." And he gave him this gold. And he says, "What did I just give you?" And Peter said, "Oh, it's some gold." He said, "Really? How do you know?"
Yep.
And the room went silent. He goes, "Well, I think it's gold. It looks like gold. But do you know it's gold?" And he's like, "No, well, I'd have to do this and that." And he goes, "Therein is the argument for Bitcoin." So I want to just give a shout out to the older generation that are here and forcing themselves to learn, because you guys are the ones that have created so much wealth, and you're going to be passing it down to young people like this who are digital natives. And so learning about Bitcoin is so important for that older bracket, because you're all the cashed up people And it's gonna dematerialize into the digital world.
Yeah, your generation's trickier. I find like with my parents, it's usually gold is a good angle because they all understand gold. Like my grandma buys gold coins, but like my dad, he is into collecting like collectibles, like baseball cards and stuff. So then he goes to auctions and brought me home like the Bitcoin magazine he got at an auction. And I was like, Dad, if you bought that magazine when it came out and just in Bitcoin, you would have a lot more money now. But he's like, you just never know what gets them. And for like, I think that your generation, you just got to find their angle. And I think gold's a good one.
Yeah, and I think, even Gen Z thinks about retirement a lot different than, Gen X because, I feel like Gen X was always like, okay, we're going to go to work and then we're going to retire at a certain age, where Gen Z is actually losing hope that we could ever retire. And I think, Bitcoin gives us that opportunity to store our wealth in an appreciative asset, whereas I feel like Gen X almost got scammed, where you were told just keep your money in the bank and you're going to be fine. But now you're actually paying the consequences of that. And I feel like a lot of Gen X is worried that they actually now cannot retire due to inflation and where their dollar has gone.
Absolutely true, 100%.
Yeah.
Savers have been losers for sure.
Yeah, it's really sad. I'm sorry, bro. Sorry for you.
I'm good.
All right. What is the one thing that you go back to that reminds you why you're still here?
You want me to start with this?
Yeah, go ahead, Adam. You're on fire right now.
The reason I'm still here is because they are so goddamn corrupt and evil, and I know because I've interviewed a bunch of them on my podcast. They do not want the best for the average person out there. And there's I see it in the West. The West is falling. They don't care about us. And so that is why I keep spreading the word to take control of your money. They're trying to take your power. They're trying to take your economic value. They'll take everything if you let them. And this is one way that you can fight back. And I left my home country. I'm no longer participating in the collapse of Australia, which was once a great country. It's not a great country anymore. There are better emerging markets around the world, and it breaks my heart to say it. But I'm here because Bitcoin stands for so many of the values that I think we as the human beings should stand for. And so that's why I'm here. It's very easy to stand on this side when you see how many assholes are on the other side.
I think I'm here just to keep giving people hope and show people how new communities and societies could be built. And we're not all stuck in these broken Western governments. There's a lot to be excited about. I'll just say that. So I just want to keep giving people hope and keep people excited about the future.
Absolutely, and I'm here because I want to lead a revolution, and this is the most peaceful revolution in history. There's no weapon that you need to pick up. There's no country that's reliant on Bitcoin. This is just simply the tap of a button, an internet connection, and you're able to take part in changing the world with your money and with your opinion through money, because the more we take liquidity out of the traditional system, the less power it has, and the more purchasing power we have, so we make the decisions as to how we are going to move forward as a people, because the US says we the people, but I believe that expands globally. So I'm here for the most peaceful revolution in the world, and I'm happy to have you guys. So thank you so much for hanging out with us today.
All right,
Thanks,
well,
everyone.
thank you very much, guys. Love this panel, and give it up for the panel.
Thank you.
Thanks, everyone.
Okay, so our next panel is all about mathematical patterns. The title is The Bitcoin Power Law, Network Physics. Please join me in welcoming the Associate Director of the Scientific Bitcoin Institute, Stephen Perrineau, and Giovanni Santostase.
Hello, everybody. Very nice crowd. So today we are going to talk about our paper. It's actually real science. It's a peer-reviewed paper on, as far as I know, the only scientific proven model of Bitcoin price, but also adoption, and also what happens to the relationship between price and adoption. So this is the paper has been published recently on a physics journal because we wanted to engage the physics community, the hard science community, not just economists. You can read it. It's open source. So what is this power law? And by the way, there is an entire institute behind this initiative. We created the Scientific Bitcoin Institute. You can go to the website. It's a very beautiful website, scientificbitcoininstitute.org. And so the entire idea of the institute is to study Bitcoin scientifically, because our claim is that Bitcoin, besides being an asset, is also very interesting as a scientific phenomenon. It's almost an experiment that all of us around the world are doing in constructing a fortress of value. And this value can be measured scientifically. So what the power law says? Basically, it says, so this is actually an observatory that we are creating with a lot of different parameters that we are measuring. And so we want to measure the properties of Bitcoin in the most scientific possible way. So, but the general idea of the power law is that if you take the logarithm, that the logarithm is this quantity that shows the scale. So Bitcoin is a phenomenon that needs to be studied in terms of scale. Scale means changes of time. Bitcoin literally went from his first Bitcoin to USD to Bitcoin transaction 100 million times. So if you want to study a phenomenon that changed 100 million times in 16 years, the only way to understand it is to look at big changes. And these changes are changes of 10. So if you go to changes of 10 and you adopt this vision, this is why you see in this graph we have 1, 10 to the 1 means 10 by itself, 10 to the 2 means 10 times 10, 10 to the 3, 10 times 10 times 10. So if you plot Bitcoin in the scale of price and the scale of time, so you do the same thing with the scale of time. So where you see 4 or 5, this means 10 to the 4, 10 to the 5, okay? So thousands of days from the birth of Bitcoin. Time is measured in days from Genesis block. If you do this, you see a beautiful, beautiful regularity in the price of Bitcoin. It's a simple straight line. That straight line in this type of graph, it is called a log-log graph, means that Bitcoin follows an equation. How many of you know that Bitcoin has an equation? You can measure the price using this very simple equation. It's simply say the price is some constant times the number of days to the power of 6. So it's a kind of a parabola, very fast parabola. But in this, the graph is just a straight line. So this is an amazing regularity, and the scientific paper show that it is a scientific valid claim that it is a power law. Bitcoin is a power law. Now, this power law, it's, like I said, it's what is called in physics a scaling phenomena. Many complex phenomena in nature follow this kind of pattern, this power law. So that is the relevance. It's not just interesting that you can calculate the price of Bitcoin using this law, but also makes Bitcoin a universal phenomena. It's the same phenomena that regulates the behavior of many systems, like metabolism in animals, or in human beings, the entire economy of cities. Cities behave in the same way than Bitcoin, or Bitcoin behaves like a city. It's the same math. So this entire idea that there is a signal allows us to see also the deviations, because many people are just focused on these deviations, right? These drawdowns, 50% drawdowns. But these 50% drawdowns, when you are looking at the phenomena from a scaling point of view, they are absolutely nothing. It's just a factor of 2. In a phenomena, like I said before, they change 100 million times. So 2 is basically a rounding error. So this is another way of understanding what many Bitcoiners go through, right? We have to go through this idea that our Bitcoin can lose value by a factor of 50%. But that is just a small deviation. You can see if you plot it, if you plot what is left over after you subtract this long term, is just very small and also very regular deviations. And this is kind of another signal. There are 2 signals. There is the main signal, that is this long-term trajectory, and then what is left over is also very regular. Now, we are coming up in understanding this regularity, and it turns out they are not really periodic. They are log periodic. But that is another story, maybe for another presentation. Okay, this is another way. What is interesting in this deviation is also that the deviations that are below the power law, they are much more contained. Statistically, you should have symmetry, right? You should have huge big deviations above and also below. The deviation above are about sometimes some of the biggest peaks, like 3 sigmas, while the deviation below, they are only 1 sigma. It's very interesting. We don't understand completely why that happens, but it's a scientific fact. We think that maybe there is some kind of a floor determined by the cost of producing Bitcoin. So this 1 sigma floor is also very regular. You see, if I plot a line in this space, log space, through all these bottoms, you can see how regular, incredibly regular it is. It's a mathematical regularity. Many people, when talking about the power law, like for example, recently, there was a lot of debates about, is the power law broken? No, it's not broken right now at all. And we have even come up with falsification criteria to determine. Okay, so, and this is also shows what happens in terms of prediction of the future and where Bitcoin is going in terms of annual growth or returns. So there is a very predictable curve, and Bitcoin has followed this curve very closely. So you can make predictions about what will be the returns for the future. Right now we are about 45%, and for the next 20 years, we're going to stay within 45 and 20%. This is a very predictable curve. There are diminishing returns, but also makes the system more stable. One of the things that you can predict that Bitcoin will be about $1 million in 8 years from now, and 10 million in 20. Sorry. Okay. This is the ceiling, the floor that I was telling you. This is the distributions of whatever is left over that you can see is skewed. And you can make predictions based on these calculations. Okay? You can go to our website. You can look at our observatory to understand it better. It's a lot of information.
Thank you so much for the opportunity to speak today with you about the power law. Now, you've just seen the power law in one currency, the US dollar. And when you measure it, you get a power law index of about 5.7. That's between the 5th and the 6th power. That's how steep the parabola is. But here, I've got 6 currencies. I've got the US dollar, the euro, the Chinese yuan, the Japanese yen, the British pound, and the SDR, which is the basket of those 5 currencies produced by the IMF. Every single one of these is a power law. And every one of them has a power law index that's almost Very similar. You can see how similar these different slopes are. You have in the green line the yen, the red line the yuan, and the others are all bunched up below. So the scale is different just because of the ratio of those currencies, but they're all following that same track. And very importantly, notice the x-axis is labeled 2, 4, 8, 16 years. So each interval there is a doubling of the age. This is a log axis for x as well as the log axis for y that's already extending over 8 orders of magnitude of range. This is the same chart but inverted. So what I've done is I've exchanged the numerator and the denominator, and instead of Bitcoin versus dollar or Bitcoin versus yuan, we're measuring yuan versus Bitcoin, yen versus Bitcoin, dollar versus Bitcoin. There are also power laws, but what's happening? We're seeing the decline and fall of the fiat world very steadily, very continuously when measured in Bitcoin terms. The indices are the same, they just have the minus sign. And also you will notice, if you can see up in here, there's a little number called R squared. That's the goodness of fit. It's the correlation coefficient squared. And for every one of these fits, and all the ones that Giovanni showed you, we get 95%, 96%. This is just an outstanding correlation coefficient that you just don't see in ordinary financial series. People often ask, well, what about inflation? You measure against the dollar, but the dollar is decreasing in value a little bit every year. And this shows you the effect. So there are two curves here, and one of them corrects for the growth of the M2 money supply in the dollar. So the orange line here is the same curve as you've seen before, but now adjusted for the growth in the M2 money supply. You can see they're not that different. They're both power laws, they're very similar indices. The indices lowered by a little bit, less than 10%, from 5.63 down to 5.16. The R squared coefficient stays very high still. So it's very much a second order effect. It does not destroy the idea that there's a power law here of price versus the age of Bitcoin. Commodities. We see the same thing in the most important commodities. Here we have gold. We have oil measured as the WTI, the West Texas Intermediate. We have corn, and we have silver. Again, everyone is a power law. Here it's negative, this is descending. So it's how many Bitcoin you can buy with a bushel of corn, or how many Bitcoin you can buy with a barrel of oil. Over time, the same time scale, the same many orders of magnitude up the y-axis, the same sorts of indices. They're 5.4, 5.6, 5.8. They're all in that range of something like 5.5 to 6. This is now going in the other direction. It's Bitcoin against gold. And so if we're on a power law against gold, the question is, when will Bitcoin flip gold? When will it flip the market cap of gold? And the way to do that is just measure it in gold ounces. Right now we're at 17 ounces per Bitcoin. We're at a low earlier this year of 12, and so we've had a 42% increase recently, but we're still underperforming. So if you look at this curve, you see that we've dipped down below. If we were on trend, we'd be more like 50 ounces. So you can say that Bitcoin is pretty undervalued relative to gold on a power law basis. But if you project this out a few years, when will the market caps be identical? And to make this calculation, I adjusted the gold supply to allow it to increase by 2% per year. So that's the nominal history. And what we see is that we have to get to 360 ounces. And the date is an age of about 24 plus 2009. So that's around the year 2033, 2034. Of course, the uncertainties here are always around a factor of 2 or so. That's the volatility that comes and that you have to live with, and you should learn to live with. But that gives you a rough idea when we could see Bitcoin, the 20 to 21 million, approaching the market cap, entire market cap of gold, which is now around $30 trillion. And this shows the incredible consistency we see against all 10 numeraires. Numeraire here, just a French word that means measurement, what you're measuring in. So I'm measuring the power law index, the steepness of that price equals some constant times the age of Bitcoin times a power law index that we like to call beta. And this histogram shows 6 fiat currencies in blue, 4 commodities in orange, and you can see how close they all are. They're all within 6% of 5.69, which turns out to be the power law slope or exponent for the US dollar. It's incredible coincidence, not. It's actually the fundamental nature of the dynamic growth of Bitcoin's meta network, which has multiple power laws. It has a power law of adoption that grows roughly as the cube of time. And then we apply Metcalfe's law that applies to networks and social media networks. And that is a square on top of the adoption. So if you have a cube and then you square it, you get the 6th power. And this is what we observe: 5.7, 5.8, 5.9. This shows how stable the power law has been over its history. And I have 2 curves here. One is against the dollar and one is against gold. And this one actually has a linear scale on the x-axis. So it starts at age 5, where we've had enough data to measure the power law, and we find that it kind of locks in around age 6 or so. You can see it goes up with some of the early bubbles in 2011, 2013. Then it starts to fall, and it settles in below 6, and it's been below 6 for over a decade now. True in gold, true against the dollar. And again, these very high R-squared exponents. I'm going to start to close out the presentation with noting that Bitcoin conquers fiat and Bitcoin conquers gold. What gold did was preserve value through time. It still preserves value in time against fiat. What fiat did was conquer space. We like to talk about space and time because we're physicists, and the relativistic actually aspects of this. But fiat allowed you to move money more quickly around, but you have to deal with the national borders. Bitcoin breaks through the national borders. You can move it across the planet in 1 hour. It preserves its value through time even better than gold, as we've shown you. So that's the end of our slides. I think we'll take the next 2 or 3 minutes and ask Giovanni to talk about the Scientific Bitcoin Institute. Just say a few words about it.
Yes.
Yeah.
We still working or not?
No, that's it for the slides.
Yeah, so the Scientific Bitcoin Institute, I invite everybody to go to our website. Is this initiative where we want to create a hub for bringing scholars, both professors but also students, to study Bitcoin as a science. Because as we explained, we think that Bitcoin behaves more like a physical system than an asset. So physics, network science, complexity science, and so on should be the tool to understand Bitcoin. And this requires a multidisciplinary approach. It needs to bring people that want to study Bitcoin using real data instead of just opinions. And it's going to be an effort where if we establish that Bitcoin is actually a real standard for value, a lot of a discussion around Bitcoin, its volatility, its instability, and so on, is going to disappear because we substitute opinion with knowledge and science. That is the goal of the Institute. We have a beautiful mission statement that you should read, and you can support our efforts. It's a non-profit organization, and is growing moment by moment. We are more and more people joining this effort. So this is what the Institute is about.
So the website is scientificbitcoininstitute.org. We were founded at the beginning of the year. Giovanni and I are co-founders. We have offices in Turin, Italy. We also have a presence in the US and a presence here in Asia out of Bangkok. And we encourage everybody to take a look at our scientific paper that's freely downloadable from the CERN website. The spelling is Z-E-N-O-D-O, zenodo.org. And in addition, please read Giovanni's book, The Physics of Bitcoin. Beautiful, around 500 pages, a little bit expensive, beautiful color graphs. And if you can't afford the full price, there's an ebook at about $10 US. Thank you very much.
Thank you very much.
It started with an idea without borders, without permission, without limits. One network connecting millions through one shared belief that financial freedom should belong to everyone, everywhere. Because your Bitcoin can power what's next. And with Salt, you can tap into your Bitcoin's liquidity without ever selling. Now with rates starting at 7.5%. Salt, providing Bitcoin-backed loans for the past decade.
Welcome back into the live news desk at Bitcoin Asia 2026. I'm Grace Remington with Sean Hagan, and we're about to have some fun here because my new best friends just joined us on the desk. We have Mauricio and British Hodl. How are you guys doing today? You just landed a couple hours ago, right?
I'm bullish. I'm ready to go. You just lead the way, and I'm ready. Yeah.
Okay, well, we got thousands of people in here today. Vibes are high. It does feel like we're entering a bull market, don't you think?
It never stopped, really. We've been always in the bull market. We kind of corrected up and down, but the vibe is strong. I agree.
It's full. It's full here. If you're not in Hong Kong, I don't know where you're at. It is absolutely full. Everyone here is buying Bitcoin. People are walking around the conference buying Bitcoin. That's the stage of the cycle that we're at. If you're not here, you're missing out. And that's just it. You get to miss out. I had to fly in last minute because I didn't want to miss out.
You talk a lot about missing out, Hodl. You know, people that are sidelined right now. You know, we see a lot of people on X that are sidelined, wanting to, DCA in through the second half of this year, wait for a drawdown, a correction to maybe back the truck up. What can they expect to be missing out on in your calculation?
Yeah, look, Treasury Secretary Bessent just went from a threat of, $2 billion of buybacks to a $4 billion buyback to in 5 days going to, we'll just tap the whole trillion. That was in 5 days. So if you don't think that we've now hit an expansion cycle on the PMI numbers and we're about to hit an expansion cycle on liquidity, you don't understand what's going on here. Maybe take a break, relax, understand how economics works, and understand what is going to happen when an avalanche of liquidity that hasn't been here for 4 years finally hits a scarce asset that for the last 2 years has been bought up by every institution on the planet.
Maurizio, how bullish does that make you?
Oh, massively bullish. Like, good luck in timing the market. It doesn't make any sense. You can come up with any model you want, but when you look at where we are, market cap-wise, we are just about over $1 trillion. There is so much capital coming in. And why would you time the market? Would you buy a 58? We're going to $1 million. Who cares if you buy a 58, $70,000? Just stop timing the market and stay in the market. This is the most important thing. Otherwise, you are manifesting a fiat mindset.
Mm-hmm.
This is the most scarce asset we have. Like, why would you time it? I don't understand.
Okay, so everyone's so bullish right now. Can you make a bear case?
A bear case? Yeah, I can make a bear case. If the liquidity environment changes, we go into a bear case. But we've had that for 4 years. So we're actually finally now exiting a bear case. So the 126 high that people are talking about was in a very, very low, tight liquidity environment. It doesn't make any sense that Bitcoin has topped. We are going to see, from my perspective and my analysis, a 2013 style cycle. It went up, everyone thought it was over, and then suddenly the liquidity started easing, and we just went through the roof straight to the moon.
I will pull in one caveat. I think that a lot of people on Twitter always talk about M2 versus Bitcoin, right? And if you actually pull the data, I think a stronger version of that is comparing net liquidity versus M2, because instead of comparing a stock to a flow, you're actually viewing something more proper and capital that's actually able to impact the market in the hands of participants. And one thing you find is that Bitcoin is actually front running during seasons of correlation, but there aren't always seasons of correlation. In fact, a lot of the time they're non-correlated entirely. But when they are correlated, that tends to be because Bitcoin is front-running, and it's usually lumped in as a risk-on asset. We saw this morning that BlackRock came out and said that they're hearing from their institutional investors that Bitcoin may no longer be considered a risk-on asset. What are your thoughts on that?
I think that's an interesting shift, right? I think that's an interesting shift. If they're finally I think right now Bitcoin is a risk-on asset. I think it's the furthest on the risk curve. But as a Bitcoiner, not as an investor, as a Bitcoiner, it's a risk-off asset. We understand that. It's the absolute most the most scarce asset humanity ever has, one that can be moved from anywhere in the world to anywhere in the world with the lowest friction, and there's only 21 million, right? But if BlackRock is now saying that it's a risk-off asset, what that says to me is we're about to see more permanent capital enter Bitcoin and stay there. It's about to get a lot stickier than it has been.
Agree. We're going from speculators to investors, right? I mean, if you measure the movement of Bitcoin in gold, you have a different perspective. So we keep using fiat as a measure to value Bitcoin, but in fact, that's why we say 1 Bitcoin equal 1 Bitcoin, because it doesn't matter. If you change the base of measure, then the whole thing shift. And like British is saying, we have seen now the doors been open for quite a bit for institutions to get in and grab as much as they can. So that has not been factored in, I don't think.
Anyone who was trying to be cute with Bitcoin over the last couple of years has seen 2 million Bitcoin shift from retail hands to institutional hands. A fact. When I was saying this in 2023, 2024, people used to hate on it because I used to doubt that, the current audience would be able to hodl the coins. ETF hodlers are better. They are more stickier. These people are never going to let go of these coins. So the question I have is, at the peak of the last cycle, there was 118 to 1 bull market multiplier, right? So $1 was going into Bitcoin and the market cap was going up by 118. That's Bank of America's research. Now we've got 2 million coins that have moved to further hands that will never ever let go. So what's that multiplier going to be this time? What's the reflexivity going to be this time? And that's why I think we're going to see a rerun of 2013.
Okay, speaking of being cute, how do you feel about holding Bitcoin versus investing in the treasury companies?
I like MSTR. I bought the first day I bought MSTR was the day after they announced a Bitcoin treasury strategy in 2020. I love what they're doing. I love what Strive is doing. I am pro anyone who wants to buy Bitcoin and hold it. I am kind of like pro people that want to buy Bitcoin and then trade it, right? Because at least they're buying the Bitcoin. But anyone who's buying Bitcoin to build a treasury company to hold it forever, British Hollow is pro.
Yeah, I think there's a lot of bullish factors going into this next cycle. I do think that the ETF buyers tend to be stickier than maybe previous market participants or crypto speculators. But I don't know if they're necessarily purely sticky, right? We saw massive outflows on the way down from 126 into the 70s this past year. I think another catalyst beyond the ETF inflows, which, to your point, have picked up substantially over the past couple of days. We've seen massive inflows.
Massive.
I think another catalyst is, we have a lot of turmoil in the sovereign yield, sovereign debt, sovereign bonds right now. And these treasury companies have been busy at work kind of building a Bitcoin yield curve of sorts, right? You mentioned Strive, you mentioned MSTR. One thing that's really interesting that I've been eyeballing, and I'd love to get your thoughts on as well, is the Japanese market, right? That's obviously a very nuanced, very distinct market, especially when it comes to yields. And Metaplanet has been busy building there. They're trying to bring some instruments to market. They just launched a product in the U.S., a firm in the U.S., Superplanet. That's, I'm not sure what their strategy is there, or how it's going to tie into what they're wanting to launch with their Mars product in Japan. But that team seems to be busy at work. And while these other firms have had a multiple expansion up from par to maybe 1.5 in the case of Strive, Metaplanet's still at like a 0.8 MNAV.
Listen, any capital market is going to benefit from a company that wants to build itself as a speculative platform on top of Bitcoin, right? So Metaplanet has got a unique advantage. Metaplanet's got... Go ahead.
No, I just want to say get exposure as much as you can.
Absolutely.
Yeah.
Any
Any
way,
form,
get
any way.
exposure.
Yeah.
Stop being bearish. If you don't over-own Bitcoin, you're being bearish.
Agree.
How does one over-own Bitcoin?
Leverage. No, I'm only kidding. Don't do that.
Okay, good stuff, guys. You hanging out here for the rest of the day?
I'm here.
Awesome.
I came here for this. I came here to see your vintage, beautiful Hermes watch. Someone needs to zoom into that. That's a real watch right there.
What about yours? We need to
Listen,
run down on
it's
yours.
okay. We don't need to talk.
Yeah, no.
That's the star of the show.
Then you'd have to put a mask on.
Maurizio's the true Bitcoiner. He's saving his sats, and he's going fully into the market.
Rocking an Apple Watch, yes. Saving
Okay.
the stats.
Great stuff, guys. We got to go to one of the biggest keynotes of
Let's
the day.
go.
CZ hitting the stage now to talk on what the Bitcoin century could look like. Fun stuff. Maybe we'll catch you guys later.
Absolutely.
That's fun.
Thank you for having me.
Thank you.
Back to the Nakamoto stage now.
Bitcoin Asia. I hope you guys are ready for a very special fireside chat titled The Bitcoin Century, hosted by Kevin from the When Shift Happens podcast, and he'll be joined by the one and only CZ.
I love you too.
CZ, we're calling this session the Bitcoin century. What would have to happen over the next 25 years for you to look back and say, that was really the Bitcoin century?
I think for Bitcoin to hit $1 million would be a good thing. It will happen.
Do you think we need 25 years for that to happen?
No, I actually don't think we need 25 years. I think it's going to happen much quicker. But more than price, I think we need a lot more utility. I think we need Bitcoin payments to happen on a massive scale. I think we need Bitcoin to be a retirement pension fund reserve. It will get there. All of those things will happen. A lot more will happen. But for 25 years, I think all of those things will happen. Yeah.
What's the biggest thing people today are underestimating about the transition that's needed to truly cement this century as the Bitcoin century?
I mean, you mean this whole century? This whole century is a long, long time. I think what somebody said is people tend to overestimate what they do in 1 year, but underestimate what they do in 10 years. 100 years is a long time. So even in the next 10 years, I would say a lot of the infrastructure will get built. I think we're seeing the shift. Like in the last 2 years, we saw a huge shift in traditional finance attitudes towards Bitcoin. Right, so and even only in the last year or so, in the last few months, we're seeing tokenized stocks going up like tremendously, and this is just the beginning. I guess Binance B stock was only launched a couple months ago, like maybe 3 months ago. It's already growing very quickly. So if you think about 10 years, that's going to be huge. And that's just one small sector. Not a small sector, but that's just one sector. So with other sectors, there's multiple other sectors, payments, AI, agentic finance infrastructure, stable coins, tokenization. There's a lot of things that will happen over the next 10 years. So I think, that many things will happen. So I think, we're actually at the best point in time compared to any time in history. There's so many opportunities right in front of us. We just got to take advantage of it. Yeah.
You mentioned tokenization. You mentioned payments. How is that linked to Bitcoin and the success of Bitcoin?
I think they all help each other. I think the Bitcoin blockchain doesn't really handle tokenization today. So all the tokenization happens on other blockchains. But in the crypto industry, what's good for Bitcoin is good for everything else. What's good for another blockchain or another sector is actually good for Bitcoin as well. They help each other. People who learn about Bitcoin eventually learn about they will eventually into other blockchains, other tokens, etc. And people who come in through a tokenization today of stocks eventually will look in Bitcoin, right? So today, like say, right now we're in Hong Kong. People in Asia who wants to buy US stocks, it's very hard for them to get a brokerage account. And of the very few people that get brokerage accounts in the US, it's very hard, the timing is wrong, right? So you can't trade from like 11 p.m. to 4 a.m. every day. Once that's tokenized, you will democratize access to the stock market. So the people who used to want to buy US stocks that couldn't are now able to, but through crypto platforms. Once they're on the crypto platforms, they will probably have some exposure to Bitcoin that they did not have before. So over time, that will compound. So what's good for tokenized stocks is actually good for traditional stock markets, but also good for Bitcoin. So I think all of those things help each other. It's truly an ecosystem. It's not one project versus another.
Bitcoin started as a technology for individuals, and it's now becoming a strategic asset for institutions and potentially nation states. Does Bitcoin ultimately weaken governments, or does it make the governments that adopt it early significantly more powerful, and why?
Okay, I think on this point, Bitcoin itself doesn't weaken or strengthen governments. It's what governments do that strengthen or weaken them. Some governments like a lot of power. They want total control, etc. In human history, that may not always be the best for the economy, for the citizens. What we've seen that many countries with weaker governments actually do better in economy. So if you look at the U.S. government, for example, the U.S. government is actually it's a large country, so it's a large government. But relatively speaking, it's a less powerful government. The people are only in power for 4 years, and then the government change. And then you have two parties, they debate all the time. It's inefficient, right? There's just a lot of debates. But it's actually a weak government. But the weak government may have contributed to one of the strongest economies in the world. Right, so having a weaker government may or may not be a bad thing. And you can see that the current SEC in the US, they said, no, they gave up a lot of their power. They say, we don't regulate this. This is not in our purview. And actually the industry's grown because of that, right? So when the powerful people, the regulators have less power, sometimes the industry grows better. Whereas compared to the US previous SEC administration, Gary Gensler wanted everything in his power. And that actually stopped growth completely. But Bitcoin itself, it's just a technology. It doesn't give power to more people here, one side or another. The technology is decentralized, so it does give a bit more power to the individual, so you have more sovereign control of your currency. But at the same time, I think Bitcoin's design, the privacy aspect of it is somewhat flawed. So it's actually very, very easy to track transactions on the blockchain. So that aspect actually weakens some of the privacy control aspects. But both of these aspects, a government can use it or not use it. So if a government says, potentially, I don't think this is happening in any country yet, if the government says holding Bitcoin is illegal in their country, whether that law makes sense or not, is fair or not, but some governments may be able to push a law through. In many countries, the government can totally push a law through like that. When the government does that, then this sector is not going to develop in that country. Or maybe a more practical example. Some countries say, look, we're gonna apply a 36% tax on every transaction. Right? That's going to kill the industry. The government will have a lot of control. The government will be very powerful, but they will not have any tax revenue because charging 36% of zero is still zero. Whereas if you charge like, no, I don't know, 6% of 1 trillion, that's a lot of money, right? So I think the technology doesn't dictate the government. The government decides how much power they want to have. And in countries where the citizens can vote, the voting determines that. Yeah.
How seriously are governments taking Bitcoin today?
I think most governments are taking it relatively seriously, but today many countries still don't have crypto regulations, right? So many countries don't have crypto regulatory frameworks. It's actually only a handful of countries that does. I think many people in governments understand Bitcoin, but they are probably still a minority. And also, especially many countries, the government are they're run by elder people. So it's like a slightly older generation. And that generation actually logically adopts new technologies slower. And they also read more traditional news, which are usually more negative on crypto and all these other things. So they tend to have a slightly more negative mindset. But I certainly feel the shift. I meet many different country leaders, politicians in different parts of the world. The shift is definitely happening. No one's denying that this is a new technology. No one's denying that they need to adopt it. But sometimes they still have the skewed view that Bitcoin is used by drug lords. Is that true or not? But more and more people are explaining to them now that no, that's not the case. Yeah.
When you meet these leaders, do you feel like they're meeting you and looking at this Bitcoin thing because they have to look good, or because they have to for the future of their country to be more successful?
Actually, almost every country leader I meet are the second of the latter. They want their country to be better. But to be frank, I think there's quite a lot of countries who are doing it just because they have to. But most of those countries, you can detect them pretty quickly. They adopt some kind of framework. It's usually overly restrictive. It's usually like just a PR job, and the implementation and the licensing takes forever or impossible. Nothing really happens on the implementation level. Of the countries that usually invite me to go, and they're usually very progressive. They're sincerely wanting to adopt crypto. So it's a pretty good benchmark. Like you see which countries I visit, those are usually the crypto-friendly countries.
When you're advising a major government today, what do you tell them about Bitcoin that they're probably not doing yet?
There's many parts, right? So number one is putting a crypto regulatory framework. That's usually, and also once you have a framework, how do you, what's good about it and what's bad about it? How do you revise it? How do you improve it over time? Most of the crypto regulatory frameworks fall into a few parts. Right now, many people are focused on either the centralized exchanges, which is usually the past few years. This and last year, many countries are focused on stable coins, which is good, because US, Genius, Clarity, there's a lot of debates and there's a lot of attention on that. Many countries are not doing a crypto reserve, so I usually advise them to do a crypto reserve. That's usually much better. That's usually very important for the country long term. Many countries are not issuing their own stable coins. So we need to get their own currency onto the blockchain so that they capture liquidity in their own currency. They also promote liquidity for their own currency on the blockchain. Many countries are thinking about tokenized assets, in addition to stocks, traditional financial instruments, but rare earth minerals, real estate, culture, arts, IP. So there's a lot of discussions on those fronts. Many countries are very interested in tokenization because they view that as a way to attract money into the country, or have assets that are available for people to buy outside of the country. So quite a lot of those discussions are happening. Yeah.
What are the countries that you think are doing that the best?
Different countries are moving at pushing different parts of the envelope, which is good. I think UAE has probably the most progressive crypto regulation today. ADGM, Abu Dhabi Global Markets, give Binance.com a global license to operate almost all of their products, which is fantastic. But UAE still have not issued major stable coins yet. But I think I hear some discussions there, so they're progressing. I think U.S. Is moving much more heavy on the stablecoin side. They're very focused on the stablecoins. And the exchange regulations, they just use the old sort of MSB, money transmitter license, etc. But right now, my impression is the CFTC is moving pretty fast on sort of a federal level futures, derivatives licenses, etc., which is fantastic for the industry. I think Japan is pretty forward right now. Hong Kong is moving pretty quickly. Singapore, I think, is a little bit more conservative today. But all of those countries are moving pretty quickly. Pakistan, I think Bilal was here earlier. I just had a meeting with him earlier. Pakistan's moving pretty quickly. But Pakistan, the regulations are moving quickly, but the implementation is not quite there yet. For example, Binance does not have a bank account there yet, like a client money bank account there yet. But I think that's underway. They haven't issued stablecoins yet, so all of those things need to happen. Kazakhstan is moving very quickly. Binance has very good banking support there. Binance Pay works with QR codes everywhere there. Kyrgyzstan is happening very soon. So I'm visiting those two countries next week. So there's quite a lot of countries moving pretty quickly. Yeah.
Tell me about one major government that you think is currently getting Bitcoin completely wrong.
I think I don't want to name any specific countries to make them look bad, but I think many countries view Bitcoin as this dangerous thing. It's not. Bitcoin is much more dangerous if you don't use it. Basically, you're missing out. If you think about AI, which country doesn't want to hold AI technology themselves, right? So not investing in AI technologies, not promoting the AI industry in your country is dangerous for you. Using AI, well, AI has some dangers, but using AI properly will be fine. So I think there's quite a lot of misconceptions about Bitcoin, crypto, etc. in a few different countries. Yeah.
You mentioned strategic reserves, and that you're advising governments to actually build a strategic reserve. If Bitcoin becomes a strategic reserve asset for nations, does it eventually become more important than gold?
For sure. I think Bitcoin will, for sure, become more important than gold. Yeah. I think today, we got to understand, for large countries to change, it takes many years, right? So today they have mechanism to value gold, to hold gold. There's a whole mechanism there. For them to shift into Bitcoin will take some time, or into crypto will take some time, but it will happen. So, and Bitcoin is just a much better asset than gold. I think Peter Schiff might not agree, but I've had that debate with him before. But Bitcoin is much more important. Yeah. Thank you.
Well, as we can see here, the majority of the people in this room believe or have been believing for a long time that Bitcoin will be bigger than gold. How could we all be wrong?
I think there's a very small chance something better than Bitcoin takes over, like another digital currency that grows faster than Bitcoin overtakes Bitcoin before Bitcoin takes over gold. I think by everything that we're looking at today, the chance of that happening is quite small. I think Bitcoin will overtake gold pretty soon. There's only like a 10x difference right now. So who knows, in the next bull run, it could happen.
If you're allocating the reserves of a country today, what's the percentage that you recommend them to allocate to Bitcoin, and why?
My recommendation is pretty simple, and it's a little bit self-serving. I usually recommend them to take the top 5 cryptocurrencies, take out stable coins. They may already have a US dollar reserve. Take the top 5 cryptocurrencies and just allocate according to market cap, percentage-wise. That's the easiest, simplest, and most market-driven approach. So typically, you'll be like, 50-something% in Bitcoin, and then, I don't know, 10-20% in ETH, and then BNB will get in there. So, yeah.
Well, I have to take the Bitcoin side. Yeah. Why would that make sense? Why would you just not advise them to allocate only into Bitcoin? It's a Bitcoin conference. I guess there's a lot of Bitcoin maximalists here. And also, if people understand what Bitcoin is, they might just say, like, this is the only one that makes sense.
Sure. I think as much as I think the organizer of this conference, David Bailey, is a Bitcoin maxi. He's a good friend of mine too, very good friend. I think, look, if the industry only have Bitcoin, it's actually, the industry will grow much slower. Having this other blockchains does not take away from Bitcoin. Having all this other having Ethereum, having BNB chain, having other blockchains actually helps to grow the Bitcoin as well. I think Bitcoin would be smaller if we didn't have other blockchains. Bitcoin would not be bigger, it would be smaller. What's good for Bitcoin is also good for the other blockchain, for the other blockchains. So we're in an industry that is not a zero-sum game. It's not like we're taking anything away from each other. Bitcoin service has its own utility. It's the largest market cap. It's the most decentralized. It's going to be the reserve currency for a very long time to come. But the other blockchains have more innovation, right? It's easier to try new things on the other blockchain. And then if Bitcoin can reverse adopt it, then great. I think most Bitcoin maxis also realize that realize this. It's not always the best to only promote Bitcoin. So for me, I'm a very strong proponent of Bitcoin. This is it's called Bitcoin MENA or Bitcoin Asia conference. But in the early days, the whole crypto industry is called the Bitcoin industry. We only started calling it crypto. Actually, crypto is not a very good name. Like most normal people, when they hear about crypto, they think like, no, it's too scary. It's too mathematics driven, right? Most non-math majors, they feel distant from it. Web3 is not, Web3 is an okay name. So I think the terminology and label doesn't matter very much. I strongly think that we should push the industry as a whole. There should be multiple blockchains, multiple exchanges, multiple dexes, multiple perp dexes, multiple of everything, so that there's competition, there's more innovation, there's more, just more pushing. So I think like this industry is about decentralization. We should adopt the open approach that we accept multiple of everything, and it's not this one versus another. Yeah.
We spent the last decade proving that Bitcoin can exist. What actually is driving the next cycle?
I'm not too sure, to be very frank. I think right now, if we look, there's RWAs and AI, both are very strong. And the previous ones, stablecoin will continue to grow. Centralized exchanges will continue to grow. Decentralized exchanges will continue to grow. Meme coins will continue to grow. NFTs will probably make a comeback of some kind. So DeFi AMMs are continue to grow. So I think multiple things will continue to grow. I don't know what the next hot thing is. That's very hard to predict. In the beginning of 2017, I would not have predicted ICOs, but half a year later we were doing an ICO. When the NFT craze was happening 6 months before that, I would not be able to predict it. So it's very hard to predict the next thing. I think it's up to the entrepreneurs, in this audience and out there, that that creates those next the next big hot things. Yeah.
You mentioned AI. Let's talk about AI. If we're heading towards a world with billions of AI agents that can automatically buy, sell, negotiate, and transact, what money are those agents going to use?
For sure, it's going to be crypto money. Yeah. I mean, yeah.
But which one?
Again, I would think that they will probably start with a stable coin. And then once you can accept a stable coin, it's very, very easy to add Bitcoin. And then hopefully it's equally easy to add BNB, Ethereum, Solana, other blockchains as well. And then, and also, it's also possible some of the large AI companies, they may want to issue their own tokens. So they'll probably jam that in there. I've had discussions with multiple very large, the top tier AI companies about how to issue tokens. There's many different schools of thoughts, right? So very early, building data centers requires a lot of money. 1 gigawatt of compute takes about somewhere between $30 to $50 billion. And many of them are running out of money as high valuations as they have. Many of them do not have enough money to build that kind of compute power. Some of the AI companies I talked to, they want to build hundreds of gigawatts over the next couple of years. And that's going to cost trillions of dollars, right? So they talked about how to potentially issue a data center token so that later on you can get rewards from that data to use that data center. If you're going to issue a token, you want to increase the utility of that token as much as possible. So naturally, you want to allow that token to be paid for subscription services. And then do you want to tie that with different language models, different services, etc.? So there's many different models to tie that. So it's not inconceivable that an AI company will issue their own utility token and try to promote that. I think we've seen that some tokens being already issued by companies very closely associated with OpenAI, right? So the WorkCoin, even though today I think it does not have a huge amount of utility yet, but those guys are very close to the AI companies. So I think crypto will, when AI handles payments for us, they will use crypto. And also, but today I think the AI payments may come after AI trading. So like paying for hotels, paying for bills, etc., using AI agents. Based on my conversations with some of the top tier AI companies, today payments is not their priority. They're trying to make the agents smarter to find you the best deals, but they don't view that payments is a big problem to solve today by AI. Most people can swipe their credit card to book hotels once the AI finds the best hotels for them. Whereas in trading, AI may have to, AI is more appropriate because you have to gather a lot of information very quickly. You have to react very quickly to news, analyze the charts. However you do your trading, AI can probably facilitate that process by improving efficiency by 10x. And then to do that, you don't want the AI to do the analysis for you and you press a button to trade yourself. You want the AI to place the orders for you for efficiency reasons or for timing reasons. So AI will probably trade for you before they pay for you. Yeah.
So that means that whether we're in a human world or an AI world, Bitcoin mostly stays a technology for savings, Bitcoin for savings, and then we have stable coins or crypto for machine-to-machine commerce or for trading.
I think so, to a large extent, yeah. I think that's going to be the next step. But I think as people use stablecoins more and more for payments, many of the payments will shift towards native crypto, like the Bitcoin payments. Many people are not used to the Bitcoin price fluctuation, but once the payment rails are fully open, accepting crypto, all the guys holding Bitcoin will no longer convert them to stablecoins. Because the guys who hold Bitcoin long term, they don't care about the fluctuations. They don't want to convert to a fiat currency, a pegged value, and then hold that. That's just another extra step. Like for me, right? I hold BNB and some Bitcoin. I mostly spend BNB. When I spend, I don't sell BNB into US dollars and hold it there and then spend. Sometimes I do that, but that's very inconvenient. When I swipe the Binance card, BNB gets deducted based on how much I spend. I don't care what the exchange rate is. You can fluctuate. It's going to fluctuate upwards. I spend on whatever the price is on that day, on that minute. I just spend it. So I think as long initially people will do payments in stable coins, but as the payment rails become more widely available, people are just going to spend the cryptocurrency that they hold. Yeah.
This session is called the Bitcoin Century. What do you hope CZ's contribution to that Bitcoin century will have been?
I actually don't know. So my mentality is always I try my best. If my abilities are low, I'll just contribute a little bit. If my abilities are high, I'll contribute a bit more. So far, I believe I've made decent contributions to the crypto industry to the extent that I could. I will continue to do my best to contribute to the extent I can. Yeah.
Thank you so much, CZ, for this, and thank you everyone for your attention.
Yeah, thank you so much. Yeah.
Welcome welcome back into the live news desk here at Bitcoin Asia 2026. I'm Grace Remington, now joined here by Andy Lien, book author and former chief digital advisor at Mongolia Productivity Organization, and Spencer Nichols, producer of everything at Bitcoin Magazine. Andy, I want to ask you, because we just listened to CZ speak on the main stage about his idea of a Bitcoin century, nations competing for capital, energy, and position in a digital economy. From where you sit as a former advisor of many governments, is that already happening, or is that mainly a Western tech narrative?
No, it's really happening, right? If you can see, like Japan, Metaplanet is pushing, right? If you look at in Hong Kong as well, there are also many different Bitcoin-related funds that's pushing. So the government is listening, and the government will eventually make a big push for Bitcoin. Bitcoin maybe even as an institutional a credit, or Bitcoin as one of the core reserve asset. That is already happening. It's not a U.S. thing, just to be really exact, on that. Yeah.
And Andy, I know you've spoken with governments across the Asian continent. I want to hear more about what those conversations have looked like. And so I think in particular, I want to better understand how Bitcoin adoption in Hong Kong versus mainland China looks. Can you tell our audience at home how they can think about the difference between those two markets?
Sure. So just a little bit of history, right? Right in the beginning when I started this whole journey, everyone was just looking at me, Andy, are you a scammer? I said, what are you talking about? What Bitcoin? But if you fast forward to today's context, everybody is very receptive, right? So if you're in Hong Kong is very pro-institutional adoption, right? They push for institutions to come in. They make sure that they are in a comfortable position. They adopt them, right? China is different because China has banned cryptocurrency, right? Bitcoin as well, mining as well. So most of the activities, if you are talking about, China, Greater China, most of it are in Hong Kong right now. So Hong Kong is a hotspot for Bitcoin. But again, if all the friends here will be talking about, maybe Singapore too, right? But Singapore is a bit more conservative, right? If you can hear CZ's conversation just now, he mentioned they are more conservative because they are looking at this more from a payment perspective, maybe like a payment stablecoin, like what in US is doing, payment stablecoin versus tokenized deposits. These are all very different things. So I think Asia is hitting up, man.
Got it. And I also want to understand a little bit more how you see who the leaders are in the Asian continent. I think they all have different flavors of Bitcoin and crypto adoption. Looking at somewhere like Japan and South Korea, could you tell us a little bit more about that?
My personal take is I think it will be more South Korea, right? Because South Korea, they are more innovative. And then right now, because they are also the kind of the heat map for AI, right? All the chips are made there. I think South Korea would be one of the pioneer and one of the, maybe one of the top guys in Asia.
Absolutely, yeah. I think many Bitcoiners have seen South Korea as a leader in the market. Grace, I know we do have to get going back to the Nakamoto stage, but do you have any final thoughts before we get out of here?
Yes, I saw you brought your brand new book with you today. I would love to hear a little bit more about it.
So the brand new book is Web 4, The Age of Autonomous Intelligence. I think Web 4 is really needed because Web 4 is the more AI-driven blockchain, and it will be a new era. So I really hope that will happen because when that happens, all our transactions will be more on-chain, and that will drive the economy further.
Understood. Well, I do think we need to get going back to the Nakamoto stage here. Andy, thank you for joining us and discussing your book. Grace, any final words?
No, it's great. Thanks so much for joining us. We
Thank
appreciate
you.
listening to you.
Thank
Let's go back to the Nakamoto stage now. Justin Sun and Bonnie Chang on the globalization of Bitcoin.
You look sharp. Good to see you.
Good to see you.
First question, where are we in this Bitcoin cycle? Everybody here wants to know. I want to know.
I think probably everybody wants to know the future of Bitcoin,
Yes.
right? And where it's heading to, and what's gonna happen to my Bitcoin, probably.
Oh, off camera, we were talking about the Q day.
Yeah.
Would you like to elaborate more on that? What is the risk? What should we do? What is actually happening now?
Yes, basically, quantum computing power is been progressing for the last few years, especially when AI start to have super fast developments, which make its way, I think, closer to our daily life since then, you know. So for the last year, Tron, we have been working on quantum resistance mechanism for a year now. And for Q1 and Q2, we released ourselves the Tron quantum resist mechanism and addresses on the testnet already. So you can try it out on the Tron blockchain. And we plan to probably upgrade the whole network to be the first quantum resist major crypto network at the end of the year. And also, of course, I think Bitcoin developers should post, at least in the community, focus on discussion the quantum resist Bitcoin solution now. And because Bitcoin is a very decentralized community, take a very long time for everybody to reach consensus. And there is a lot of players in the ecosystem, like miners, exchange, right? Bitcoin holders, like WBTC, like Wrap Bitcoin holders. Basically, a lot of participants in the space. We just want to make sure like everybody is safe and everybody's money will be migrate to the post-quantum days. And by the way, quantum problems is not limited to Bitcoin. It's also get exposure to JP Morgan, traditional finance bank. So if you have money in any of the traditional banks, they got the same problem. So, so basically, but of course, I think by solving those problems to migrate the whole system to post Q day will make our assets safer and to make the whole ecosystem stronger than ever. So that's why I think short term is a challenge. Short term is some job we need to get done, but long term is a good thing.
So you have a lot of asset in, you know, crypto and Bitcoin, and you're also obsessed with AI. Now, how far away is Q Day? How worried should we be? Because not everybody is that technical.
Yes, I think if we take moderate, you know, assumption for the AI developments, because it's developed like every day, right? So it's gonna be happen in 2 years. But sometimes we might underestimate how fast the AI is making progress. So, so that's why if I'm the founder, so I'm the founder for Tron, right? So I can have some influence on Tron community and the developers on Tron. So I advise them to get it finished this year, because I think we should be safe this year, but next year, 70%, you know, in 2 years, 50%. But if you have, like me, I have my 100%, my assets is all on crypto. So, so I wouldn't bet on even 80%. So I want 100% safe. So that's why we're gonna launch it on Q4. And hopefully it will be successful, and every other blockchain can follow our plan. So can all the major blockchain, I think next year, can be migrated to quantum resist model, right? And then, like, whatever happens, 2028, we won't even need to worry about it.
Earlier, you mentioned JP Morgan and traditional finance. They're facing the same problem. Why aren't people talking about it? Why are people worried about Bitcoin network? Why aren't people talking about the network JP Morgan creates?
Yes, the reason is very simple because Bitcoin is kind of the currency based on math, right? So if Bitcoin get cracked, lots of people gonna lose their money, and because it's a global currency, right, it's gonna be everywhere. But for JP Morgan, it's a traditional financial institution, and if anyone's balance on JP Morgan is losing, they just calling on the cops and said, we don't know like why, but somebody just steal like $100K US from the JP Morgan bank, It might sound cool, right? When you into the police station, some of it is stealing, the money just by people not paying attention to the money. But you say I steal the money just by doing, quantum mechanism computing system or something. But I mean, I don't think police will, release you just because of that.
Off camera, again, backstage, we were talking about your passion towards learning more technology, and I was asking you what makes you happy now after achieving such financial success. Could you share more?
Yeah, sure. So we talk a little bit about my daily life and what, besides work, what I do. So recently, I have been developed on a very interesting software and a website called BAI. The website is very simple, just called B.AI. And what I do the most is just talk to AI about everything about myself, and we just figure out some project needs to do. So recently, I just talked with my AI and eventually decided to do a small surgery about myself. And it actually got validated by the doctor when I share all the documents and tell him like why I need this surgery, And the doctor was impressive, and he said like, you must talk to the AI to have this conclusion, right? Because most of the patients, when they go into the hospital, they basically complain about the symptom, right? The patient will just complain about, I have headache today, I'm not feeling well today, there is, I believe might be 1% of the patient come to the hospital directly ask, I need PSD test tomorrow and I need to arrange this kind of the surgery tomorrow, and the doctor later on verify those information and verify on those data and approve those data, right? So that's very interesting, and I think it might be some future in the sometime in the future. There will be a AI platform. Everybody can do what I do, right? So to diagnose yourself and then get validated by the doctor later and improve your health and the quality of your life.
I just want to thank you for being here. Since you're talking about this, upcoming surgery, Justin 几天之后要开刀还是来了 and support Bitcoin conference. So thank you.
Yes.
You had a post recently, or was it was it last year? It was all in AI, but then you said 100% of your assets are in digital assets. Yes. So which one is true?
So first of all, yeah, my 100% my assets is on crypto, but as we know, we have super diversified the crypto asset class, right? Today we have all the U.S. stocks you can trading on HTX platform, and you have all the different class of the assets. You can all use blockchain to get access. So that's why I think, you know, in the future, people will only need blockchain, right? They don't need traditional finance anymore. And that's what I see. This is the direction we are going.
We're going to talk more on Bitcoin. Do you think Clarity Act, which might happen on the 15th of September, that's a very important date, do you think that will be the next, you know, catalyst for Bitcoin?
Yes, so for those of you who don't know Clarity Act, right? Clarity Act is just like the name, Clarity Act. For those people or traditional finance or any merchant or people are very conservative, they have no idea about what's crypto and what kind of the exposure I need to get with crypto and what's the risk profile of crypto. Clarity Act is the answer, right? So after, I assume after the Clarity Act, lots of people will get into this industry. It will mean a better, I think, industry, but more competition for the industry builder, because more and more people will get into the crypto industry. For example, overnight, we might have 1,000 stablecoin issuers, right, start to issue their stablecoin, which, you know, we only have probably, you know, 50 or something today. So, so we will see more and more participants in the space, but I think it's a good thing.
Is that a good thing for Tron?
If we doing our work hard enough, yes.
Right, so raising a lot of competitions, but the crypto industry welcomes Clarity Act. Can you explain the rationale behind that?
Yeah, I think first of all, the Clarity Act will make sure a lot of people get into the industry with certainty, right? So they don't need to have the uncertainty we have when I joined the industry, right, in 2012. You know, people all talking about, you know, Bitcoin is money for hackers, you know. Other people won't use Bitcoin, you know. If you are using Bitcoin, you must be a hacker. This type of the idea. And after, you know, almost 14 years later, right, we're gonna have Clarity Act, and Bitcoin gonna be something used by people every day. But of course, on the other hand, the builder is gonna be everywhere, right? So the opportunity will be everywhere. So so I think you need to be work harder and to be more focused on what's new happens on the industry every day to continue succeed after the Clarity Act.
This is the builder's mindset. I need to stand in the investor's shoe and ask you about 4-year cycle. Where do you think the bottom is? What are we expecting moving forward?
Yeah, I think 4-year cycle still exists, but not will not be that obvious. The reason is because the Bitcoin halving, the number is just become irrelevant, right? So before before the crypto market is driven by Bitcoin, I have been into those days. Bitcoin is the only currency matters. Even we have other altcoins, but Bitcoin is the only one matters. And of course, the production of Bitcoin basically decided on the price, right? So that's why we start to have this kind of the 4-year cycle. But now I think the Bitcoin production number start to become very small. It's kind of irrelevant. And also, Bitcoin is not the dominant currency anymore. People use stablecoin for trading not only crypto today, but also trading U.S. stock futures, right? To trade on all different kinds of the derivatives like markets today. So that's why I don't think Bitcoin price or the Bitcoin numbers or the basically the 4-year cycle matter that much anymore. But that I think is also a good thing because our industry continue to grow and become bigger and bigger. Even like Bitcoin, right, become like a very important collateral in the industry, right? Some people just use Bitcoin like using gold, right, to do collateral in the DeFi system or in the CEX system, try to trade, which Bitcoin still play a very important role in the ecosystem.
So can I understand it as the payments should be done by stablecoins, but Bitcoin has another role?
Exactly. So I think one of the best case is I recently read analyst report says Tron is performed the best price in terms of the this kind of the best portfolio, Bitcoin, Ethereum, Solana, Tron portfolio. I think one of the reasons is because Tron is highly related to daily stablecoin payments. We have 50% of the stablecoin payment market share, and the majority of the performance of the Tron is of course related to this activity. Bitcoin price goes down around 60% since last year, and Tron price is even going up, right? So the reason is because the stablecoin on Tron is just keep growing. We just reached to $94 billion last week. And I believe we will definitely surpass $100 billion this year. And this kind of the usage, I think, is the reason driving the Tron network continue to grow in the market.
Do you still believe in debasement trade and the scarcity of Bitcoin after, stablecoin having so many utilities? What is the value of Bitcoin now?
Yes, I still see Bitcoin as like a gold in the crypto industry. Storage of value. I don't want to scale Bitcoin because I think it's gonna be too much, right?
As in scale your portfolio?
No,
Okay.
just the scale of the blockchain.
I see,
Yeah,
okay.
yeah. So the portfolio should be fine because I think still lots of people will just see Bitcoin as a gold and put their money into Bitcoin, right? But for us, like Tron, we basically want to scale our network to make it, quantum resistant, and developers can build their stablecoin. We not only we see USDT, USDD as the leading stablecoin today on Tron. I think for the next 5 years, 10 years, government will issue their real currency, the government fiat on Tron as well, So we want to make sure every government in the world and every regulator, every central bank in the world, when they use our network, they will feel safe, and they will know it's decentralized and no one in the world can control the network. So I think that's the goal we try to achieve here, and also to make sure eventually every financial product will be on blockchain in the future.
So only a little over 1% of Bitcoin's total supply is represented in DeFi. If I compare that to gold, let's say, in India, 12% of the gold is used for lending. Why is there such a big gap in number?
Sure. So I advise one of the biggest DeFi Bitcoin project called WBTC. We occupy around 70% of the DeFi collateral markets right now. I believe AI will increase the percentage in the future because at the end of the day, Bitcoin is a currency of algorithm, right? It's easy to understand for AI and easy to get trust from AI. So if I'm an AI, right, I won't believe JP Morgan coin just because the coin is called JP Morgan, JP Morgan don't have any credibility on AI, so, but Bitcoin might have credibility because I can check on why Bitcoin is decentralized, why Bitcoin is trustworthy, and where I can find the volume of Bitcoin, holder of Bitcoin, and why Bitcoin is decentralized, and if I use Bitcoin, I will be protected. So I think that will be the thing, AI will matters, right? Because right now we only have around 8 billion people on Earth, right? But with powered by AI, we might have 10 billion agents like very soon, and even half of the work is done by agent or AI, right? So we are doing BAI 4 months ago. When we started, the token consumption is like 15 million token consumption a day. The first day we're doing it. But now we are already passing $1 trillion token per day consumption. So the increase is dramatic, and I think it has really real life impact as well, right? Just as the surgery story I shared with you, and the doctor was kind of like impressive because that's the first time he see the patient with the solution show up on the same day.
Before we wrap up, you went to space, and I think that's an experience worth sharing. What changed after the trip? How did that change your life?
Yes, somebody is saying I'm become a little bit silent because of people after they go into the space, they have this kind of the 总观效应 is like very popular on Douyin if you check on these words. But for me, I think the most thing I learned from going to the space is actually there's nothing we cannot achieve in our life, right? Because no matter how big it is, it just happened on this little blue dot, right? So if we live on Earth, we can give ourselves some confidence. We can eventually do anything we want if we are really trying to do that.
Does that not make you feel like nothing matters because we're so small?
It's make me feel it even matters more because if we are so small, we need to get on to be big in the future.
Ladies and gentlemen, Justin Sun, thank you.
Thank you.
Should we take a selfie?
Every year, this community comes together to celebrate, to debate, to build what comes next. And every year, the stage gets bigger. Sound money, center stage. So, where do you go to celebrate the next chapter in Bitcoin history? You come home. Nashville, July 2027.
And better answers from the biggest names in Bitcoin.
This is BMTV. I'm Grace Remington.
And I'm Sean Hagan.
Bringing you market insights you can't find anywhere else. We'll see you weekday mornings at 9:30 Eastern on Bitcoin Magazine TV.
Hello, everybody, and thank you so much for being an amazing audience so far. We've come to the end of our first day of day one right here at the Nakamoto stage. To conclude, we have one final panel discussion titled Bitcoin at the Crossroads of AI, Tokenization, and Other Emerging Trends. Please welcome me and joining in the CEO of Panoni, Sunny Ng, the CEO of BitGet, Gracy Chen, the founding partner and commercial officer of BIT, Cynthia Wu, and the CEO of Aurelian, Frank Zhang.
All right, thanks.
Hi everyone. Good afternoon. This is Sunny, CEO of P News, which is the biggest Chinese Web3 media. And then today we are here to discuss about where Bitcoin meets emerging trends like AI and tokenization. To start with, maybe we can give a little bit intro about yourself and also your company. Yeah, start with great.
Hi,
Cynthia.
good afternoon. I'm Cynthia Wu, founding partner and chief commercial officer of BIT. So BIT has established in 2019. We focus on digital asset management as well as brokerage. And also this year we evolved into a multi-asset platform, also providing US stock trading as well as private credit offerings. Nice to meet you.
Hi everyone, I'm CEO of BitGet. BitGet is one of the largest crypto exchanges in the world. We are top 4 or 5 on the trading volume. I joined BitGet in 2022, 1 week before Luna collapsed. So that was a tragic time in 2022 when we, experienced the bear market. A lot of people lost a lot of money because of UST and Luna. And then later of the year, there's FTX collapse. So I've been with the company entering and enjoying both bear market and bull market. So we've been together building a lot of things. And I also think bear market is a golden window for growth and for building. So if right now is a bear market, I'm still very confident that we will continue building, and we are continue building, and hopefully we will come back as a stronger industry.
Hi everyone, I'm Frank, and I'm the CEO of Aurelian, a Nasdaq-listed company. So we are traditionally a gold treasury company. Now we are transforming to a productive gold company. So we are the risk and credit layer for hard assets, Bitcoin, XAUT, and we turn the store value into spending credit.
Okay, so let's start. So in this cycle, we see the Bitcoin's performance has lagged behind tech stocks and AI-related equities. So at a certain point, it even felt to outperform traditional assets like gold. So what do you, from your perspective, what are the core reasons for that? Maybe start with Cynthia.
Sure. Thanks for the question. So I think this year there's 2 main narratives driving the market. The first one is AI. AI is really strong. So if you look at the aggregate capex that goes into the various supply chain of AI, from the foundry to chips to memory to optical interconnect to PCB, there's totally around 900 billion US dollar worth of capex going into the supply chain. Therefore, you are saying if they force into any of the sector along the supply chain, actually the stocks are all performing very well. And the profit margins are all between like 50, 60, 70, 80%, right? So this is quite rare in the financial markets, and it's rare from any industries. So there is definitely a suction effect of AI absorbing a lot of capital into the productivity boom, and Bitcoin therefore is kind of lagging behind, which I think is normal. The second narrative really is weakening of US dollar. We're seeing the increasing growth of the US public debt is now reaching 40 trillion, and that's already surpassed US GDP. And because of this, people has a real worry that whether this is all sustainable. And because of the concern, people has a doubt on the whether US dollar can still hold its value. Therefore, gold's recent performance has been really good. It's largely because of this, I guess, asset, like as a hedge asset. But as of today, you might ask, right? Bitcoin is also a hedge asset. Why it has not performed as well as gold? I think we need to put things into perspective. So for US public debt is 40 trillion in size. Gold is 30 trillion. And Bitcoin is only 1% 3.5 trillion, right? So if you really want to play as a primary asset for hedging, we're not quite there yet. We're a contender in that league, but we're not there yet. But given time, maybe after 5-10 years, when we're able to 10 times market value of Bitcoin, then we are at a very different positioning. Then maybe when central public and the private sector thinking of hedging their US dollar risk, will firstly think of Bitcoin, not gold, right? But all that might take time to evolve.
Okay, Gracie.
I think Cynthia has done a very thorough analysis on the market from the higher perspective already, which I totally agree. Just to build on her point, I want to say two things. Number one, for equity, it's actually, like Sunny pointed out, it's AI equity. Although SP 500 also went up a little this year, but it's driven by the top 20-ish AI technology-related stocks. The other 680 other stocks from SP 500 are actually not going up this year in general. For example, consumer service or anything that is not related to AI are not performing very well. I think the AI narrative since the 2022 ChatGPT moment has been a very important narrative. We all experienced some sort of AI. Maybe you use Doubao a lot in China, or you use Claude Codex. And all these large language models are showing the potential of revolutionizing how people work, how people interact, how people live their life. Even I use AI to help me educate my son. So many scenarios for that. But this is a little bit like the dot-com era. I wouldn't say AI has the exact amount of bubble as dot-com bubble in 1999 or 2000. But the concept is similar. Like when the new technology came out, people don't really know the potential and exactly what I can do. Sometimes it may be overpriced, sometimes it may be underpriced. But now I think people are trying to figure out, what is the exact good valuation of all these AI companies. And when that happens, it's natural that they, went up a lot. So that's the first point, like the AI narrative among equity rather than general US equity performing very well. The second point is not really about market condition, it's probably more about an investment mindset, which is from the great investment guru Warren Buffett: be fearful when others are greedy, be greedy when others are fearful. While Bitcoin went down earlier this year to somewhere 60K, even 58K, I think that's when a market become relatively fearful. And actually, if retrospectively, you realize that's the right time to buy rather than to sell or to be just fearful, right? You should be greedy when others are fearful. Although, again, I think 2022 November FTX collapse, that's the most fearful moment within the past 5 years of Bitcoin and all of our industry. Like people thought all those exchanges should be gone. Like nobody will use centralized exchange. We will all go to DeFi or some sort of other solution. But the industry is still here. The major exchanges are still here. So again, since we are here for Bitcoin Asia conference, I think maybe some of our audience are looking for opportunities to purchase Bitcoin or to invest or to trade Bitcoin. Just keep in mind that very simple philosophy from Warren Buffett, but it's easier to say it. It's much harder to really live it.
I would say it's like a business cycle. So every asset has a cycle. It's now, starting from the year, Bitcoin and gold underperformed S&P or equity. But recently, it outperformed. So it just in a few weeks, like Bitcoin pumped up by 30%, and gold price also increased by 20%. So I think that's also highlight the importance of asset allocation. So for each individual and institutions need to allocate certain money or capital into the super sovereign assets, hard assets like like XAU or like Bitcoin. And so that's why we are also holding a lot of XAUT to hedge against the fiat system. And then now we also consider how we can use the, make the usable, like a store value into more usable assets by developing the credit line for against the Bitcoin and the XAUT. Yeah.
So we think about AI has become an absolutely main theme nowadays, right now, right? So within the crypto space, it also changed our behavior. For example, like content generation, like trading strategy, asset management, and also like on-chain behavior. So based on your observation, so what are the noteworthy AI product or strategy which is like can drive to the next space or trend?
Yeah, I think because we're at the blockchain conference, I think I would like to highlight, I think the agentic payment will become really big. Because now we're already deploying an agent for various use of our life, to assist our life. And I think not too long from now, we're going to use agent for us to help us to do payments for our online purchase of product and services. So I look at the e-commerce users, the number of that is 3 billion. So 3 billion population in the world actually is an e-commerce user. Imagine they all deploy one agent to help them to buy things online, right? That will be 3 billion of agents. And it's not hard to imagine that they could be making trillions of dollar worth of payment online. So that additional, and maybe with stablecoin, right? So maybe the means of payment is stablecoin. So that is going to greatly increase the transaction volume and size on chain. So I think that's one thing that's really worth looking forward to. The second thing is that I noticed there's a very interesting project this year called USD AI. What it does essentially is basically it tries to tap into the on-chain capital market, which now we have 300 billion stablecoins sitting online, right, looking for various yield. They try to tap into that to provide yield in a form of their own stablecoin and try to finance the AI build-outs. So they try to finance the new cloud partners when they borrow asset from on-chain to build AI DCs. So I think that's another very interesting phenomenon that we have seen is that our on-chain capital market now become quite sizable, where it can reversely finance off-chain like AI build-out. So I think that's something probably worth noticing.
Gracie.
We, as an exchange, I want to share 2 examples of how we use AI. One is from the company perspective. We have 2,200 employees now. Globally. They come from more than 40 different countries. So earlier this year, I gave an internal talk to everyone. It's basically an all-hands meeting that we host every quarter that I speak about our strategy. So in one of those meetings, I told everyone, you need to use AI. And you need to use the best AI large language model. Because if you don't do that, you will easily be replaced. While doing that, you need to know how to collaborate with AI. In my vision, silicon-based life, which is AI, and carbon-based life, which is us, human beings, really need to work together because that is the future of how company structure or employment should like. AI can easily do a lot of things, such as any iterating of your work or tedious work or doing research, etc. But I still need the carbon-based human being to make good judgment, to decide whether your AI agent gives you the correct answer or not. Because AI also makes a lot of mistakes, even the best top AI like Fable 5. So human needs to, make good decision, and human also need to do more leadership, interaction with other human beings, also vision, see something that AI cannot see. I think that's very key for me and for Biget employees to understand the future of work and how to stay competitive given AI is part of the workforce already. Secondly is what we do for our users. So as an exchange, we have 120 million users, which does about a 10 billion daily trading volume. By the way, although we were mainly a crypto exchange, at its peak, 40% of my total volume comes from non-crypto assets, which are tokenized gold and silver commodities and tokenized equity, which is a huge trend. I think all the centralized exchanges or even decentralized exchanges are trying to capture. That set aside, we are also observing our users started to use AI, not just for chatbots, not just to help them do some research, but also on execution. Cynthia mentioned that there will be some agentic payment. I also think there will be more agentic trading, which is happening already. Although it's still small in number, but given some of our institutional clients who exist already, they use high frequency trading tools, and that's some sort of AI or machine learning already. And I think that's also becoming more and more. And then I've heard of, for example, Claude, Anthropic. They are also working on certain sectors such as finance or healthcare to see how to use their AI agent to change the industry.
Frank?
I think building upon what Cynthia mentioned about agentic payment, I have a slightly different view. In the short to medium term, I think agentic payment doesn't need a new network, but need a new money. So people can use the crypto to do the settlement instead of using the blockchain to transfer money. Because we need to build something up on the shoulder of the giants. So then we use this as an infrastructure to build the tools. So I think crypto card is one of the immediate products that can go to the market. So suppose you are using a software or you are using the agent to help you do the agentic payment. You kind of set the limit. You kind of set the category. You kind of set the yes or no for each attempt. So this is not a blockchain problem, but a risk management problem. So building upon that, I think the crypto card is one of the best format for the agentic payment, as a Visa and Master already very strong in the payment network. So they are also adopting the stable coin like USDC or USDT as a settlement currency. So when we're designing the credit system, we also try to design the credit system on top of the Visa and Master by giving the credit to those high quality assets like Bitcoin or Tether Gold.
Okay, so would AI become an accelerator for mass Bitcoin adoption?
I think so. So we talk about agentic AI. They need a new layer for settlement. I think a lot of companies is trying to be that gateway. Like Coinbase has launched their X402 protocol, and Google as well. But also, I think Bitcoin Lightning Network could also be a very strong contender in that settlement layer competition.
Okay, Frank, do you want to add on?
I think AI will be quite useful for the adoption of the Bitcoin, especially in those developing countries. Yeah.
Okay, so this year we have clearly felt the accelerating rollout of tokenization and various Bitcoin-related tokenized products, such as like Bitcoin ETFs, right? So But compared with the broader tokenization market, most of those products remain relatively limited in scale. So where do you see the primary reason? And then like what key condition, for example, like technology, like regulation, liquidity, or user awareness are still needed to achieve a true breakthrough in scaling?
Yeah, I think that's what the question is, why that Bitcoin, wrapped Bitcoin has not really take off.
Yes, not in that big scaling. Yeah.
Okay. I think that's because people has voted their preferred wrapper as Bitcoin ETF. Because ETFs has been, like this morning we're at another panel, we discussed how successful Bitcoin spot ETF has been, right? In comparison with their peers in the history, in comparison with gold and silver and other like crude oil, it's one of the most successful ETF launch in history. And why that is the case? Because there's a lot of benefit it's bringing to the institutions and retail to access to this unique asset class. First is easy access. You can access with any broker that banks you currently use. No change of no need to open your account. Second is that you don't need to worry about the custody, which is one of the headache for some new users to get access to digital asset. You just use you basically just use custodian choice by that ETF issuer. Third is that taxation and audits. These were the issues, challenges when institutions come into allocating into Bitcoin. This was also taken care of by the ETFs because it's a security. So I think the market has really overwhelmingly chosen ETF as a preferred wrapper of Bitcoin. So the second question is that what we can do to make the real Bitcoin wrapping work.
Yeah, or like we can think bigger, how we can maybe increase the scale or market share about the BTC, like ETF, something like that, or tokenized products.
I think probably because there's two types of users in Bitcoin. One type of user, they just want price exposure. They just want capital efficiency. So ETF is already a perfect answer for them. The other type of user are like the hodlers, and they care about self-custody. They care about directly owning the underlying asset. They trust no one. They don't trust any wrapper. So for them, they'd rather hold the asset rather than go for the yield, right? So I think that's probably explains why it's in a very narrow area, that's a narrow space where Bitcoin wrappers is trying to grow itself into. But still, I think things could potentially change, right? If there's regulated Bitcoin, wrapped Bitcoin, which is using, I guess, qualified custodian, and also there's enhanced liquidity of the wrapped Bitcoin on chain, and there's a usage to provide Bitcoin yield. I think if we can do that over time, then potentially this small space will grow bigger. Yeah.
Okay, Gracy.
For me, I wouldn't really categorize Bitcoin ETF as part of tokenization. To me, Bitcoin ETF is more changing Bitcoin to ETF, which is a TradFi assets. Basically, give Bitcoin exposure to those TradFi users or like endowment funds, sort of big institutions that they don't feel comfortable self-custodying Bitcoin, and they only feel comfortable because SEC approved the ETF, and then they can, maybe their mandate only allows them to invest in ETF rather than Bitcoin directly. However, tokenization is the other way. It's more about bringing TradFi assets to on-chain or to the crypto world, where users can use stablecoin such as USDT and USDC to purchase equities or purchase gold and silver commodities and many other assets. Even for example, we did some pre-IPO stocks. So these two things are very different for me. But if you are asking how can we increase the tokenization penetration, I thought that's the question, roughly.
Yeah, feel free to, yeah.
Okay, I'll just take that. That would be a lot about, I think technology is now the main thing. Regulation is the main thing, especially regulators such as the US SEC, CFTC, like how do they, especially SEC, like SEC mainly regulating the equity sort of tokenization. But you've already seen NYSE and NASDAQ, these two top equity, US equity exchanges, they are also looking for tokenization solutions. They've already announced that December this year, they will extend their trading hours to 23/5, which I think their ultimate goal is 24/7, just like the crypto market. And I've also chatted with the higher executives from NYSE and NASDAQ. They are also looking for partners to help them distributing their tokenized assets. But right now, what they need is, by the way, they have the partners already somewhere, someone like us. We are happy to help from technology and from distribution perspective. They also know how to kind of structure the whole thing because they want to base that on their existing DTCC and ATS sort of system. They don't want to go out of the TradFi system, but they need SEC approval, and that's the main thing they are waiting for. So I think the tokenization will be having a much better mass adoption maybe later next year or even later when the big giant existing TradFi exchanges or platforms like them started to also tokenize their assets. And I think that's going to happen.
Okay, thank you, Frank.
I think the two very important success factor for tokenization is the liquidity and the utility. So, and then they need each other. The better liquidity, then the better adoption and utility. The better utility, then you get more liquidity. So with any projects that want to do the tokenization need to consider these two very importantly. How can you liquidate and sell the tokenized assets on Sunday, right? And what can people do with the assets? Can they just hold it? Can they earn yield? Can they use as a collateral? Can they be listed in different centralized exchange or DEX? I think that's that's a framework for each RWA projects or tokenization project to think about.
All right. So yeah, I think time's up. And then thank you for the insights. And then thank you, everyone.
Thank you.
Thank you.
Welcome back into the live news desk here at Bitcoin Asia 2026. I'm Grace Remington, now joined by Chris Cedar, CEO and co-founder of Bitsurance, Isaiah Austin, our social media czar here at Bitcoin Magazine, and Rockstar, everybody's favorite uncle. Well, fellas, we got day one in the books. High energy here, thousands in attendance. Rockstar, start us off. How we feeling after day one?
I mean, I feel fantastic. It's so amazing to see all this crowd and how excited people are for the Bitcoin conference in Hong Kong. Honestly, like traveling around the world for the conferences, like I love a lot of cities, but Hong Kong, I gotta say it now, like it's my favorite. And yeah.
Yeah, I second that point. I absolutely love it here. This is my second year coming to this conference, but you know, I think I speak for all of us that this bear market has not been easy. There's been a lot of these catalyst events that have happened. But it sort of feels like here that, you know, the price is starting to recover, enthusiasm is starting to grow. It's really a breath of fresh air to be around Bitcoiners in person, excited about the moment that we're in.
Go ahead, Chris.
Yeah, this is my first time at Bitcoin Hong Kong Asia. Like I used to live here 15 years ago, and it's so much has changed. Like I lived in Guangzhou, and I had to do my visa run every 3 months to Hong Kong, and it's amazing to meet so many Asian Bitcoin enthusiasts here. Not just Asia, like a lot of people flew all over the world to come here. I had like a cramped 11-hour flight, but it was well worth the trip.
Mm-hmm. Well, what was it? Like 20 hours for us.
Oh, wow.
Coming from California. Yeah. But it was well worth it, I think we can say. But that you have such a unique perspective, actually, both of you guys, because you've been here 3 years in a row. It's your first time back in 15 years. What's the biggest change you've noticed?
I mean, like the amount of people excited about Bitcoin, like I've not had this on my radar. Like this is a whole different community. Like we are in this Twitter bubble. Like I went around the conference today with a cameraman and asked like 100 people, have you heard about Bitcoin knots? Nobody has heard about Bitcoin knots in Hong Kong. So that's a discussion localized, very small on Twitter, and Bitcoin is so much bigger. That's my learning.
And Rockstar, you've been in the space since 2012. This is your third Hong Kong conference in a row. What keeps you coming back to these?
I mean, with Hong Kong, every year, honestly, it's getting better and better. And this year, I think maybe the big point was also like this card area with Pokemon trading cards. Like, there are a lot of people who came for that, and then they were like, Bitcoin conference is extra. And then CZ showing up and Justin, they had like a lot of big fan base. So it's just for me exciting to be here and see like how many people are joining us. And as you said, Isaiah, like after this bear market, like I hope we finally make a good run.
Chris, I'm curious because you had your game show today. Who wants to be a Satoshi millionaire? Of these two guys right here, who do you think would win?
So, I mean, we even had Rockstar on as a contestant. He was up there, and I think you made 20th place. Like, you wanted to become 21st?
22nd.
22nd, like, yeah, this close to greatness. It was amazing. Like, I've done this quiz show many times at many conferences, last time at Bitcoin Amsterdam. And I have to say, the calculus part, the mathematics part, this was like the highest audience score I've ever seen.
Okay.
Bullish. It's a very technical crowd here. And yeah, it was great fun. So, but I would say like Rockstar, like he would have the edge over Isaiah.
Hey, I'll give it to him.
Come on, Isaiah.
He's been in this space a lot longer than me, so.
That's fair. That's fair. All right. Well, you mentioned some of the names we saw today, Justin Sun, CZ, lots of headliners tomorrow. The boss man, David Bailey, he'll be talking. Tyler Evans is here. Plenty of big names. Isaiah, what are you looking forward to tomorrow?
Well, I'm looking forward to running back the exact same energy that we had today. I do think that there's going to be a lot of FOMO after this event. I think people are seeing the energy here, seeing the speakers that are coming. I saw British Hodl a couple of hours ago.
Oh my God.
He flew out to be here to hop on the live desk and to talk to all the attendees and walk around the floor because he had so much FOMO. And I really think that's the
dedication.
Energy. Exactly. And I think we're going to see a lot of that, especially from people around the region. They're going to start hearing about this event, seeing the highlights online. So I expect attendance to grow tomorrow.
And Chris, you're speaking on a panel tomorrow.
Yes,
Can
I
you
think
give
it's
us a
my
little
fourth
preview?
panel. I've prepared for it, definitely. Now the panel is titled Beyond Self-Custody, and I think one of those things that we learned the hard way through the cold card incident and then the BTC Pay server incident and like now Core Lightning, AI is here, the bar has been lowered, script kiddies with the Frontier AI model can like run rampant, and it's much easier right now to attack than to defend. And are there pieces of the puzzle that we have to come up? How do we improve UX that more people use multi-sig, multi-vendor, multi-sig? The things that we know of right now are the most secure way to store your Bitcoin in self-custody. And there is so much that needs to be done, and there are so many people right here that build this very ecosystem.
And I want to jump in with one very important point, which is, there are these exploits in FOSS and Bitcoin that are public. There have been tons of exploits, and a lot of money was stolen from banks, from exchanges. It's just that it wasn't made public because their legal teams, PR teams are working on how do they release it. And then a lot of money is being replaced within the fiat system. Just new dollars have been printed.
Yeah, great point.
Yeah.
Did you have something to add?
No, I mean, it's a great point. I mean, it seems from an optics perspective that Bitcoin is the one being exploited right now. But Bitcoin, it like you said, Rockstar, it's because we can see these things publicly. It's open source, So like, I totally expect, we're going to see similar things happening, whether it's public or not, in the banking sector too.
I mean, it's already happened.
Exactly.
It's hundreds of millions of dollars, like I know in the last month, that is not disclosed. So.
Yeah. So it's going to be a big problem. AI is here to say, like you said, Chris, and it's going to need to be an ongoing conversation, but it's not something that is isolated to Bitcoin in any way, shape, or form.
Yeah, and I always approach it from my perspective is like, what would Nikolaus Hoffman do?
I think about that with everything.
I think we all ask ourselves that at random points throughout the day. Very necessary question. Okay, let's end on a positive note. How bullish are we feeling heading into tomorrow?
10 out of 10.
Yeah, 11 out of 10.
21 out of 21.
Yeah.
We are this close to a bull market, right? We have been this close to a bull market for 1.5 years now, I think, and we have way too many sacrificial lambs that we've slaughtered. So like we paid our due, and now only number go up,
Yeah, this conference is, I think we will look back at it as the tipping point. The moment at which things were beginning to change for the next major cycle in Bitcoin's adoption and price discovery ultimately.
I can't wait for people to clip this and like the price.
I was about to say, let's go,
like,
not financial advice.
Let's give them both versions. This was the top, yes. We knew, we all knew.
Please, come on. Uncle needs full retirement already, so I can go back to rare shrimp farming to Isaiah. And
I know,
yeah,
real scarce
please,
assets.
Come on, people.
Yeah.
What is the true scarcity? Rare shrimp or Bitcoin?
Rare uncles.
Okay.
Yeah.
Bolivian or Peruvian?
Serbian.
Okay.
Yeah.
All right. Good call. Okay. Well, that's a wrap on day one. Guys, don't get too crazy tonight because I need you back here tomorrow. Okay. Awesome. All right. Make sure you subscribe to the Bitcoin Magazine YouTube channel so you don't miss us. We're going to be back here live all day long tomorrow morning, kicking off things at 9:15 a.m. local time, 9:15 p.m. Eastern time. Thanks so much for watching. For Chris, Isaiah, and Rockstar, I'm Grace Remington. We'll see you tomorrow.
Peace.